Marcel.
What the fuck's going on, Silverback?
Nothing, you big, beautiful, fuzzy bastard. What's going on with you?
Not much, man. Having a beautiful fucking Friday, hanging out with everybody here. Looking forward to this bit of a hot mess that is the stock market. Jobs report today was pretty much shit. So it's should be a fun day. Got a lot to look forward to.
Hey, do you guys think that NSCC 003 could have given them some flexibility today?
If they're desperate enough to chase after a brand new form of liquidity through an SFT program that took them a year to implement, that was implemented 3 days before the executive order, yeah, sure. I know for sure though. Will it help? Sure.
Bastards, I can't tell you fucking finally.
I'm sure it'll help. Everything will help, you know? Let me turn this music down a little bit, get this shit out of here for you guys. So you can see. Getting chubbed up yet? Fucking Martin. Isn't it beautiful? That's something else, dude. What's going on, everybody? We're going to be checking out, well, seeing what happens with our executive order. That executive order 13959 takes into effect today. 13959 goes into effect today. Chinese military industrial complex companies. Executive order 13959 takes into effect today. Hey, Balkan Style, I'm going to server mute you, brother. Do me a favor and mute yourself so I can unmute you. Thank you kindly. Pause that right there. I want you guys to see this. This was yesterday night. China vows growth stimulus.
Why are Chinese officials, or what exactly are they concerned about here specifically?
Morning, David. Yes, they're basically concerned about a lack of bank lending to property developers. We've seen the PBOC give window guidance for months now for banks to help property developers, but that's not really showing through. We're seeing cash flows from bank loans falling around 30% in recent months, and that's really a big concern. Of course, given the mounting cash crisis, then developers aren't getting cash from home sales because they're plunging. They fell about 59% in May, and of course the offshore bond market has become prohibitively expensive as well. So that's really left it up to the banks to support this ailing sector.
There doesn't seem to be, as you allude to there, at least a massive appetite to take on more debt, which I think takes us into the confidence element really of this recovery, that it's not there. Why are banks not keen to lend to developers? I mean, you look at the credit profile, isn't that the prudent thing to do anyway, to avoid it for now?
Absolutely. I mean, banks seeing property developers understandably as a big risk right now. We've seen more than a dozen developers default on their debts, and so really, banks are looking at from a risk management perspective that developers are not a healthy prospect to lend to, and I think this reflects a broader liquidity trap in China right now. So banks are willing to lend to others, such as home buyers, such as corporates and other sectors, but they're actually not willing to take on the extra debt because they're not confident in the outlook. And on the other hand, you're having these property developers who are desperate for this extra cash, and the banks are just saying, look, no, this is too risky. We have to be very prudent here.
Too risky. Chinese banks no longer want to help the property developers. How many of you are aware that this morning, about 6 or 7 hours ago, Fitch Ratings removed Evergrande from the ratings agencies? Evergrande and all of its subsidiaries have agreed to be removed from the ratings agencies. And the reason that they do this is because this is 2008 version 2.0. Instead of banks making it so that mortgage-backed securities aren't properly priced until they've correctly positioned themselves, you've got real estate developers that have a quid pro quo going on with these banks that hold their bonds and hold their loans. In exchange for them not taking the banks not taking Evergrande to bankruptcy court, Evergrande continues to play this little game with the ratings agencies in order to maintain their bankruptcy fraud status, in which they're not in full default. They're only in restricted default and selected default, according to Fitch and nobody else. Therefore, it's basically making it it's a clear indicator that in the same way that mortgage-backed securities were complete dog shit in 2008, that Evergrande and the real estate developers are complete dog shit today to a much higher extent. Now, the Securities and Exchange Commission came out with this little fucking gem on their website. And well, basically it says, don't play games with your financial future. Investomania. Learn how you can avoid getting caught up in game-like investing. Say no-go to FOMO. Read our latest Director's Take article to see why it's important to say no to fear of missing out when investing and learn what to focus on instead. It's kind of the point where the Securities and Exchange Commission and the SEC, the DTC, and the NSC are so terrified of new investors joining AMC and GameStop that they've come along and begun these campaigns to keep new investors from investing in these stocks that they've so lovingly given the title of quote-unquote meme stocks as an effort to dissuade the average person from buying into them, to make people think that these stocks are owned by, a bunch of kids and students and college students living in their parents' fucking basement. But guess what? I'm not a fucking college student. All right, I'm a full-grown man. I'm a full-grown adult that owns businesses in his own home and properties. And I'm sure many of you are the same as well, and some of you have been investing for a long, long time. That being said, nobody knows exactly what's going to happen today or Monday, but I do know that Executive Order 13959 goes into effect today. And that forced Chinese military industrial companies off of American exchanges in the sense that they remain tradable from U.S. persons to non-U.S. persons. Actually, I digress. Yes, that part is correct. I believe U.S. persons can trade them to non-U.S. persons. But why would the Chinese military-industrial complex, which has already forced all of its Chinese officers and their spouses and children to divest themselves of American holdings, why would they buy this shit from American banks? They won't. Not until it's lost the majority of its value, at the least. And one thing I'd wanted to address is I should have put 13959 and 14032 here on this so that people don't get confused. However, people keep saying, oh, why do I think that these are going to make a difference if these banks and market makers had a year to prepare? Well, because we know that BlackRock only sold $370 million worth of the billions of dollars worth of securities that they have. Because I checked. And if you don't believe me, go check for yourself. Go check all their most recent filings. So it's not that the executive order is... Some people think the executive order is too obvious and too known. You know, June 2nd, we had $200 million in dark pool prints. And that's a lot. It's a huge number of trades and prints there. But it's not that the government is telling us or that Ken Griffin is telling us. You know, this is not something that's going to come true and we're not supposed to know about. The government has an obligation, a constitutional requirement. They are legally obligated to advise us of all changes to the laws, to advise us of all changes to sanctions to both U.S. and non-U.S. persons so that we can make the correct financial decisions in order to invest or divest themselves. That being said, Gabe Plotkin and Ken Griffin never fucking thought we'd be smart enough to figure it out. This doesn't mean that AMC and GameStop and all the other meme stocks are going to go to the moon today. I'm sorry. That's probably not what it fucking means. But in my opinion, my non-financial advisor opinion, it's the beginning of something huge. These things take time to play out. So don't be surprised if you don't see what you believe in your mind to be the moon today. Because as much as we'd all love that, that's really asking a lot out of one fucking day, isn't it? I'll tell you what I do see, though. In alphabetical order. Check it out. AMC, as of Thursday. We'll pull up the new data right now. 23.13% Ortex estimated current short interest of the free float. Now remember, that's just reported data, and that's Ortex's estimates. The cost to borrow average is around 11.69%, and the max is at 19.83. Let me switch this up here so you can see a little bit better. Yeah, Jay, FTD timing is also T plus 35 data. So 35 days from now, we would also be seeing additional share price movement. So people don't realize that a lot of the trading that takes place today is T plus 35 data. That means that it's going to take 35 days for that price action of failures to deliver being returned to show up on the stock market. In addition, there's also T plus 2 data, which means that 2 days after the trading occurred, then you start to see the price action that happens from things like trading of swaps and ISDA contracts and so on, for the best of my knowledge. Thank you. Yep, I'm having some iced coffee right now in the old Scat Pack mug. Gotta love it. Now, don't be surprised to see a retracement in these stocks. Don't be surprised to see a market crash if it does happen, either before, during, or after. Now, we moved on from AMC over to BBIG. We're going alphabetical order. Current short interest of BBIG is 17.86%. Cost to borrow average, 253 fucking percent, with a cost to borrow max at 301%. The minimum is at 219% for BBIG. Now that's bullish. BIOR, Biora Therapeutics, right, Martin? Formerly known as Progenity, PROG. Some of you may know PROG, Progenity. Current short interest of the free float estimate is at 14.27%. Cost to borrow minimum is 165%. The average is 231%. And the cost to borrow max is 261% right now for Biora Therapeutics, which is formerly known as Progenity, PROG. Now you got a new ticker a couple months back. We've got GameStop. Christian, why no rip? Because it's fucking 9:51 a.m. Eastern Standard Time. Like, what do you... At the very least, these things take some time, man. But I don't know. If you can't handle waiting more than 22 minutes, maybe this isn't for you, huh? Maybe this channel's not for you. No offense. Cost to borrow minimum, negative 0.2%. Cost to borrow average, 243% is the average cost to borrow on GameStop as of yesterday on Ortex, with a maximum cost to borrow for GameStop of 288.27%. Now that's fucking bullish. That's definitely fucking bullish if you ask me. I'll pull up the tweets from today here. I don't know if I'll be able to zoom in on that one. I might have to open that one separately for you guys to be able to read it, but that's okay. I'll do that in a minute. Do you guys hear me in the think tank? I don't think they can. I'm going to have to refresh my think tank, which is okay. Give me just one moment while I do that. Mark, can you give me a heads up if you can hear me? Whatever, we're going to let it ride. You know, it's definitely not working right because I'm not getting any sound from it. Just refreshing my screen. This is from the Investomania. Martin, can you guys hear me now?
Yes, sir.
All right, thanks. Yeah, Discord was acted up. This is my from Investomania. It was the Securities and Exchange Commission's video that was very disparaging to retail investors, basically. And it looks like apes have turned it around. Looks like apes have turned it around and are basically making fun of the SEC's desperation to keep people out of meme stocks. Meme stocks. I better research that shit. And basically, she says, so the apes own the float and won't let the short sellers close their positions. So in the meantime, while they patiently wait for MOAS, they went and bought a gold mine. Damn, hedgies are fucked. No kidding. AMC short interest is at an all-time high. I wonder why they would think that. I'd be worried too if I was the DTC. I have a feeling we're going to be getting a call from our broker desperate to buy our shares. I know that some people, including Cash Money and others in the Discord here, have been approached by Charles Schwab and other brokers in the last few days asking them to sell them their shares. The majority of people told them to fuck off. At least everybody I know did. This is the historical data. You know what? Let's just go to it. Let's go to the historical data on YouTube. But you know what? I'll show it to you here because I've marked up this document already. And it makes it easier to see. However, so May 27th, 2021, last year, we saw the implementation of Executive Order 13959 on May 27th, 2021. The price of the stock, AMC, opened at $18.61. The high for the day was $29.76. And the close was $26.52. There was 705 million volume traded that day. As of today, there is an all-time high, 175,000 shares on loan for AMC. And in my opinion, that is largely needed in order for the SFT, the new pawn shop rule, NSCC 2022-003, in order for market makers and banks to be able to create a little bit more liquidity. The same way, in a sense, the same way the RRP program, except instead of trading U.S. Treasuries for cash, they're trading, certain entities are trading their assets for cash to close out their positions. So it is a bit of a limiting factor, in my opinion, but it's nothing that I'm overly concerned about because when Marge calls. She doesn't give a shit what Ken Griffin wants. So as you can see, the next day, on May 27th, was the initiation of the 13959 executive order. We closed at $26.52 after opening at 1861 and hitting a high of 29.76. So after closing at 26.52, the day after, we gapped up around $5 and change to $31.81 in pre-market. As you can see, from May 26th, the day before the executive order, we didn't go up. We went from $19.56, and the day the executive order was implemented, May 27, 2021, the price went down about 90 cents or so to $18.61. Today, in my opinion, would be the equivalent for executive order 13959 of May 27th, 2021. June 3rd is the new May 27th. However, that doesn't mean that the stock price will do exactly what it did last year, because every day is different. The market is dynamic. It is ever changing, ebbing and flowing, and you cannot expect history to repeat itself, but it does tend to rhyme on occasion. So as you can see, there was a gap up on the next day. So from the day the executive order was implemented, May 27th, it gapped up about over $5 to May 28th. Then we went from $31.81, hit a peak of $36.72, a low of $24.17 because of heavy shorting. Remember, there's a lot of volatility. The market makers and banks don't just want stocks to go up. They need them to come down in order to maintain some sort of stability and a reduction in implied volatility. Because if the implied volatility gets too out of control, that's just as bad as the price getting out of control for these guys. Because it just means they have to spend more money to buy your fucking call options when they're delta hedging shares and calls against their short positions and margin calls. Now again, I'd like to preface this by saying that I'm not a financial advisor of any sort, and this is not financial advice. Everything I say should be taken with a grain of salt, and you should do your own due diligence. I'm not here to tell you what to do, what to buy, what to sell. I am just simply here to explain to you what I've seen in the past and what I think might possibly happen in the near-term future. Simply for the purposes of educating and entertaining and giving you guys an ability to do your own due diligence. There was a frequently asked questions posted by the United States Treasury, and I can show it to you in my email address if you'd like. I'd be more than happy to. Let me see if I can pull that up. Well, I know I can. Let's put it that way, because I have it right here. And this is a frequently asked questions, and it holds an entire 3 pages. 3 pages. Here is the email that I received from the United States Department of the Treasury, Wednesday, June 1st at 11:01 a.m. It is the publication of Chinese military-industrial complex sanctions related frequently asked questions. The U.S. Department of Treasury sent this bulletin at 6/1/2022, 10:59 a.m. Central Standard Time, Central Daylight Time. Excuse me 1 second. Get that off there. Let's log into my IBKR while I'm at it. These publications of Chinese military industrial complex sanctions. Let me turn off AdBlock Plus, that would help. Weird. there it is. Here's the sanction FAQs. Recently added frequently asked questions. And there are 3. As you can see here, it states clearly, do the prohibitions in Executive Order 13959, as amended, apply to purchases or sales of publicly traded securities of subsidiaries of entities listed on the non-SDN Chinese military industrial companies complex list? Whatever, you get what I'm saying. The prohibitions in this Executive Order 13959, as amended, apply to all subsidiaries of the Chinese military industrial complex companies listed on the NSCMIC list, only if such a subsidiary itself is publicly listed on the NSCMIC list by the Treasury pursuant to Executive Order 13959, as amended, or identified in the annex of Executive Order 13959 as amended, which many people on Twitter and YouTube have failed to read. OFAC's 50% rule does not apply to entities listed solely pursuant to EO 13959 as amended. Accordingly, the prohibitions on any of their subsidiary companies listed on this list would go into effect beginning 12:01 a.m. Eastern Time on the date that is 60 days after such subsidiary is added to the NSCMIC list. What this means is if they add new companies like they did on February 16th, they're 60 days before those companies are added to the CMIC list that is prohibited, because we have now reached the end of the 365-day divestment period that was given by Biden on the extension for Executive Order 13959. And as of today, 12:01 a.m. Eastern Standard Time, or Eastern Daylight Time, I should say, the Executive Order 13959 is in full effect. And there is a list of nearly over 60 Chinese military industrial complex companies that are not going to be valid collateral. What financial instruments are covered by the provision? Stating to the prohibitions. Examples of financial instruments covered by this provision include, but are not limited to, derivatives such as futures, options, swaps, warrants, American depository receipts, global depository receipts, exchange-traded funds, indexes, and more. One thing a lot of people don't know is if an exchange-traded fund holds 1 share of these Chinese military industrial complex companies, the entire ETF is unusable as margin collateral, per my understanding. Somebody in the chat have their mic hot here? I'm getting some feedback. I need to figure out what's going on. Captain, thank you, Barton. You're the best. Does the executive order prohibit U.S. persons from investing in U.S. or foreign funds such as ETFs or other mutual funds that hold publicly traded securities? Yes. Under Executive Order 13959, any purchase or sale of these publicly traded securities or any publicly traded securities that are derivative of such are designed to provide investment exposure to such securities are not going to be valid collateral. So this executive order prohibits all of these mutual funds and exchange-traded funds from being purchased or sold from a U.S. person to another U.S. person or institution for any purposes. So now the 365-day divestment period is over. And so thousands and thousands of exchange-traded funds and indices, well, many indices because there's not that many, are going to be seeing such possible, actions and sanctions. Now, market maker intermediaries may facilitate divestment from publicly traded securities of these Chinese military industrial complex companies, but only to people from other countries, basically. So if a U.S. person wants to sell it to a Chinese person, that's possible. But As we know, the Chinese military-industrial complex is not allowing Chinese officials or their families, spouses, wives, mothers, children, brothers, sisters to purchase American securities or outside Chinese securities, including real estate and stocks. Holy shit, I've got a lot for you guys today. It's going to blow your fucking mind. I'm going to close that out, get that out of here. Excellent. AMC's at 1288. I can live with that. Let's see how the fuck else it goes. Now remember, I don't concern myself with the ticker price on meme stocks at all. You know, GameStop's down 6%, BlackBerry's down 2%, Sundial's down 1.5%. I would be more than happy to see a stock market correction that is well overdue. And that would likely mean that AMC and GameStop, before they go up, they would probably come down. And again, I'm okay with that. I'd be more than happy to watch my VIX calls and SPY puts print out a shitload of money so that I can buy more of my favorite stocks. And we know already that E-Trade, Morgan Stanley, and Fidelity have proven to us that these executive orders, both 14032 and 13959, are a list that are subject to further sanctions. Now, the prohibition's effective date is August 2nd, 2021 for Executive Order 14032, and they published a list of 59 companies. This was restricted by E-Trade effective the August 2nd, 2021 date. However, we've also known from Fidelity that there's Executive Order 13959 and 14032 that kind of work in conjunction, and they've both been working very hard to make sure that this happens. As you can see here, update on Fidelity funds and U.S. sanctions on Chinese military companies. This is from Fidelity. On November 12, 2020, President Trump issued Executive Order 13959, addressing the threat from securities investments that finance communist Chinese military companies. That action prohibited transactions by U.S. persons and certain Chinese companies. On June 3rd, President Biden issued Executive Order 14032. That action amended the previous sanctions related to 13959. The order prohibits the transactions by U.S. persons and CMICs. Fidelity has taken measures designed to ensure that its funds and accounts will not acquire any CMICs in contravention of the order. Fidelity will seek to divest and intends to complete the divestment of any other CMICs, if any, by the applicable divestment deadline under the order. One thing that leaves me wondering about this is that many people are unaware that Americans' personal savings has lost 3/4 of all its value in the last year. In the first quarter of 2021, Americans had over $4 trillion in savings. In the first quarter of this year, that number was $1.15 trillion in savings. 3/4 of all Americans' personal savings is gone, wiped out, due to inflation and a myriad of other factors. Meanwhile, the government says that they've stopped quantitative easing, but as we know from guys like Occupy the Fed movement on Twitter, who have been tallying up the sales of mortgage-backed securities in United States Treasuries for the Federal Reserve, totaled $226.97 billion in asset purchases for the month of May by the Federal Reserve. That's $54 billion more than the Fed's principal payment estimates for that month. So the Fed is still spending $54 billion more than their estimated payment for the month, even though quantitative easing supposedly was to end in March. The reason for this is because the Fed cannot stop printing money. If the Fed stops easing, well, their $9 trillion balance sheet will be practically gone. So it's a fine balancing act here by the Federal Reserve in an attempt to try to curb inflation by using their words. They're trying to get people like you to lose your jobs, people like me to lose their jobs, because that brings down inflation. If we don't have a job, we don't have spending power. We cannot buy more goods and services. This country needs more goods and services and less printing of money. You can print more money, which is what the government's been doing, and that's why we'll reach this inflation point, which is not far from hyperinflation at this rate. But the government cannot print more goods. They cannot print more services. That's where the true bottom, the true issues lie. Now, owning a logistics company, I can assure you that the trucking industry has taken a complete nosedive beginning the month of March. After the first week of March, rates for many lanes have been halved or more than halved because of low demand. The number of truckers has not increased, but the literal demand for trucking has taken a nosedive. And this is the exact same thing we saw in 2008. Ask a trucker. You don't have to take my word for it. Go ask a trucker. I use my Twitter a lot to organize information, share it with people, and then come here to share it with you guys as well. So which is why I keep bouncing around on Twitter, because I purposely post things there that I want to share with you guys here on the stream. All right. My man Ryan Rigg, Ryan_Rigg on Twitter, Wolf of My Street. He says, and it keeps climbing. Ortex now reporting 179.57 million AMC shares on loan, which is 34.84% of the free float. How can they have 34% of the free float, but we know confirmed by the CEO, Adam Aron, that AMC shareholders own 90% of the float? Could it be synthetics? Oh, no fucking shit. No kidding. Days to cover is now 3.48, almost 3.5 days to cover. And the cost to borrow is showing 14.91% all across the board. New exchange reported short interest data will be out next Thursday. Now that's fucking bullish. 14.91% across the board. The minimum, the average, and the max for AMC. That's as of Friday, 7 a.m. this morning, 7 a.m. Eastern Time. This is the most recent available Ortex data. Julie Moonrise says, owned a trucking company 25 years. Boss is absolutely accurate. I know, Julie, and I don't even want to be correct about that stuff. I don't want to tell people how bad our shipping industry is and logistics and supply chain. I don't. But I think it's imperative to actually tell people because we're living it right now. And the only way for people to prepare for it is to know about it. And if somebody that's in the industry doesn't tell you, how are you going to know? Just theoretically speaking. Thank you very much, Ryan, for sharing this. He's one of my fellow brothers here from the Chicagoland area. When this is over, Ryan, we're going to go out and hit the fucking lake together, buddy. Let's go boating. I'll bring my yacht over to you, and we're going to go yachting together. So there's one thing that I don't understand is how the fuck could this executive order be any different from the past? Unless I've got the date wrong, which 14032 may have a different implementation date, but I know that 13959 is implemented today because the United States Treasury FAQ fucking told me. This is an article from January 11th, 2021, from the Financial Times, stating that BlackRock and Vanguard face a heavy burden of U.S. sanctions on China. I'm not going to go into this in depth because I've read this before on the channel other times. Basically, BlackRock and Vanguard face having to offload billions of dollars worth of investments in order to comply with the United States government's decision to blacklist Chinese companies with military connections. Vanguard said Vanguard will fully comply with the executive order and will continue to monitor the situation to ensure ongoing compliance. And they had a massive exposure with multiple exchange-traded funds and mutual funds. AMC's down 4.3%. Oh, wow. This is phenomenal. You know, I'm excited because the S&P's down 1%. AMC's down 4.5%. I wouldn't be surprised to see this thing get beat down all the way to $10. At $10 and change before it actually turns around and starts making a movement. I wouldn't be surprised at all. I'm not saying that's going to happen because with this kind of volatility, no one knows what the fuck's going to happen. This is beyond abnormal. Beyond abnormal, in my opinion, to be seeing this kind of heavy movement. Granted, we did have a terrible... we had a decent jobs report as well. Do you guys know about the jobs report? We were expected to have 318,000 jobs added. We had 390,000 jobs added. Why is the stock market going down? Could it be because Tesla's laying off 10,000 workers? Tesla's laying off 10% of its workforce. They have 100,000 people that work for them. So that means that 10,000 people are going to lose their jobs at Tesla. Per my understanding, again, if you have other information, please drop it in the chat. I'd be more than happy to correct myself and to teach, to show everybody what's going on. Yeah, Space Ape says minimum wage jobs were added. I bet they were. I bet they were. Here's the original 13959 that basically took effect January 28th, but it was extended on January 13th as well by the Biden administration through May 27th. And then at that time, for May 27th, it was extended through, on June 3rd, 2020, it was extended through June 3rd of 2022. And that is today. And that's 14032 right there. And on page 30,146 of 14032, that they say the purchase or sale of publicly traded securities described in subsection A of this section is permitted prior to June 3rd, 2022 at 12:01 a.m. with respect to any persons listed in the annex on this order. So again, it appears as if Executive Order 14032 takes effect today. 13959 takes effect today. Sections 1 through 5 of Executive Order 13959 were amended by Executive Order 13974 on January 13th. And then they were hereby replaced and superseded in their entirety by 14032. I know it can be a little complicated to understand. I am trying to make it as simple as possible. And as you guys know, on February 16th, it hit the Federal Register. The Department of the Treasury's Office of Foreign Assets Control, OFAC, added regulations to implement more companies related to the CMIC and Chinese surveillance. They also published an amendment to the Weapons of Mass Destruction Proliferations to Sanctions Regulations, 31 CFR Part 544 on February 16th, and added another, 10, 20, 25 or so more companies to the sanctions. June 3rd of 2021, AMC was up for the year 2,233% on the one-year chart. June 3rd. Remember, June 3rd was about 5 to 7 days after the May 27th, 2021 implementation of these executive orders. AMC did not hit its all-time high until about 5 to 7 days after the implementation of this executive order in May of 2021. Are you fucking listening? AMC did not hit its all-time high until 5 to 7 days after the May 27th, 2021 executive order implementation. That was June 2nd, 2021, in which AMC hit $77 and change. And again, on June 3rd, Biden gave market makers back their collateral for 365 days. And effective this morning, that shit's gone. BlackRock has over 41 million shares now of AMC. And we may get to see them recall their shares. Take off. Oh, man. Before I keep talking about this, I'm going to jump into my IBKR and take one quick second to do that. Because I need my charts. I'm not huge on charting and technical analysis because these stocks are so just obliterated at the moment. But that doesn't mean that I don't like looking at my charts. That's for damn sure. I still love my my charts and TA. Numbers tell you a lot. Let me get off this screen. You guys don't need to see that shit anyway. It doesn't matter. $179 million shares on loan. Now that's fucking awesome. Cool. Well, I've got so many brokerages, so I'll just use IBKR for now. Since I enjoy my watch lists and I do like their charts, I do think they're pretty good. Let's take a peek at the markets, since I know a lot of you are interested in that. So, guys, what happened to Volkswagen before it ripped? Anybody know? Nobody knows? That's fucking sad.
It fucking tanked.
Oh, I'm sorry. Say it one more time for the people in the back, brother. What happened to Volkswagen before it ran? What happened to dry ships before it ran?
It fucking tanked.
That's right. That's right. Thanks for reminding me.
Did they cover their fucking shares? No, they didn't cover their fucking shares. They're in trouble. They release fucking videos instead of actually going after the fucking problem.
The SEC is releasing cute meme videos, right? Investomania. Holy shit, what a fucking joke. Yeah, that's right. Justin says it plummeted. Bobby says it tanked. That's right. That's exactly what happens. About you.
I don't know about you, but when I see like TA or any bullish thing that we think is bullish, it's great. But when I see them fucking shit in their pants and releasing these goddamn videos, it's the most bullish thing I can ever fucking see.
Now, keep in mind, on June 2nd, I believe AMC's volume was over 700 million. June 2nd, 2021, the day of the all-time high. As of today, so far, we've got a volume of 9.8 million. Doesn't sound like a lot, right? Why? Because of price suppression. ETF rebalancing is in effect. Price suppression is in effect. The market is going down. AMC and GameStop will likely hang out in the exchange-traded funds in which, that are being shorted and that are being sold off. And that will force their prices down because there are shares of our favorite companies in these exchange-traded funds and mutual funds and all sorts of other derivatives, right? Therefore, it's almost an abuse where they're connected with the S&P when the S&P is going down, and then they're disconnected from the S&P when the S&P is going up. But I think it's very possible that within the next several days, we're going to see a disconnect from that and a divergence from that, and we'll see a true negative beta situation kick in. However, that, in my opinion, has not happened. No fucking way. Not with 9.8 million volume, that's for sure. Looking at the markets overall, AMC's down 4.96%. Bank of America's down 0.8%. Citigroup 1.6%. DoorDash is down 4.6. GameStop's down 5.4. Google's down 2.16. Google, Class A, down 2.16%. That's a massive amount of collateral. That is a lot of fucking money for those of you that are unaware. And that's on a volume of 354,000. Granted, they're expensive as hell, $2,300 a share. That's why it's low volume. But that's a lot of institutional trading. And a 2% loss in that is fairly significant. A 2% loss in Google, in my opinion, would be like the equivalent of a 20% loss in AMC. That's a fairly significant movement. Harley Davidson down 3.2. JP Morgan down almost 1%. MMAT 3.7. Lucid Group 5.56% in the red. Cost Group is up 0.83%. Yeah, interesting. Interesting. Take a look at the NASDAQ 100 stock index is down 1.96% here. This thing looks terrible. Terrible. What a gap down. Look at that. That's a massive gap down, dude. Weird. 12,880 all the way down to 12,612 or so. 12,608. Currently sitting out at 12,645. And it looks like we're going for a retest. We've actually got right now, it's trying to decide if we're going to use 12,650 as a support or resistance on the NASDAQ 100 stock index. You can see we're retesting those values from this morning where we hit it, jumped up, fell beneath our resistance, fell beneath our support, jumped up, used it as resistance, fell back down, and then finally broke through. However, now we're looking at a 1-2 double top situation here for the day, in which it has tried to break out once again after using the resistance once more, has crossed underneath the resistance. And if I'm looking at it correctly, that's a motherfucking tombstone. That's a doji tombstone. That are being shorted and that are being sold off. Hey, I'm sorry, buddy. I need you to mute yourself. Thank you very much. Of our favorite companies in these exchange traded funds. Excuse me one second. Somebody else, I got to turn them off real quick.
This is live chat.
Yes, sir. Need you to shut that off, please. Thank you very much, everybody. You're more than welcome to just jump in and speak with me, but please keep yourself muted if you're not speaking, because it does get very distracting for many people watching on YouTube. NDX is now down 1.78% on the day for the NDX 100. AMC's hanging out strong at 12.59. I do suspect it goes a lot further red before anything happens. There must be a sell-off of assets before short positions are covered or closed or rolled, for the most part, during a margin call situation. And there would be no reason to take AMC and GameStop out of the exchange-traded funds that are tanking before they reach their lower limits, because it's basically free shorting. Or should I say cheaper shorting, a cheaper way to short, because the entirety of these ETFs are being sold off. Therefore, all of the shares within these ETFs are also going down in value, thus affecting the final stock price. UBS Group is down 1.5%. Tesla's down 7.5% on the market news of laying off tons of employees. And the SPY is down 1.3% at the moment. What a fucking shit show. And you know what the worst thing of it all? I haven't even mentioned to you guys yet. Thrift Savings Plan. The Thrift Savings Plan is at risk for military personnel and federal employees. I'll show you something that had me absolutely fucking furious. Couple things, actually. It won't take long. Yeah, your dishwasher. Sorry about that. Apparently I have to renew my premium.
Between the United States and Taiwan. The U.S. has stepped up engagement with the democratically governed island, but Beijing is not happy about it. Now, new trade talks are bringing the issue
Here you go,
to
guys.
center
Listen to
stage
this.
once again.
China is angry And at a news briefing on Thursday, the Chinese foreign minister did not mince words. The insistence of the United States on playing the Taiwan card will only bring Sino-U.S. relations to a dangerous place. The United States should abide by the One China principle and the provisions of the 3 Sino-U.S. joint communiques, stop any form of official exchanges between the United States and Taiwan, stop signing agreements of a sovereign connotation and official nature with Taiwanese merchants, and refrain from sending any wrong signals to the separatist forces of Taiwan independence. These strong statements follow the announcement on Wednesday of the U.S.-Taiwan Initiative on 21st Century Trade, which aims to deepen economic and trade relations between the two countries, a point that was underscored by Illinois Senator Tammy Duckworth during a joint press conference held with Taiwan's President Tsai Ing-wen.
I do want to say that it is more than just about military, it's also about the economy. And I'm here to support the President Biden's efforts in engaging in economic relationships and closer relationships between our two nations on an economic front as well.
Now remember, America is trying to strengthen economic ties with Taiwan. And China is stating to us clearly that America's trading with Taiwan is causing a direct impact on their country, and that they will be seeing that as a threat.
As well as on national security.
The deal came just days after the Biden administration excluded Taiwan from a broader Asia-focused economic plan designed to counter Beijing's influence in the region. Taiwan has informal but...
Have you guys learned anything about a plan that is supposed to counter their influence in the region? Have you learned a little something about executive orders and sanctions? I think you have.
Extensive ties with the U.S. It is the U.S.'s 9th largest trading partner and an important hub for making computer chips and other high-end tech components. Both China and Taiwan agree there is value in trading with the U.S. Yet China says Taiwan has no right to conduct foreign relations. On this, Taiwan does not agree.
Wow, look at that.
Well, for more, let's go to Jens Korte in New York for the U.S. market's reaction. Now, Jens, the U.S. closed a trade deal with major partners in Asia just last week. Taiwan was excluded from that deal. Why was that?
Yeah, well, Christy, the Biden administration just last week, as you mentioned, launched the Indo-Pacific Economic Framework with 13 countries. And what we hear is that some of those Asian partners had concerns to actually anger China if they include Taiwan. So now it looks like the Biden administration might be looking for a bilateral agreement with Taiwan. I don't know who comes up with those names. So U.S.
He doesn't know who comes up with those names. That's fucking phenomenal. So as you guys know, DW News, you know, a German public broadcast service, is now telling us that U.S.-Taiwan trade talks are going to cause further deepened issues between America and Taiwan. And I think a lot of people should have seen that coming. You know, if I really do worry for the investments of many people. Not that I'm going to tell people where to invest their money. I just hope that people figure out what's going on, what these sanctions mean for everybody. Right here, we've got Executive Order 14032 from June 3rd, 2021, addressing the threat of securities investments that finance certain companies to China. I, Joseph R. Biden, President of the United States, find that additional steps are necessary to address the national emergency declared in Executive Order 13959. Remember, people, 13959, as of this morning, is now in full effect. To the best of my knowledge, according to the U.S. Treasury and everyone else that we've been able to find. So sections 1 through 5 of the executive order are superseded in its entirety. The following activities by the United States are prohibited: the purchase or sale of publicly traded securities, etc. These are designed to provide investment exposure to such securities or any person. So it's basically prohibiting any sorts of exposure to these. It's prohibited to operate or have operated in defense and related material sectors or surveillance technology sectors of the economy of the People's Republic of China. It is prohibited to own or control, directly or indirectly, or operates basically any of these companies that are prohibited in this subsection A. Now, the prohibitions only in subsection A take effect on August 2, 2021. So this did take place already for this, but that's only subsection A and not for the entirety of the rest of the orders, per my understanding. Beginning at 12:01 a.m. Eastern Daylight Time, the subsection 60 days after the date of the determination in subsection A of this section with respect to any person that's not listed in the annex of this order. So keep in mind, there's a lot of legal speak going on here. Also, what do we see here? Right beneath, it says, the purchase or sale of publicly traded securities described in subsection A of this section made solely to effect the divestment in whole or in part is permitted prior to today, 12:01 a.m. Eastern Daylight Time, June 3rd, 2022, with respect to any person that is listed in this order, or 12:01 a.m. Eastern Daylight Time on the date that is 365 days after the date of determination. So if more companies are added, or were added, there was a 365-day lag period there, per my understanding again. And the prohibitions in subsection A of this section apply except to the extent provided by statutes, regulations, orders, directives, and licenses that may be issued pursuant to this order and notwithstanding any contract of any licenses. It is also prohibited for any transaction that evades or avoids and has the purpose of evading or avoiding or the causes of violation of or any violations set forth in this order. Any conspiracy formed to violate any prohibitions in this order is prohibited. And when they say person, they mean an individual or entity. They don't mean you and me. They mean banks, market makers, hedge funds, anybody, any institution at all. The term publicly traded securities includes any quote-unquote security as defined by the Securities Exchange Act of 1934. The term United States person means a United States citizen. And Section 6 of Executive Order 13959 was amended to replace Section 6 with Section 7. So there have been some significant changes. Nothing in this order shall be construed to impair or otherwise affect the authority granted by law to an executive department or agency or the head, the functions of the director of office management, blah, blah, blah. This order is not intended to and does not create any right or benefit substantive or procedural, enforceable at law or in equity by any party against the United States, departments, agencies, entities, officers, employees, or agents in person. Damn, that's fucking mouthful. The White House, June 3rd, 2021, 365 days ago. Here's the annex. Aero Engine Corporation of China, Aerospace, UAV, Aerospace Communications Holdings, Aerosun Corporation, and you get it, Aviation Industry Corporation of China, Abic Aviation High Tech, Abic Heavy Machinery, Abic John Aptronic Technology. I'm only in the letter A still. I'm not going to read them all, but I think you get the point. Is that? See, we can just scroll on down, and if you want, you can pause it so you can read all of them in case you own any of them, but it's probably a little too late now. That's why I've been telling you guys about this since January of this year.
SPY starting to nuke.
Nuke? Worse than it already is?
No, I just mean it looks like it's like...
Oh, okay.
Yeah, not like a $10 drop or anything great.
No, well, that would be yeah, phenomenal for me. I would be more than okay with that and just clean up our ridiculously overvalued
last candle
S&P.
looks nice.
AMC's at 12.39. This is exactly what I fucking expected. If it doesn't go up, it has to go down. It's not going to stay flat on a day like today, in my opinion. There's no fucking way that these stocks are staying flat. The SPY is now down 1.55%. You're not lying. We're back at 410, baby. Back at 410 on the SPY. The NDXT and the NDX are down 1.92%, and the NASDAQ Composite's down 1.8% almost. The Russell 1000 is down 1.5%. For those of you that are unaware, GameStop is currently in the Russell 1000, and AMC is in the Russell 2000. With the ETF rebalancing that's happening, with the index rebalancing and the ETF rebalancing that's happening, we're going to be seeing AMC most likely moved from the Russell 2000 into the Russell 1000 later this month of June 2022. Shopify absolutely getting slaughtered right now, down 8.4%, as retail sales and online retail sales are not doing so well right now with the economy in such terrible shape. And of course, the Ultra Pro Short Triple Q is up 7.5%, as the Triple Q and the ARK and the NASDAQ are fucking tanking at the moment. TNX, the interest rate option on a 10-year note, is up 1.13% for the day, hanging out at $29.46. What's up, Bigums? Thanks for joining us, brother. And I just wanted to say a quick thank you to Charles M. for your support, brother. Thank you very much, Charles M915. We appreciate you here in the think tank. Thanks for being a part of it with us. I'm very much looking forward to see what happens in the short-term future, not just today, but also next week and in the preceding weeks. However, I'd be shocked to see if it takes that long. The volatility index is hanging out at $25.37, and a lot of things are just not priced into this volatility index, including Executive Order 13959 and 14032. When people say it's priced in, well, I'd like to say no. No, it's not priced in. Just in the same way that the government's stopping quantitative easing is not priced in, because the banks and institutions know that the government and I should say the Federal Reserve, because they're not technically a government entity. The Fed has not stopped easing, as I proved to you moments ago from the Occupy the Fed tweets that show that the Fed has spent $200 billion plus in mortgage-backed securities in United States Treasuries last month of May. Meanwhile, heavily shorted stock, Mullen Automotive, is up 6% right now. Granted, that's only a few pennies, but it's already 46 million volume on Mullen Automotive, M-U-L-N. That is fucking bullish, if you ask me. And when did this happen? Look at that. Everything was fine. Look at Mullen on the previous charts, just getting shorted down, hanging tight, and then an immediate gap up in the pre-market this morning. Again, granted, it's only a few pennies. It's from like $1.22 it went up to $1.40, but that's a pretty nice percentage movement for a stock that's worth, that's actually currently at the $1 range. Yeah, Texan, just look at the Fed balance sheet. It just keeps going up when they say that they're going to stop easing. And my man, George Gammon, if you guys know who he is, that guy really fucks, from End the Fed. He's got a YouTube channel. I forgot his name at the moment, but the guy is really exceptional. And I was looking over this almost at the exact same time that the tally of the Federal Reserve's total purchases for May is $226.97 billion. That exceeds the amount that they wrote off their asset balance sheet by 52 or 54 billion. $54 billion with a B as in bitch, which is what Ken Griffin is. And that's one of the reasons why I think it's very possible for many people, including myself, to make billions with an S. I didn't say a billion, but billions. Now again, we also saw the U.S. Treasury give us an update 2 days ago, on 6/1, June 1st. They told us that any such purchase or sale of these securities is prohibited after the 365-day divestment period, which has begun as of this morning. They also told us that dividend reinvestment constitute purchases that are prohibited. And the only dividends that may be distributed are to non-U.S. persons. And remember, and that's after the relevant divestment period, which is now. We are in that period. The period is over. Additionally, transactions that would be prohibited under this executive order, including the sale of securities by a U.S. person made to that effect after the 365-day divestment period, which is now, must be rejected and reported to the OFAC within 10 business days. U.S. financial institutions may continue to intermediate purchases or sales by or from non-U.S. persons to or for non-U.S. persons. So earlier I did speak. United States entities and persons cannot divest themselves of this anymore whatsoever or transfer this out to non-U.S. persons or entities. Only currently sitting outside of the United States to others outside of the United States. So an American company or bank cannot buy or sell the securities in any way. And on that note, cheers, motherfuckers. We're going to be so fucking rich. I'm going to spark up, wake and bake on that one.
Boss. I said the movie's going to be, instead of Brewster's Millions, it's going to be Boss's Billions.
I can live with that. When I first started, I was ready to make millions. And then as time went on and I learned more, I realized there's a very real possibility with the number of contracts that we have, call contracts and shares, that we'll be able to make a lot of money, a lot more than I ever imagined. And those millions
and that's
could
their
very easily be billions of dollars. And that's their fault. Some people might be thinking, oh man, this guy's crazy. What does he think the stock's going to fucking $500,000 a share? No, absolutely not. I'd be more than happy with 5 digits, even 10,000 a share. I'd be a multi-billionaire by 10,000 a share. I'm cool with that. To each his own.
Boss, Paul P in the house, man. What's up?
Welcome, brother. It's good to have you. How you doing?
Man, getting a workout right now. I got you on the speaker. So I figured I'd tap in with you guys, man.
Yeah, brother. It's good to have you. Thanks for joining us.
You already.
For those of you that are unaware, China has been discussing attacking United States forces in the South China Sea region and taking Taiwan. This is not hearsay. There are photos. There's leaked audio, long audio tapes of this in full. And I'd play it for you, which I have in the past, but it's in fucking Chinese, so not many of you would understand it anyway. There's a photo secretly taken of a May 2022 meeting involving senior officers of the People's Liberation Army, Guangdong Military Region of the Southern Command, and the principal officers in the Guangdong Province Administration and the Regional Chinese Communist Party. So you can look it up if you want. Luda Media posted the audio in the meeting, LUDE Media, if you really want it. They say in this video, the secret recording, of course, it was not publicly, put out there. Somebody illegally and secretly recorded this at the risk of being killed by the Chinese military, by the Chinese Communist Party, because you cannot give away state secrets anywhere, let alone in China, without getting your fucking head chopped off. And they said, quote unquote, it is necessary to coordinate the 2 directions of the Taiwan Strait and the South China Sea, the 2 areas of maritime and land protection, the 2 traditional and new forces, the 2 kinds of resources in the province and overseas, and the focus on cohesive resources to ensure the direction of the Taiwan Strait. Guangdong Province alone has been ordered to mobilize massive resources for an invasion of Taiwan. Over 1,358 units of various types, with over 140,000 personnel, 953 ships, 1,653 unmanned aircraft, drones, 20 airport terminals, 6 shipyards, 14 emergency mobilization centers, grain and oil depots, hospital, blood bank, etc. In addition to 15,500 military experts of various disciplines and 64 roll-on roll-off ships of 10,000 tons, 38 aircraft, 588 trains, and 19 civil facilities, such as airport docks. China intends to apply the lessons that they learned from the COVID-19 pandemic towards mobilization and control of its population to meet wartime objectives. Now remember, this is one fucking province. We're just talking about Guangdong. It'd be like saying Chicago. You know, there's plenty of other parts of America from which the United States to pull resources, not just Chicago. Does that make sense? They plan to, quote-unquote, convert the experience and practice of prevention and control of the new corona epidemic in previous years into measures for social prevention and control during wartime to ensure that the people's production and life are orderly, the overall social situation is stable, and to create favorable conditions for the invasion of Taiwan. That being said, if Biden were to extend Executive Orders 13959 and 14032, he may as well lay out the red carpet for China to take Taiwan, because that's exactly what would happen, in my opinion, in a heartbeat. In a fucking heartbeat. So here's the Chinese military company sections FAQ that was released on June 3rd. Holy shit, guys. This was just released. Let's take a look at this. Do the prohibitions apply to purchases or sales of publicly traded securities or subsidiaries of entities listed on the non-SDN? The prohibitions in EO 13959 apply to a subsidiary of Chinese military industrial complex companies. Now remember, people, not today. Released June 3rd of last year. My apologies. There's another one that was released June 1st of 2022, which I will show you shortly after. And that's why I got confused. My apologies. But you can see that we've already been over these. These are the ones we covered just about a half hour ago. So you know that these financial instruments, and pretty much it's all prohibited at this point. Any purchases or sales within the United States, etc. And it's regardless of such securities shares of the underlying index fund ETF. See right here? So regardless of the number, regardless of such securities share of the underlying index, so whether it be 0.0001% or 100%, that entire index fund, ETF, or derivative would be useless. For the purposes of collateral, margin collateral, per my understanding. At least that's what we saw last year multiple times. And that's what I'm suspecting we're going to see again. Let's take another peek at the markets and see how we're doing. The S&P's hanging out tight at negative 1.45. The NASDAQ composite has fallen even further to 2.25% in the red. You can see it here at the top of my screen right here in red. And the Russell 1000 is now down 1.44. 1.44%. That's going to drag down GameStop right along with it. AMC's down 6.92%, which is to be expected as a Russell 2000, and GameStop's down 4.85% in the Russell 1000. Sounds about right. Google, holy shit, guys. Google has lost another percentage point, down to 2280 to negative 3% since the last time we checked on it, not even 15, 20 minutes ago. And in case you're wondering, there's a lot more that I'm going to show you guys regarding the Chinese military-industrial complex sanctions, including this from February 16th, 2022, where the United States Department of the Treasury, Office of Foreign Assets Control, tells us the entire background as to what happened. You don't have to take my word for it. I'm just a guy business owner, an investor, so Jory's doing research and due diligence and technical analysis on his favorite stocks. And I've come to the realization that it's very likely that both our stock market are extremely overvalued, right along with our bond market, our real estate market, and many other things. And other things are very undervalued, like silver and certain very special stocks and other precious metals. Anyways, background. According to this document from February 16th, 2022, the Department of the Treasury, OFAC, Office of Foreign Assets Control, states, Part 586 of 31 CFR, the final rule action. Summary. The Department, OFAC, is adding regulations to implement this November 12th, 2020 executive order related to securities investments that finance the MICs. This rule is effective February 16th. They intend to supplement these regulations with a more comprehensive set of regulations, which may include additional interpretive guidance and definitions, licenses, and regulatory provisions. So at this date, they added guidance, definitions, licenses. And licenses are the ones that include, and annexes are the ones that include the companies at the bottom, which is there. I'll show you in a little bit. Here's the Assistant Director for Licensing's phone number. If you want to call him yourself, give him a fucking call. Assistant Director for Regulatory Affairs and Sanctions Compliance and Evaluation is also there. 202-622-2490. The OFAC Assistant Director for Sanctions Compliance and Evaluations is at your beck and call. Give him a holler if you don't understand. Background. On November 12, 2020, President, invoking the authority of the International Emergency Economic Powers Act, issued Executive Order 13959 on November 17th. That was Donald Trump. In EO 13959, the President found, among other things, that the People's Republic of China is increasingly exploiting United States capital in order to resource and to enable the development and modernization of its military. Intelligence and other security apparatuses, which continues to allow the PRC to directly threaten the United States homeland and United States forces overseas, including by developing and deploying weapons of mass destruction. You guys remember the last time we heard weapons of mass destruction? What was it that ended up coming out of Bush's
9/11?
mouth? What was it that ended up coming out of George Bush's mouth afterwards, right? We didn't find weapons of mass destruction. But I digress. So they directly threaten the United States homeland and United States forces overseas, including by developing and deploying weapons of mass destruction, advanced conventional weapons, and malicious cyber-enabled actions against the United States and its people. And that key to the development of the PRC's military, intelligence, and other security apparatuses is the country's large, ostensibly private economy. The President therefore found that the PRC's military-industrial complex, by directly supporting the efforts of the PRC's military, intelligence, and other apparatuses, constitutes an unusual and extraordinary threat, which has the source in substantial part outside the U.S. to the national security, foreign policy, and economy of the United States, and declared a national emergency with respect to that threat. On January 13th, okay, this is where the next executive order, 13974, comes into play. This is the one that which amended EO 13959, okay? So 13974 kicked things off until May 27th. And May 27th was the date we saw. Let me get to it. I'll show it up on the screen for you for those that want the receipts, because I always like providing receipts for people, because I don't make things up. I just go based off what I read. And this is what we've got from OFAC. Here you go. 13959 amendment, as amended by EO 13974 of January 13th, 2021. This basically defines subsection 4A of Executive Order 13959, authorized through 9:30 a.m. Eastern Daylight Time on May 27th. That's when we saw AMC go from $18 to $29, etc. Now, that amended this executive order, And then further, on June 3rd, 2021, President issued Executive Order 14032. And that's the one that we have here, that we've seen many times, addressing the threat from securities investments that finance certain companies of the People's Republic of China. That is different from the 13959 that is regarding Chinese military industrial complex companies. So there's varieties of companies being added now. So first they were working with communist Chinese military companies. Now they're certain companies of the PRC. So they're expanding upon it, not just military, but just companies in general of the PRC, regarding their military civil fusion strategy. See, so as Biden states, I hereby expand the scope of the national emergency declared in EO 13959 to address those threats. And I order that 13959, etc., are replaced and superseded in their entirety. And so now all of these are prohibited, and that extended the date through today. The purchase or sale of publicly traded securities described in subsection A of this are made solely to the effect of divestment as of June 3rd, 2022. And if there is a 60-day lag, there from which they have to comply, and nothing happens, today, Monday, Tuesday, Wednesday, that would be because we would need 60 more days for them to meet this. And that would be June, July, August. That'd be right around August 5th, the first week of August or so. So anything is possible here. But per my understanding, this is June 3rd with respect to people listed in the annex, and the 60 days is in respect to people not listed in the annex, per the verbiage which I just read to you about 7 or 8 minutes ago. Therefore, you can go back and do your own due diligence if you'd like, but then here you go again. Here at the bottom, section 2 states that 1201 on the date that is 365 days after the date of the determination in subsection A of this section with respect to any person not listed in the annex to this order. Wow. That's why these things are 30,146 fucking pages long. God damn. I haven't even started to mention the Thrift Savings Plan. Emlo Brown, thank you for your work and your support. Let me see here. Emlo69, you did not have to super chat to tell me that, but I appreciate you, and we will definitely, I'll definitely reach out to you here on Discord in a little while here, all right, buddy? After the stream, which I plan to keep going till market close today. So if I gotta go to the gas station or whatever, run out for lunch, you guys are coming with me. If I gotta go to the pisser, you're coming with me. So you better hold my zipper. Let's see what we got here. We got non-proliferation sanctions. You know what? We can just keep going here. Before I move on to non-proliferation sanctions, because there's so much happening in the scope of these threats from China, I'm going to continue onwards here. Can you guys all hear me in the Discord still? In the think tank?
Yep.
All right.
You're
Mark.
good.
Thanks, brother. Appreciate you. So, 13959 was amended, 13974 was revoked. Therefore, the January 13th date and the May 27th date are now out the window. Now we're looking at June 3rd, 2022, which is today. In Executive 14032, the President found that additional steps are necessary to address the national emergency declared in 13959, including the threat posed by them. And I don't want to just keep talking about the same shit over and over again, so I'm going to briefly skim down a little bit further because you guys have already heard me say this multiple times. In addition, he found that the use of Chinese surveillance technologies outside the PRC and the development or use of Chinese surveillance technology to facilitate repression or serious human rights abuse constitute unusual and extraordinary threats, which have their source in whole or substantial part outside in the United States to the national security, foreign policy, and economy of the United States, and expanded the scope of national emergency declared in EO 13959 to address those threats. OFAC is issuing these Chinese military-industrial complex sanctions. Regulations to implement 13959 as amended by 14032, pursuant to authorities delegated to the Secretary of the Treasury in 13959, blah, blah, blah. respectively. Because EO 139774 has been revoked in its entirety, it does not appear in an appendix on this part. Therefore, you can forget about 13974 because it has been superseded. Hey, Sesums. No, my friend, I actually never told you 60 days more. I never told you June 3rd because apparently you may or may not have been paying attention. Let's see. June 3rd, 2022, today, the sanction is already in effect. I don't know what the stock market's going to do. I don't have a fucking crystal ball. I can't tell you if AMC is going to go to fucking moon today, tomorrow, or next week, or next month. All I can tell you is when these sanctions go into effect. And as of 12:01 a.m. this morning, this collateral and their ETFs and mutual funds and indices that hold this Chinese military industrial complex companies are complete fucking worthless margin collateral garbage. So if you'd like to continue speaking as if I'm making promises, I would recommend that you leave the channel. However, I don't necessarily think that that's what you're saying. I believe there may just be a disconnect. Some people fail to realize that I believe this to be imminent, but imminent means something that is impending and soon to come. Soon, for me, doesn't have to be right now. I'm a very patient individual, and I will wait as long as it takes for Ken Griffin to pay me my fucking money. But anyway, thanks for your support, Sesame. I appreciate you. I truly do. The regulations are being published in abbreviated form at this time for the purpose of providing immediate guidance to the public. OFAC intends to supplement this with a more comprehensive set of regulations, etc. So as you can see, I went back yesterday and I was showing you guys the think tank provisions from September 30th, 1993, regulations, from the Bush and Clinton administrations. These executive orders go way, way back. And each one pretty much kind of expands upon the ones before it. So it's really expansive. So as you can see, prohibitions in subpart B. All transactions prohibited pursuant to this executive order 13959 as amended by 14032 are prohibited. The names of persons identified, etc., and subsections. And Sesame, by the way, I wasn't picking on you. I do appreciate you mentioning that, and I do appreciate your support. I just want you to know that, and other people as well. But I don't like when people twist my words, because I am very careful and sometimes even eloquent in my choice of words when I choose to be, in order to keep myself from being misrepresented, because I do not like people misquoting or twisting my words or saying that I'm making promises when I am doing nothing but stating dates and facts. And that's what I think a lot of people need to keep in mind. That's the whole point of this. We need to state facts, because there's nothing more important, in my opinion, than timing in the stock market. So anybody that says no dates, I think is full of shit, because I want to know the exact microsecond date and time that I get in and out of a trade. And I want to have an idea as to why I'm doing it. I don't want to just put my hands over my fucking eyes and say, okay, what did the stock price go up yet? Can I sell now? No, I do my fucking due diligence. I do my technical analysis. I do my homework. And then I invest in meme stocks, because they seem like way better fucking deals than anything else on the market. Like a way better hedge to a market crash than everything else on the market, to me. So, for the Securities Exchange Commission to come out with their little Investomania video, that does make me mad. That's right. I do get very mad at the Securities Exchange Commission when they're making claims such as apes are a cause for, I'm sorry, that was Ken Griffin, my apology. Let me backtrack that a little bit. When the SEC makes claims that, people need to do their due diligence, I think they're looking at it the wrong way and may possibly, I can't even say what I want to say due to my commitments to lit exchange, so I'll just leave it at that. They don't have our best interest at hand. I'll just say that. AMC's down 7.89% to $12.25. Is Cash Money here? Somebody call him. I might call him at home. Amazon's down 3% as well, a massive movement into negative territory. The S&P 500 is down 1.78%. I mean, if this continues,
going lower.
Could we possibly see a market crash today? Because I've still yet to mention the fucking Thrift Savings Plan. There's so much information to cover. I can't believe it's already 10 a.m. Let me see. All right, great. Get some of these closed out and out of my way. You guys are going to get a fucking kick out of this because you want to know why? Sadly, many people's investments are at stake. And I'll show you right now. I just found, well, not I. We, Corman, this guy right here, as a matter of fact, Corman4069, sent this to me yesterday. Corman, thank you for that video from Rumble, from Bannon's War Room, of all places. Now, please don't leave the channel just because I'm talking about Bannon's War Room. It's just the person that I want to tell you about. Frank Gaffney, that was on Bannon's War Room. Disregard Bannon entirely, but Frank Gaffney does a short thing for a few minutes, and he explains the way that the BlackRock is going to invest.
Q issues. They're
the Thrift Savings Plan. BlackRock is going to invest the Thrift Savings Plan in Chinese military companies. Chinese companies, and they've already started. So, again, we're skipping past Bannon because I don't give a shit about him. I'm here for Frank Gaffney. Okay?
I'm working through the book myself right now. Naomi was very generous towards me yesterday, and I really appreciate all she does. God bless her and what you do to help her.
So glad you were there.
It's about to start right
Very
now.
special.
Thank you, Naomi.
We've got some action we got to take care of. TSP, Larry Fink, the guys at BlackRock. Tell us what we got.
Okay. Thrift Savings Plan, the guys at BlackRock. This is a big fucking deal here. And the reason, because if you've been following this channel at all, you know that we tell you guys that, well, fuck, I'll let Frank Gaffney explain it to you guys. Just watch this. I don't even want to try to say it. I can't say it any better than this guy. Let's put it that way.
Got to do.
Well, at midnight last night, the Thrift Savings Plan opened a window to get access to the retirement savings of American men and women in uniform, veterans as well as serving, and their civilian counterparts for the Chinese Communist Party. And as we've talked about a lot, Steve, one of the things that is most infuriating about the war we find ourselves in, not because we want it, but because the Chinese Communist Party wants it, is we are underwriting the damn thing. And this has now been opening broader and broader penetration of our capital markets, thanks to Larry Fink of BlackRock, particularly, because as he does so much of the rest of the world, it seems, he's largely running the Thrift Savings Plan as the fund manager. So when he says, you will treble your investment in China, a lot of people salute and go put more of their money into China. A couple of things make this just insane, Steve. One is, as we've talked about, notably on a wonderful special program on Saturday, we may well be at war with China, not just in the unrestricted pre-kinetic form, but in the actual old-fashioned violent kind.
Pretty soon.
Very soon. And the first thing that's gone, of course, is any money that we've foolishly put into China. You're not going to get a refund, for heaven's sakes, from the people who waged war against us. Please. The other thing is, Steve, I personally believe that everybody in the federal government who has a security clearance and may find themselves investing in these Chinese companies, when the Thrift Savings Plan Board, the so-called Federal Retirement Thrift Investment Board, won't tell them that these mutual funds they're investing in actually have Chinese companies in their portfolios, perhaps even some that are building weapons with which to kill those military servicemen and women. This is crazy. They may well jeopardize their security clearances, I think, if this is allowed to persist. For all these reasons, it should be shut down. Go to no TSP, Thrift Savings Plan, no TSP for CCP, the Chinese Communist Party. No TSP for CCP.org, and you can express your opposition to what's being done here with a click of a mouse to your elected representatives, as well as this Federal Retirement Thrift Investment Board, which is culpable for doing what Jerry Boykin, one of our greatest warriors, is calling treacherous sedition at the instigation of Larry Fink.
Frank Gaffney, thanks. We'll have you back on. We got a lot more to talk about this war over Taiwan, the war over the chips, the power economy. Frank, thank you so much, and thank you for being on TSP. Let's get it up in all the chat rooms everywhere. Frank Gaffney.
Thank you.
All right, now again, I don't give a shit about Bannon. I'm not here to take any of his fucking bullshit, any of his political crap, or any of his ideology or views. I just wanted to show you the expert, Frank Gaffney's viewpoints on everything that's happening. But it's much worse than that. It's much worse than I've ever told you on this channel before. And we just figured it out last night. Here's the United States Senate letter to the Federal Retirement Thrift Investment Board. May 24th, 2022. After BlackRock came out on Fox News and stated that they're going to invest the Thrift Savings Plan, almost $800 billion of military and federal employees' money in Chinese, worth of it total. Percentages of that are going to be over 5,000 mutual funds. 5,000 mutual funds that are unvetted are being inserted into these thrift savings plans in which many people are invested without you knowing. They're not moving your money. They're moving the plans in which your money's invested. That's legal. I'm sorry, I'm furious. All right, let me just scroll down here. When people invest through the TSP, it says they rightly expect the FRTIB will protect them and their investments from these types of dangerous investments. They do not want their retirement dollars to underwrite the development of the CCP's advanced weapon systems and military. It is evident that the FRTIB cannot live up to their expectations. This is from Marco Rubio's office, the Senate, U.S. Senate. Marco Rubio and his colleagues sent a letter to the FRTIB, acting chairman David Jones, regarding the mutual fund window that begins this month for the FTSP participants. For these and several, and their money's in lockout right now. Per my understanding, with some exceptions, most people's money is currently locked down. They're unable to access their accounts. Not everybody, but most people within the TSP. For these and several other reasons, we again urge the board to cancel or at a minimum postpone implementation, which they have not, and they are not doing. They've not postponed it. So you can see Senators Rick Scott, Josh Hawley, Tom Cotton, and so on signed the letter, while U.S. Representative Greg Murphy and other reps sent an identical letter to the FTRTIB and the Coalition for a Prosperous America. Praise the effort. They're saying here quite simply, it is absolutely unacceptable for the CCP to be profiting from the retirement accounts of U.S. government employees and members of the military. And even worse, what do they say? We write to convey urgent concern with regard to the mutual fund window beginning this month, June 2022. Such a move could expose billions of dollars in retirement savings of U.S. federal employees and service members to Chinese companies, including ones currently sanctioned by the U.S. government or otherwise blacklisted for the threat they pose to U.S. national security. The Senate, the market makers, the banks, Ken Griffin, Gabe Plotkin, Gabe Forskin, and all the other assholes out there, Janet Yellen, Jerome Powell, they all fucking know about these sanctions and what effects they had on the market in January and May and June of 2021. That's why I suspect that they may be intentionally crashing the market in order to use this almost $1 trillion worth of federal TSP in combination with the reverse repo program and the new SFT NSCC 2022-003 program as forms of liquidity in order to try to make groups of pensioners, 401ks, and thrift savings plans bag holders for their shitty derivatives that are nothing but toxic garbage. Now, I understand that sounds kind of complicated and maybe a little wacky, But if you understand market mechanics, if you've got your Series 7 or securities licenses, you know exactly what I'm fucking talking about. And if you've got some experience in the market, you know exactly what the fuck I'm talking about. If you went...
Did we lose him?
No, I'm here. If you lived through '08, you know. So, after widespread and bipartisan outrage in 2020, the FRTIB voted unanimously to abandon the transition. But now they're doing it anyway in 2022. And this would provide TSP account holders the option to invest up to 25% of their savings in one or more of approximately 5,000 mutual funds. Given the vast number of Chinese companies implicated in the decision and the FRTIB's past efforts to include such companies, it is unlikely that your board will be able to ensure that approximately 5,000 mutual funds are all free of Chinese firms that are basically going to be sanctioned. And it's true. And I'll show you. This was published yesterday. Hedgy Trimmer, you see, he asks who in the military would invest their money in China. As people don't know they're investing their money in China. They're just picking a plan. The C fund, I fund, G fund, etc., etc. They pick a plan. It's got a letter. That's all. You don't know what's in it unless you dig deep, 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 deep. And most people don't know how to do it. On June 2nd, despite bipartisan opposition from lawmakers, the FRTIB yesterday proceeded to begin investing federal retirement savings from the Thrift Savings Plan, the largest defined contribution plan in the world, in bad actor Chinese companies. This is from the Coalition for a Prosperous America, prosperousamerica.org. The new mutual fund window will add 5,000 unvetted mutual funds to the pool of TSP investment options. Shockingly, the FRTIB admitted publicly that it has not conducted any due diligence to evaluate whether these funds include Chinese-owned entities. You want to know what? I opened this up yesterday, and it scared the shit out of me. It scared the shit out of me. May 26, 2001, minutes of the meeting of the board members of the Federal Retirement Thrift Investment Board, Washington, D.C., excuse me. Acting Chairperson Jones called to order monthly meeting of the Federal Retirement Thrift Investment Board at 10:12 a.m., etc. Approval of the minutes. Let's move on down. He gave opening remarks, and they stated there was an increase in April roll-ins with over 3,600 processed roll-ins totaling $142 million, the largest single month for roll-ins since January 2020. Post-separation withdrawal totals projected for 2021 are currently 26% higher than 2020. That means that withdrawals for 2021 were higher than 2020 because Americans were probably losing a lot of their savings. That's why, as we know, as I showed you earlier in the stream, Americans had Q1 2021 $4.05 trillion in savings. And as of Q1 2022, we've lost 3/4 of that, 75% of it, and Americans have $1.15 trillion in savings. That's a fact. Mr. Ramos explained that this may be attributed to an increase in participants reaching retirement age and increased access to their funds since the implementation of the withdrawal program. Okay. Let's scroll down and I'll explain a little bit more the scary part of this. Here you go. McCaffrey concluded his overview with a comment on interfund transfers. Monthly net interfund transfers from one fund to another, resulted in an inflow of $2.6 billion to the C fund and an outflow of $3 billion from the G fund. However, although these dollar values may sound large, he noted that for the vast majority of the participants, internal fund transfers are the exception, not the norm. That means that fewer than 4% of participants in these inflows were moving assets between funds. The other 96% of participants of these outflows were taking their money out of their thrift savings plan because they needed the fucking money so bad. They're cashing out their 401ks. Fuck. The worst part is yet to come. Miss Weaver went on to share that they communicated its position that both amendments discriminate against TSP participants because neither prohibition would apply to 401k. She also noted that the TSP's current I fund index includes Hong Kong, which is part of China, and that there is no widely recognized index for developed markets that excludes Hong Kong. So they don't have an indices without Hong Kong. As such, to both divest from Hong Kong equities and create a new, specially designed index without these Chinese investment companies would increase costs to all TSP participants. It would also preclude the implementation of the TSP window, as monitoring approximately 5,000 mutual funds for any investments from Chinese military industrial complex companies and weapons of mass destruction proliferation companies entities would prove too costly for the plan. Basically, you're not worth it. You're not worth it for them to go in and make an index that doesn't have all these CMICs invested in it. You're not fucking worth it. I think you are. But BlackRock and State Street don't think you are. Neither does the fucking Fed or the FRTIB, apparently. Motherfuckers. All right. In addition, they want you to work more. The required minimum distribution age for a thrift savings plan age would increase to 73 in 2022, 74 in 2029, and 75 in 2032. The only reason that they would do this is because people will be losing the vast majority of their investments, probably and allegedly. I don't know for a fact because I can't read the future and I'm not a financial advisor, and therefore they will be required to work till older ages in order to survive. People will no longer have retirements. Here's the real kicker. I haven't even gotten to the good part. Ms. Weaver concluded with an update on Executive Order 14030, Climate-Related Financial Risk, which calls on the Department of Labor to identify actions that can be taken to protect plans from the threat of climate-related financial risk and assess how environmental, social, and governance factors take into account. They explained the position responding, which would require the establishment of a TSP Climate Choice Stock Index Fund if the board decides against divesting from high-carbon investments. But again, Ms. Weaver went on to highlight the forthcoming TSP mutual fund window, which allowed participants to invest funds of their choosing. Mr. McCaffrey concluded his update by sharing that the next major milestone will be the transfer of approximately 20% of the F fund assets from BlackRock to State Street. Transferring fixed income holdings is more complicated than transferring equities, so the team deliberately chose to conduct the C and S fund transfers first. Wow. You guys, I think we're seeing an entirely new level of corruption, and everybody knows about it except the American people. Look at the letter from the U.S. Congressman and the U.S. House to safeguard U.S. retirement savings from Chinese companies. What a fucking mess. AMC? Let's take a look at AMC. I gotta check. Let me see. I got it over here. Where's my IBKR at? AMC, like I said, going down with the rest of the market. Same as GameStop. Sometimes before stocks go up, they must come down. And that's what I'm banking on right now. AMC's at 1236. It's going to hit a low. It's going to hit a lower point here soon.
See it as your last buying opportunity.
All right, cool. Thanks for that. Excuse me a second. Got a few things happening right now. Give me a minute. I'll be right back in a few minutes.
So, how are you doing, people?
Building. Just building.
Nice. How's the Lego going?
So it's a huge pain in the ass because most Lego sets come with numbered bags and it goes step by step. All the bags, there's just a bunch of bags. There's no numbering, so I literally have to find each piece from every bag in the box.
This is why I differentiate between Legos and Duplos.
This is the first set I've had the problem with. It's severely hamper my ability to get it done during this stream for sure.
All right. Thank you very much for your patience. I am back. How's that that build coming along, Poke?
As I was just saying, this is the first set I've done where usually Lego comes in numbered bags, so you do it step by step. There's no numbers on any of these bags, so I literally got to find every piece out of every bag in this box, which is like 15. So I'm probably not going to get it done in one stream.
That's cool, man. That's a big undertaking. My man Poke Pickle Snake here is putting together an entire Volkswagen camper bus right now throughout this whole stream. So it's pretty cool. You don't have to finish it all in one day, though, brother. That's a large undertaking. But still, really cool, man. Your TikTok's pretty sick. What's your TikTok handle?
Poke Pickle Snake.
Poke Pickle Snake. Poke Pickle Snake, as in Pokemon. Check him out. He does a lot of really awesome Lego builds. And I'm talking about advanced things. Like fucking starships, the Death Star, all sorts of fucking crazy things. Fucking giant Pikachus. Cool stuff. Cool stuff. That's cool. Good TikTok channel. But look at this Murphy Panetta led bipartisan letter to safeguard U.S. retirement savings companies. And you know what? This one's even crazier because they literally are saying this very similar things. This could expose billions of dollars in retirement savings of U.S. federal employees and service members to Chinese companies, including ones that are currently sanctioned by the U.S. government. When U.S., they know exactly what this could possibly do to them. The unelected bureaucrats at the FRTIB are once again attempting to invest federal retirement savings in opaque Chinese firms engaged in human rights abuses and a wide range of military-related activities. And the fucked up thing is that it's a federal government-sponsored retirement program, and it's run by BlackRock and State Street. Let's take a look. If our stocks are ready to turn around, then our stocks are ready to turn around. If you're telling me GME's going boom, it means it's time to fucking start looking. Let's take a look and see if Marge is calling. Okay, let's get this out. Rumble. You know what? I'll put that. How about this? I'm going to jump while I'm doing that real quick. I'm pulling up the client portal. AMC is at 1246. Look, it's starting to turn around. GameStop is at, oh shit, 133. It's definitely turned around. It's just barely negative now. And that's, look at DWAC. DWAC is now positive. That's what I'm looking for. Direction Daily Real Estate Bear is positive. That's what I'm looking for. CH Robinson, for some reason, is positive. BBBY, Bank of America has further increased its losses, is down over 1%. Apple is now down 3.77%. The S&P 500 is down 1.5%. The NASDAQ Composite is down 2.28%. Holy shit. This is going to be really fucking interesting. Wow. Okay. Facebook is down 3.64%. This is what I'm fucking talking about. This is what I'm waiting for. Now I'm getting pumped. Cost is up 4%. Now we're going to start to move. Let's see a divergence from the fucking SPY. NDX is down 3%. Fuck yeah. God damn, we're going to be so fucking rich. Netflix is down 2.64%. Liquidity and assets are dropping like fucking crazy right now. I went ahead and dropped that link for you guys in the chat if anybody wants it. Redbox is down 7.24%, which we know is a major source of liquidity, easy liquidity for market makers. I think it was up 25% yesterday because they pumped a few bucks into it. Look at that. Look at that. June 1st, it started the day at $5.50 or so, and it gapped up and then ran all the way to $7.60 yesterday in order for these guys to get some margin, in my opinion, margin collateral. And now, as of today, we've seen a constant drop, and we are currently at around $6.21. That is a massive divergence. We are at the same place we were at the beginning of June 1st before they started pumping it. Joe, if you don't like it, you're welcome to leave. He says, this is so gay later all. I'm sorry if you're not happy. That's okay. Get the fuck out of here. Same for you, Platypus. Please go ahead and be on your way. Nobody needs you to be here. We'll be more than happy to get rich without you. QQQ is down 2.56%. GME's going green. Let's go to fucking GME. That's what I'm fucking talking about. Let's take a look. AMC. Oh, look at that. AMC's now at 1250 and looks like it's going up. Nope. Hang it tight. Right around there. I'm going to look at the 1 minute chart. That will help me know. Am I seeing delta hedging? Look at this. Look at this. Look at this. All right, I'm going to GME in a second, but this is positive, 5.644%. We were down 7.5%, almost 8% a bit ago. We may be seeing the beginnings of some delta hedging. Let's go to GameStop and find out. GameStop's now up 1.79%. This is going to give us a clear indication as to what's happening. This is delta hedging. I can see it already. Let's go to the 1 minute chart. I'm on it. Here we go, starting at 11:35. What kind of volume are we seeing here? We just had a 192 volume candle. I'm assuming that's 192,000. No, excuse me one second. That might not be. Okay, if they're rebalancing ETFs or delta hedging, we will see the price movements start to tick up very quickly. Looking at a 2.3% increase is quite good. Ligma. It's a good comment. I'm not going to read it out loud. But as you guys can see, it looks like there's a divergence now from the S&P 500. GME has turned around and is now up 2.99%. That looks good. This looks really fucking sexy right now. I think GME and AMC are ready for a turnaround. AMC is now down only 5%. It is at 1262. Let's continue to see. Let's take a look at the 1 minute chart, see if we can find some delta hedging. We'll look at the vortex indicators. We'll take a look at everything we can, the EMA, 1348, and we'll see what we can come up with. Yep, that's delta. Hedge trimmer, good man. I like it. Okay, AMC is regained about 4% of its losses as from being down like almost 9%. It's down about 5% at the moment. Canogistics, which is cheap hedgy collateral, it's a penny stock. It's now up 9.5%. BBBY is down 2.5%. BBIG is down 4.15%. Sundial, let's take a peek. Okay, down 2.74, hanging out at 0.37. I'm pretty bullish on Sundial. I don't think it will be delisted personally, but you never know what's going to happen. I just don't see it happening. The volatility index has increased 3% so far today to 2550, and it's still fucking underpriced. Highcroft Mine is at down 6% at the moment. Ader's down 3%. ARC Innovation ETF is down 5.28% as well. And is it just me, or has this thing kind of slowed down? Has the volume really slowed down all of a sudden? Do you guys notice that? Is anybody else watching your chart and see the volume is like completely calm right now? Like the prices aren't moving a lot? They're moving, but not very much. I see them moving mostly in AMC and GameStop. I don't see Apple moving down. Apple's down almost 4% to 145 on the day. Holy shit. Let's take a look. GME going to move back down. They're going to try and kill a little bit of IV. Yep, a little bit of, probably a little bit of implied volatility's got to get killed. So either some shorting or some selling of some sort. Look at that. Look at that. There we go. When it comes up, it must come down. At least a little bit. You can't just get exponential movements up or the IV will take off and everybody will start to go nuts. Assisted Living AZ, I think the GME split was approved. I believe that the choice now sits on Ryan Cohen's shoulders. IMTE, thanks brother. Let's take a look at IMTE and see what we got come up with. Integrated Media Technology on the NASDAQ. All right, we are up 13% on this stock. It is 13.9%. Okay. Had a 52-week high of 38.48 and a 52-week low of 30.42. Reminds me of a lot of stocks. It may be heavily shorted. I'm not sure. I haven't done a whole lot of research onto this one, but this is pretty bullish for just some regular media tech company from Australia to be up 13%, 14% for no reason. Yeah. LRC, iOS, Apple collab this month. Let's take a look at costs. Dang, there we go. Look at costs is seeing some movement. Look at the volume. Look at this fucking nothing on the 1 minute chart. But even still, we're up 6%. Yeah, Kathy Wood says a lot of stupid shit. You guys are right. You're not kidding. Let's take a look at the market scanners and see what's moving. Well, what the top gainers are right now. Turning Point Therapeutics is up 116%. TPTX up 116% right now. It's another heavily shorted stock. $73.90. What the fuck? It went up $39.74. Holy shit! Look at that gap up from $34.55, and it opened in pre-market at $73.90. That is exactly what happens with heavily shorted stocks, in my opinion. Let's go check the news to see if they've got anything that points to a reason for this happening. Okay, TPTX news. Is this it right here? Turning Point? No, that. Yeah. There you go. Here you go. Hot news today at 5:59 a.m. Bristol Myers Squibb to acquire Turning Point Therapeutics for $4.1 billion. Now that's fucking bullish. I could see why people would jump into that stock, and probably there was a lot of short covering when that happened, and it compounded into a pre-market movement of 116%. Because as you can see, it started at 74.33 and it's currently at 73.89. This stock does not move much during the day. Herborium Group is a penny stock. Penny stock, Energy Focus, DRNK, VRCE. Look at how few stocks are up today. This is the top percentage movers with a minimum of 50,000, 500,000 volume. We can reduce that a little bit, but you'll get a lot more penny stocks. And I don't want, so even still, look at how few stocks are positive right now. They're all penny stocks. Not even they're worth a fraction of a penny. With few exceptions. Neurix Therapeutics. All of these that say NT are pink sheet. Or no, hold on, sorry, corporate action. Okay, yeah, you may close existing positions but not open new ones. Yeah, those are pink sheet. All right, and so you keep going and you start looking for the ones that are not pink sheet garbage and not penny stock trash, and there's very few. There's, okay, Applied Energetics is up 16%. That's one of them. And in our watch list, we just saw a few that were up quite a bit as well. Apple's now down 4%. S&P's down 1.72. The NASDAQ 2.61. This is extremely fucking bullish for meme stock investors, in my opinion. We're looking at markets tanking right now. This is really fucking bad for markets. But AMC is still holding strong around 1240, holding on to that resistance. A support, I meant to say. DWAC is now up 0.5 percentage point. Canagistics Inc., another penny stock, up 9.5%. GME hanging tight at the 133 mark. And costs 6.1% up now. Costs is having a nice movement, guys. That's pretty bullish. I like that. Yeah, I'm going to suspect that these stocks are going to surprise us. Everything's going to move when we least expect it. It may or may not happen today. It may or may not happen on Monday. It may be in after hours today. It may be in pre-market on Monday. Who the fuck knows? We're going to find out. At least I aim to find out. If you're a paper-handed bitch, well then move along. Paper-handed, be on your way. But I aim to find out. But if I were to guess, if I were to give you my honest opinion, I think that everything is looking exactly the way it should be right now for what I'm hoping to happen. Eric, thank you very much. Yes, please, everybody, hit the like button or subscribe if you learned something new, if you'd like to come along for the journey. Because
paper beats rock, rich. But diamond beats paper.
Diamond beats paper. You ain't fucking lying. ML Brown, appreciate you, brother. Please stop super chatting me. Thank you for your support, everybody. I'll make sure it goes to a good cause. 25% of it will go to charity. The other 75% will go to my kids' AMC and GameStop fund. Well, the money that's left over, 25% of it will also go to my kids' fund, but the other 50% goes to the channel because the channel runs on a deficit. I lose money every month streaming for you guys, to be honest with you. Getting a few thousand views on YouTube doesn't pay shit. It's just pretty much going back into paying for this fucking equipment, and everything else, and the price of all the subscriptions, services that we have to pay in order to stream and do things like that. So thank you for your support. It really does mean a lot to me. But if you don't got money to burn, please save your money and invest it in your favorite stock or your favorite equity or precious metal, whatever the fuck you tangible asset you'd like. Etsy is down 4.66%. Google down 3%. Guys, I'm getting a lot of very, very similar feelings to what we went through in the early January. The January of this year when the stock market was just crumbling in the first month for the entire month. I'm getting the exact same feelings, but multiplied. The NDXT is now down 2.71%. Heavily shorted Biora Therapeutics is down 4.5%. Biora Therapeutics is the former Progenity. Some of you may know them. If you ever had Progenity, if you ever went through the Progenity squeeze last year as well, then you know that they are now BIOR. Take a look at them on the 1-year time frame here, and you can see what I'm talking about. Progenity went from 65 cents to $6.22 in the matter of a few months. Let's say from September 29th, went from 85 to, in November 17th, $6.12 or so. Excuse me 1 second. I'm muted on purpose. I need 10 seconds to talk to one of my friends. As one of many portfolios.
This break is sponsored by Mayo because it's your Mayo and Kenny can't have any.
I'm gonna get everything up.
quick while Marcel is busy. Click the like button.
It releases a dose of serotonin.
I thought Wolfie got rid of all those sexy bots.
Yeah, now we can have all the mayo for ourselves as long as we click the like button.
Can't get rid of sexy bots. They're like bunnies, they multiply.
I just showed you guys.
Everybody quiet, he's back.
I showed you guys some of my positions on one of my brokerage accounts and some of mine here in the past because I've got several of them and I don't mind sharing them. I don't care if people see what I own. I'm not going to flaunt it. I'm not going to try to rub it in anybody's face. You know, I've got a lot of P&L that's down 98, 99% on several accounts. I've got five different brokerages that I'm trading with. And I am so into my convictions that I don't mind if I lose money on options every month on things like the VIX and AMC and GameStop because I know where we're going. And it doesn't matter how long it takes me there. It doesn't matter if I lose money every single month until my options and my shares hit. I'm going to continue to do that. So I've got some of the nastiest P&L porn, gain, loss porn. And I can't wait to show hundreds and hundreds of Amy and Jimmy and VIX and other call options and SPY puts and ARC puts and a bunch of other shit that help me make billions of dollars. But for the time being, I'm not a financial advisor and nobody should do what I'm doing. You do what you want. You have your own risk tolerance. Okay? Not everybody can afford to lose thousands of dollars a month until their investments make money. But a lot of people can afford to buy shares because shares don't expire. Again, that's also a risk. It's a gamble. This is a fucking casino. Keep that in mind. But if you ask me, this is much better than any lottery or casino I've ever fucking been to. And this isn't a game of chance. This is a game of diligence and analysis and market mechanics. And that's what we're dealing with. Let's take a look at the watch list. AMC is at 1250. BBIG is at 210, down 3.46%. Oh, my volume's low? My bad. Can you hear me any better now? What the fuck happened? Why was my volume change all of a sudden? I think some people maybe turn my mic up. All right, that's weird. Hold on one second. Let me check the properties on this thing real quick. Mic check. Mic check. All right. Mic check. Can you guys hear me or is my microphone still low? A little bit better now? That's odd. Yeah, I'm not sure what happened. It might have transferred over to my other secondary microphone. My apologies. I appreciate you guys. Yeah, I got a call from a friend that is going through some things, and I had to take it. I'm glad I took the call because thankfully he's okay, but he had an accident, and I had to speak to him about it. But thank God he's fine. for the most part.
You're
injury
muted on
rates-
the Discord, just so you know.
Thanks. Appreciate that. That's probably why things got fucked up. Let me get over to it. All right, Ms. Tahiti, I appreciate you guys. I will pump my gain. Turn up the gain on this thing a little bit. That might help out. I think that helped out quite a bit, actually. That seemed to have made a difference.
Yes,
Broke
sir.
1260. Thank you. It's even actually a little too loud now. There we go. Mic check. Yeah, the gain's better. All right.
Good.
Thank you, everybody. It's even a little too loud. All right, cool. So, back into the fucking groove. Like I said, no offense, everybody, but I would end the stream in a heartbeat if one of my friends or family was having an issue. And since he was, I wanted to talk to him about it. Have you guys heard Chip Roy go absolutely fucking nuts about the $40 billion on Ukraine? MC's hanging out at 12:57.
Bro, listen to this.
I haven't had a
Bro, listen to this.
I haven't had a chance to review the bill. My staff is poring over the pages trying to see.
Okay, apparently the video's not working. But this is Chip
Bro,
Roy.
listen to this.
I haven't had a chance to review the bill. My staff is poring over the pages trying to see what's in it. You want to talk about the institution? You want to talk about standing up alongside Ukraine? Why don't we actually have a debate on the floor of the People's House instead of the garbage of getting a $40 billion bill at 3 o'clock in the afternoon, not paid for, without having any idea what's really in it, with a massive slush fund that goes to the State Department, $13 billion, $8 billion for the Economic Support Fund, $110 million for embassy security. We've got $40 billion that is unpaid for, and you want to sit here and lecture this body about what we're going to do or not do about standing alongside Ukraine? Why don't we talk about the American people who are hurting, the wide open borders, the inflation that's killing people, the jobs that people can't get because of the cost of goods and services in this country? Sitting here and being lectured to when I don't even have time to look at a $40 billion unpaid bill. I make a motion to adjourn.
Slava Ukraina. Slava Ukraina.
Bro, listen to this.
I haven't had a chance to review.
$40 billion more was sent to Ukraine, and they didn't even get a chance to fucking read the thing. That should tell you a lot about our current situation. Executive order on addressing the threat from People's Republic of China. June 3rd, BlackBerry was up on the 1 year 48%. And of course, look at the January run from the January executive order, the June executive order. Again, costs, the January executive order, the June executive order last year. So right now, on any of these, if we're lucky, we're right about here on AMC. Here, the January's not showing here. Oh, actually, the January's here. I'm sorry, because the January was from a small movement from here and then back down and up. So you see, we went up on the chart, came down quite a bit before a parabolic upwards movement on May 27th. It's only noon Eastern time. There's still 4 hours left in the trading day, plus after hours, and then pre-market on Monday. The former SEC branch chief, Lisa Braganca, has purchased AMC and GameStop. That should tell you a fucking lot. And she was pissed to see that the SEC is disparaging investors in meme stocks as if they must have done it thoughtlessly, especially when the SEC government permits most trading to take place in dark pools. How about a video about dark pools, Gary Gensler? Or better yet, get trading into the open. Apes Together Strong from the Apes Together doc, Twitter. says meme stocks is a term we, along with so many of us, are guilty of using. It's fun. It calls attention to the subversive side of all this. But as we've seen with the SEC's video, the term has entered the collective lexicon as a catch-all, used to undermine and belittle not only retail investors, but the companies they deem worthy of investment. What's most concerning is that our government agency charged with protecting retail investors has chosen to associate the term with under-researched bad decisions. That issue here, in our perspective, is that messaging like this is tone deaf to not only the companies that any source can brand with the moniker, but to the ability and dedication of retail investors everywhere who have chosen to rely on each other rather than traditional financial media. Basically, I think the people are sick and tired of the bullshit that we've seen. And currently, we've got 179.57 million shares on loan for AMC, an all-time high. These shares are required for the SFT liquidity program and many, many others. They are trying to prevent the destruction of financial markets via this short squeeze. Keyword, trying. Boston says, not going anywhere. 3,000 shares strong. Hell yeah, brother. Good for you, man. Tiger Global is down 52% year to date, and they are calling retail traders irresponsible. That's rich. That's fucking rich. Breaking news. 11:06 a.m. Central Time, about 4 minutes ago. Chinese ambassador to Moscow earlier said that China and Russia is ready to face common challenges for the sake of bright future of Eurasian continent. Do you guys understand what this means? They're ready to face common challenges for the face of a bright future of Europe and Asia. China's ready to make their move.
Yep, they're gonna take Taiwan.
That's a very fucking good reply, logical. I gotta retweet that one. That's amazing. This is why I love. This is why I have my my list, my special list here of due diligence seekers. And yep, there it is, the 10% headcount reduction for Tesla. That is helping our fucking markets rally downwards. And look at that, AMC hanging out tight at 1265. I like IBKR's charts, but I don't really invest much with IBKR because they make buying and selling kind of difficult sometimes. It's obnoxious. I'm not sponsored by anybody. I'm just speaking frankly. Take a look at the market scanner on top, gainers. Top gainers, TPTX, Turning Point Therapeutics being bought out by Biora, 116% up. Otherwise, everything else is penny stock garbage. Fractions of a penny. Fractions of a penny. You know, pink sheet crap that's being used probably for collateral. Because you and I can't buy this pink sheet. All this NT stuff, we can't buy it. No opening trades. Ineligible pink stock, it says right there. If you can't read that. Universal Power Industry, again, another pink stock. It's up 17%. Jesus. This market's a mess. The market's a fucking mess. I should check out my VIX calls, see how they're doing. The VIX is at 2535. And again, the VIX is also not pricing in this executive order. None of this is currently being priced in. And the Fed and the Treasury have a shitloads of failures to deliver on their naked shorts on the VIX. Look at the volatility today. These last few days. It's really getting beaten down. It's abnormal. Very abnormal in my opinion. So the S&P 500 is now down 1.65%. The NASDAQ Composite's down 2.58%. And the Russell 1000 1.64%. What a nasty fucking day. Peloton's down 5%. Redbox down 5.5%. Shopify 8.86%. Spotify's even down 3.7%. Tesla's down 8.38%. As we discussed earlier on the news from Elon Musk firing about 10,000 workers. That's going to be fun. Jimmy about to hit 137. Let's take a look. Yeah, you're not lying.
But hey, more minimum wage jobs.
Yeah. More minimum wage jobs. Ain't that great?
Didn't Biden say he created about 500,000 jobs a month?
Yeah, after they destroyed about 5 million jobs a month by shutting down everything for no fucking reason. Pam the Trader, you're the best. Thank you guys. Yeah, 136.83. This is definitely looking good. I'm going to be keeping an eye on this thing, on all these things closely today and Monday. Mullen has the highest volume today and is up 4%. Yeah. There's no volume on these stocks right now for a reason.
Did I hear a cash money there?
I thought cash money.
Yo.
Cash money millionaire. How the fuck are we, my friend?
Get this money.
Let's get this fucking money. Look at Beyond Meat's down 7%, dude. The S&P's still down 1.62. Etsy's down 5. GameStop hanging out at 136.70. I'm going to keep a close eye on this here for a short while.
What's up, Mons?
Having a great fucking day, my friend. How are you?
Living a dream.
Don't we fucking know it? Man, are we blessed?
So lucky.
And in a few months, a lot of dumbasses are going to be say you were so fucking lucky. And I'm going to say no. We put our balls on the fucking line. Put our money at risk. Our financial futures. And it'll have all been worth it. And I think afterwards, we'll be more than happy with how the way turns out. Borrowed shares. There are only 200 shares available of AMC to borrow. Thanks AMC Bigums for posting this up. As you can see, the borrow fee has increased from this morning from 8.2% to 9.8%, according to Stonko Tracker, I believe. But I'm not sure which platform he's using there, so I can't say for sure. Fucking Sleepy Joe.
Did he think that was an ice cream again?
In unrelated news, Thomas Smith, a Capitol Police officer, was indicted on Thursday by a federal grand jury on charges stemming from a hit and run in Georgetown in 2020 and a subsequent cover-up. The indictment was unsealed today. Wow. Good. El Arian. The bandwagon effect. Another bank warning about the U.S. economic outlook. Despite the continued strength of the labor market, the more the banks act on such warnings, including by tightening lending, the higher the risk of a U.S. recession, moving from a risk scenario to a more baseline. Basically saying it's more and more likely that a recession is going to happen. Bloomberg today, Citi's Jane Fraser said the U.S. will have a hard time avoiding a recession. No shit, we've told you that since last year. Are you dealing with a registered investment professional or a fraudster? Before you invest, check broker check. Thanks, FINRA. Now do something to help our markets. Caleb Franzen. Invesco's S&P 500 Top 50 Exchange Traded Fund, XLG, is behaving consistent relative to key structures. Top 5 holdings are Apple, Microsoft, Google, Amazon, and Tesla. 40% allocation, which we've all seen today, are not doing so great. A retest of the gray range is probabilistic. And then we'll see what happens. So, good luck to all. The Putin dump. Net premiums versus stock for SPY. The cost of puts for the SPY, the premiums, has decreased. Net premiums are bought, sold contracts, stock price is white, calls are green, puts are red. Yeah, Biden's bringing that hopium today, but how the fuck are markets in such disarray if the puts prices are down? Fucking Investomania, what a joke. OPEC, there's no way that OPEC will be able to produce enough oil to offset the losses from Russia. Daniel, thank you for your support, brother. Appreciate you. Counselor Murray, cheers to you, my friend. Salute. Cheers. AMC Bigham's coming through clutch. AMC borrow fee moving up to 9.8%, and this was an hour ago. They had 20,000 available. Now we just saw the most recent one. They have very few available, under a couple thousand. Biden will continue to use all tools to blunt price hikes. Putin's war in Ukraine is driving prices higher. Really? Really? You're gonna blame Putin? The fuck are you doing, Sleepy Joe? Lee, sick. Let me know that the borrow fee for AMC has just increased further from 9.8 to 10.4% as we speak. Beautiful. The Pentagon is discussing China's request for a meeting between the defense chiefs, according to senior defense officials. They spoke on the phone for the first time on April 20th. The U.S. has long sought stronger communication mechanisms with China. Damn. And Turkish price index has increased 132%. Erdogan goes after short sellers as hyperinflation craters the lira. Treasury yields, the cost to borrow, basically treasuries, have continued their ascent higher after cooling off. This is bad for those of you that don't understand. Treasury yields, higher is bad for treasury yields usually. That means it costs more. Brainerd. I can't stand Brainerd. I don't know about you guys. Thoughts on TPTX and the dump? Oh, and it's a pump and dump. TPTX is being purchased supposedly by another pharmaceutical company, a big name. So I'm not sure what's going to happen there, but if they get purchased, there's potentially value there. But no matter. AMC hanging out tight at 1254 today. Everything's looking pretty good, Cash. Look at the NDXT, bro. That thing's down on 2.88% for the NASDAQ 100 Technology Index. That's pretty rough for the entire index.
Schedule.
The TNX is up 1.5%. It's the interest rate option on a 10-year note. Also not a good thing. Yeah, we're right on schedule, bro. Oil appears to be knocking on 120. Let's take a look at USO and see what, and also crude. We can take a look at that. Let's take a look at Brent crude oil futures. Oh, it's not available. What the fuck? Take a look at USO, WTI. I did answer it, but okay. It's West Texas Intermediate, light sweet crude. Futures up at 118.95 for West Texas Intermediate. You know, it's holding on. Oil's one of those that you're not sure exactly how it's gonna react next. Well, nobody's sure, but if you ask me, OPEC's not going to be able to compete with the amount of that Russia's taken off the market. So that's going to continue to rise in the midterm, short term to midterm, I would suppose. Amazon's down 3%, 3.16. Apple is almost down 4% now. 4%. How is the S&P not further down than 1.56% with all these heavy losses, man? How? Yeah, Rick, some people. I could see that my audio is now back. All right, cool. I noticed the sound was off. Thank you, guys. Sometimes Discord and Streamlabs and other things fight for the sound. AMC's hanging out at 1250, hanging out really strongly.
Still does.
Mm-hmm.
Did you know that you may...
Do you think the market's right to be skeptical that OPEC might be able to even meet what they pledged that they would do?
Well, we have to be reasonable. The expectation that suddenly OPEC can unleash millions of barrels per day of additional oil and take care of the self-sanctioning issues which are taking place particularly in Europe, that's an unreasonable expectation. If OPEC decided to, say, add 1.5 million barrels per day instead of 648,000, then 1 or 2 months from now, when the demand comes back, then they have no additional capacity to put in. Basically, OPEC cannot replace Russia. That is the bottom line. And no matter how many ways you cut it, 7 million barrels per day, 7.7 million barrels per day exports from Russia cannot be replaced by OPEC. There is no two ways about it.
So that is in a world already tight that China is buying less and consuming less. Dr. Fesharaki, what happens then when all these stimulus measures that Beijing is putting in place start to work? Does the world have enough oil to account for a recovering China?
The answer is no. You don't have enough oil. You would have a supply issue. And the sort of elephant in the room that we did not discuss is what's going to happen to the Iran sanctions issue. Iran sanction issue, Iran can bring in 1.5, 2 million barrels per day of oil to the market within 3 months, but has 150 million barrels per day of oil sitting on the inventory on land and in sea. That can make the markets change very much, but time is running out. If the Iranians don't sign an agreement with the U.S. in June or July, August is the time for recess of the Congress, September the campaigning begins, and by midterm elections, the Democrats will definitely lose 1 or 2 months of the parliament, of the Congress. So you have to have a deal in a month or two, otherwise things will get even worse than they are today, and the prices will go higher.
There you have it, my friends. Feridun Fesharaki, founder and chairman at International Energy Consultancy, FGE, telling you the decision by OPEC to increase oil output on Bloomberg. They can't do it, man. Let's just be honest with ourselves, you know. But, you know, the government is never honest with us. What are you going to do there? Speaking of OPEC, here's the quota compliance. OPEC has failed to fulfill quota production each month since September 2020, with the deficit currently around 2.8 million barrels per day. So as of right now, OPEC is not meeting their quota, and they're 2.8 million barrels per day under their quota. You can see this big green line right here. The majority of it is Russian oil. Now, all of that will be gone, further increasing the deficit. Well, it's there because that's the amount that's now missing. As you can see up here, this was Russia previously providing positive oil output for some time, but since 2020, there's been a negative 2.8 million barrel per day deficit in oil. So therefore, as we've just heard, oil's got a long way to go up higher as far as price goes because they're not producing enough, and Europe is not going to get enough oil from Russia. Oh, look at that. Oil soars as traders realize what OPEC did. Are we headed for double-digit gas prices, says Zero Hedge. I would not be surprised in the slightest, unfortunately. Russia earlier said that our position is unchanged on Taiwan. It's an integral part of China. Holy shit. Holy shit. You guys know what this means. Do I even have to tell you? Have you been paying attention?
Russia is behind China in this.
On March 10th, 2022, there was 2 million failures to deliver on the SPY. The T plus 35 date for that is 6/14/2022. Okay. On 4/29/2022, there was 770,000 failures to deliver. The date, T plus 35 date for that is 6/3/2022. Today, we're seeing price action for 770,000 failures to deliver. As you can see, in a few days, next week, in the second week of this month, we're going to see 4.6 million failures to deliver hitting on 6/9 of this, July 9th. Sorry, June 9th. 4.6 million. Now 1.8 on June 10th, 1.6 will be June 13th, and 2 million more failures to deliver will also hit with T35 date, trading day plus 35 more date of 6/14. You're going to be seeing some very crazy things happen here in the short term on this market. If you don't understand failures to deliver, my apologies to you. I cannot explain it without a full session. That would be a whole video on its own.
That's right, boss. We're at the beginning now.
We're in the beginning of the end, as far as I'm concerned. Because look, we had 2.76 million failures to deliver that were hitting yesterday as well. That was a great post. And the thing is that unfortunately many people don't understand what any of this even means, so it's hard to understand the true implications of what's happening. McLovin Day. The CEO, Amazon CEO of worldwide consumers, Dave Clark, has resigned. Amazon CEO is on his way out. Say goodbye to Amazon's share price. Eric, thanks for your support, brother. Appreciate you. Welcome to the think tank. Universa Investments founder, whose fund aims to protect clients during black swan events, says the financial system is the most vulnerable to, quote unquote, the greatest credit bubble of human history. He continues to say, if this credit bubble ever pops, it's going to be the most catastrophic market failure that anyone has ever read about. Well, let's hope that doesn't happen. Spitznagel, Miami-based Universa's chief investment officer, said on yesterday, in a telephone interview, quote, we've gotten ourselves in a tough spot. He insists he's not a doom and gloomer. He's long been critical of central banks keeping interest rates near zero or even negative, which he says has propped up asset values and encouraged excessive borrowing. Officials around the world are now tightening monetary policy to combat elevated inflation. His warning follows other cautious remarks this week from J.P. Morgan executive officer Jamie Dimon, who recently has just changed his tune because up until now he was bullish, and now he told investors to prepare for an economic, quote-unquote, hurricane. Goldman Sachs president John Waldron said he's seen an unprecedented number of shocks and expects tougher economic times ahead. Jam Bams, that was amazing. That was a great friggin' post from Universa Investments founder Jamie Dimon from JP Morgan, Goldman Sachs president. That's nuts. That's fucking crazy. It sure is. It sure is doing its thing. Expect more downward for anything. That's what I think. Potato might ask if you think you're being clever because the stock hasn't ran. Like, really? Are you retarded? You know? Or are you truly being... Because so far I'm seeing everything leaning to exactly what the fuck I suspect. Cool. For those of you that are new to the channel, we are very understanding of the market mechanics and the currently what is supposed to be deleveraging of asset balance sheet by the Fed. A lot of my concepts and theories are kind of banking on the fact that these stocks, along with the markets, will lose a lot of their value before they move upwards. That's to be expected. If shorts do start to cover and close positions, they would want to do so at the lowest possible price before they begin.
And it takes a little bit of time.
Of course.
Just like before.
Exactly.
It doesn't happen in one day.
But I'm going to continue to keep an eye on it very closely, because at any moment things could change and just take off on us, just like they have in the past. I wouldn't be surprised to see it today in after hours. That wouldn't be shocking, to be honest with you.
Yeah,
because we've seen those gap ups. Those gap ups are nasty. Here's the other meme stocks that ran after, or some of the other meme stocks that ran after the January executive order was extended. But, you know, as you all know already, AMC and GameStop were already running and forced into PCO when these things happened. You know, Foresight Autonomous and Senseonics both over 1,000%. Advaxis and Top Ships, Guardian several 100%, you know. So it was definitely an interesting time. Like Sundial was up 1,671% on February 10th on the 1-year chart. Naked was up 1,845%. Zyomedica 3,122%. Fuel Cell Energy was up 1,200%. And again, this was on February 9th. This was several weeks after the January 13th executive order extension. So the executive order was extended on January 13th. The stocks went position close only on January 28th. And then, even into February, stocks were still running. So, if you don't understand yet, you have to realize that nothing is immediate. That's all I can say. I don't know when or what's going to happen, but I'm looking into today, next week, and the coming weeks very, very closely until I start seeing exactly what I want to see.
Let's say it. If you don't understand it at this point, go play with some fucking Legos.
It's a great way to
I
put
am.
You're differentiating between Legos and Duplos in this Discord. Thank you very much.
Orbital Energy, Jibo, and CPS were both up 1,250, 1,388, and 1,400% respectively on February 9th, 10th, and 16th. Consistent movements. Blink Charging, 678% on February 9th. STEM 414% on February 17th. Wow. Bionanogenomics 2,894%, February 16th. Ocugen Inc. 5,259%, all the way up to $15.81 on February 8th. I think you get the point, huh? The market will crash when the market wants to crash, when the market makers allow it to do so. The stocks will run when March calls. And the more that the S&P and AMC and GameStop go down, along with the S&P 500 and the NASDAQ, which are down 1.5 and 2.55% respectively, the better it is and the better chances that we actually get to see margin calls. I truly believe that. Good old Kenny Griffin. I know some people are also unaware of this, but there's 2,350 different hedge funds in China, per Bloomberg, that are on the brink of facing margin calls. They were 0.1 off from being margin called, and they are teetering on this brink at this very moment. So we'll definitely see what happens.
Let the domino effect begin.
GME's hanging out tight at 134. AMC's hanging out tight at 1262. Cool. I will take it. The staff, this is from the Federal Reserve, they state that an update on assessments of stability of the financial system and balance characterize the financial vulnerabilities of the U.S. financial system as notable. The staff judged that asset valuation pressures remain elevated. In particular, the forward price-to-earnings ratio for the S&P 500 index stood at the upper end of its historical distribution. High-yield corporate bonds spreads, and the excess loan premium for leveraged loans remains at low levels, and house prices grew strongly with price-to-rent ratios that were at elevated levels. The staff noted that the market cap of crypto had grown significantly over the past decade and experienced considerable volatility, including sizable declines since late last year. The staff changed its assessments of vulnerabilities associated with non-financial leverage from notable to moderate, noting that measures of business leverage have declined to pre-pandemic levels. Household delinquencies rates remained relatively low, while household borrowing rose, but was concentrated among prime borrowers. Vulnerabilities arising from financial leverage remained moderate. Risk-based capital ratios for banks remained above their pre-pandemic levels, even after the resumption of shareholder payouts. In contrast, here's the fun part. Some available measures of hedge fund leverage continued to increase, and important data gaps continued to limit a full assessment of vulnerabilities posed by many non-bank financial institutions. Note that the Federal Reserve is telling us that there are important data gaps that limit their assessment of vulnerabilities. This is very similar to the data gaps received from Archegos, in which the banks, the prime brokers, did not have the actual data of the swaps that Archegos was hiding their positions in, much like the current situation with many other stocks. I'll continue. Vulnerabilities associated with funding risks were considered as moderate. Prime and tax-exempt money funds continue to have structural vulnerabilities that may lead investors to withdraw funds quickly in a stress situation, and were a potential source of spillovers to other short-term funding markets. Another vulnerability in funding markets was the significant growth in stablecoin arrangements over the past few years, which may increase challenges related to run risk and poses additional risks from their potential role as a means of payment. We're talking financial runs, baby. We're definitely heard from Janet Yellen several times that the most significant vulnerabilities to financial risk are stablecoins and over-leveraged hedge funds. We've already seen the stablecoins starting to fall off the edge of the cliff. I think it's time for the hedge funds. Federal Reserve, get the fucking money printer out.
I wonder what it sounds like.
Yeah, hang on one second. I'm going to go in and turn off my noise background. You know what? Actually, it won't even make a difference because I'm not using the Discord for everybody. You wonder what it sounds like? You tell me.
I'd rather Cash tell us.
Get the goddamn money printer out, Jerome Powell. You're going to fucking need it. GameStop's hanging out at 136, making some nice movements. DWAC's hanging out slightly in the green. AMC's at 1274, slight increase as of late. Amazon as well. S&P's down 1.37, the NASDAQ 2.44, the Russell 1000 1.37. Twitter happens to be up 2.4%. That's really quite interesting as well. Good old Mullen. Mullen is hanging tight, man. I'm surprised. I'm surprised they didn't get beat further down. Well, not yet at least, right? You don't ever know what the fuck's going to happen. I'd like to show you this is the AMC chart for January 27th, 2021. This is where AMC ran from around, where were we at here? I can't even fucking see it properly here, but there you go. Ran right around the $3 range up to around up just above $20. That put us around 2,300%. No, not quite, not 2,300% at the time. That was around 1,400% gains in January for AMC. Then looking at the June 2nd chart, this is where we had 23%, 2,330% year over year, or year to date, I should say, 1 year gains on June 2nd for the ending closing price of around $72.50. But again, remember, that was June 2nd, 2021. That executive order started May 27th, 2021. Not June 2nd. It just happens that on June 3rd, it was extended by Biden for 365 days. So, Executive Order 14032 adds an additional 30 military companies on top of the original 30, plus another 30 on top of the Federal 22's Federal Registry. So now we're looking at 90 different companies that are combined on these three executive orders. Executive Order 14032 states that banks and prime brokers had to start divesting by August 2021 for the deadline of June 3rd before the collateral becomes worthless again. But they only started divesting in May, and we know that for a fact because that's the first time that BlackRock showed sales of Chinese emerging markets funds from their ETFs, and that was around $370 million worth. That means they still have billions, if not hundreds of billions of dollars worth of that collateral. So, in addition, we talked about this previously in the channel with the haircuts. A lot of people seem to think that this is the same as it was before, but it's not. Because large institutions like JP Morgan, for example, can no longer rehypothecate their assets to their clients' hedge funds or to their offshore banks, their sub-banks, because of the DTCC 16845-22, which can be used as collateral to prop up their maintenance margin to short stocks like AMC and GameStop. This also shows why we didn't see the MOAS straight away in January and June. Because Citadel and Susquehanna closed a fraction of their AMC shorts, and then JP Morgan stepped in by rehypothecating their assets, along with Citadel, to prop up their maintenance margin, prevent a full-scale default while they were being squeezed because of the executive order, and still led to the January 28th PCO. Now, this is rehypothecations. Scott owns a house. His house goes to the bank as collateral, and then that bank hands it to another bank. That's a rehypothecation. That's a re-borrowing, or should I say, re-lending of a securities that's already lent to you. That's the problem. So now they can no longer do this to their asset or their client funds, which means that as soon that around this date, shorts should be forced to close their positions, and are going to use the SFT liquidity program to push it off as long as possible. So it is possible that we don't see any price action today. I hate to say it. Do I think that's going to happen for sure? Nah, I suspect we'll see something. But I think we've already begun to see it by the decrease in prices. Now, keep in mind, these numbers are in the millions of dollars. So you have to multiply 52 million times 52 million. And that's, let's see here, $52 trillion. And that's $3.2 trillion. So JP Morgan, they have $3.2 trillion in derivative in assets, total assets, yet they maintain $52 trillion worth of total derivatives. The way that they do this is through rehypothecations and over-leveraging. And it's the same thing for all of these banks. This $387 billion worth of assets for Goldman Sachs backs up their $48.3 trillion worth of derivatives. Are you starting to understand why the Office of the Comptroller of the Currency gives us these reports? When they're over-leveraged this far over, something's got to give. Now we know that the two main holders of the Thrift Savings Plan are BlackRock and State Street Bank. And State Street Bank only has $319 billion worth of assets with $2.3 trillion worth of derivatives. So I hope that goes to further expand upon a little bit on what we've been discussing. Here's AMC. Shareholder holdings. Vanguard owns 9% of AMC shares, according to what we know here. BlackRock owns about 8.35%, and BlackRock's got about, they collectively own around 20% of AMC's outstanding shares, and they've loaned them out to companies like Susquehanna and Citadel, and they're going to be forced to buy in and return to their lenders. So the reason that you're seeing the maintenance margin and the cost to borrow rising on stocks like AMC and GameStop is because lenders are seeing the risk that's being posed. And I'll show it to you right here. I'll go to the other one because it's got 4 different stocks on it. Lenders are worried whether or not short sellers can repay this stuff in the event of a squeeze, and they're going to eventually, they're going to partially hedge against it by increasing the borrow fee to discourage short selling. So AMC's cost to borrow max is currently around 19.83%. BBIG's is around 300%. Biora Therapeutics, which is formerly known as Progenity, is at 261%. And GameStop, GME's cost to borrow max is at 288%. They really want to discourage further shorting on these stocks. Here you can see dark pool volume. Negative net short. All this negative net short volume is buying in dark pools, for those of you that are unaware. This is where a lot of the FTDs come from. And when did these happen? The end of May and the beginning of June, June 1st, 2021, was the net short volume, the largest net short volume, June 1st and June 2nd, 2021. As you can see from this chart clearly right in front of you. Let me just make sure it's showing. Yep, there it is. There you can see the date right down here. I'm circling with my mouse. This is massive, massive dark pool volume. And here is the price. The price on June 1st and June 2nd. June 2nd, we hit $72 on AMC. Crazy, crazy. So SEC wants to tell us to do our due diligence. I'd say we're fucking doing it. I'd say it's right here in front of me. AMC failures to deliver. When were they highest? The end of May and the beginning of June 2021, when the executive order 365 days ago, well, it took effect a little over a year ago, and it was extended 7 days later or so on June 3rd, and that's why the failures to deliver are the highest, in my opinion, at the end of May and the beginning of June, right here. This was right here, right at June 1st or so. Actually, you can say it's the end of May, but this is also June right here for the rest of the month. This is aggregate, so it will go up and down. But as you can see, it all just fell down off the cliff right there because the executive order gave them their margin back. I would suspect, because this is T plus 35 data, in about 35 days, we'll see these numbers shoot up again. That's why these numbers are here in June instead of before as well. You see shares failure to deliver for AMC closing price. And see here you go, 4.5 million shares and failures to deliver, almost 5.5 million in May, 4.5 million in June, and that's aggregate data. All right, and here the share price when the failures to deliver were at their highest, and the in May and June, we were at around $70, $60, $50, etc. We're fucking winning. But again, this is T35 data. So even though this is here right now, and the price at that time in mid-June was $56 or $58, this was occurred 35 days prior over here when the stock price was shooting up towards 72 at the end of May and the beginning of June. Yeah, we're in for a fun time. Now I'm just going to kick back and relax. I have explained, I've spent the last 3.5 hours explaining Executive Orders 13959 and 14032 and 13974 in full detail from the United States Treasury and the Office of the Financial Foreign Asset Controls, OFAC. Now, nobody needs to believe anything that I'm saying. I hope you do your own due diligence. And I hope you come up with your own conviction and are ready for the things that we're about to see in the coming days, hours, days, and weeks. Because it's going to be time for Jerome Powell and Ken Griffin to get the fucking money printer out. It's about that fucking time.
Pray tell, how does a money printer sound?
Money printer goes burr, motherfuckers.
Burr, burr, burr.
Yeah, that's phenomenal. Again, looking at the stock price. The open was 1861, the low was 1831, the high was 2976, and the close was 2652 with 705 million volume. Okay, May 21st, we had 53 million volume. That was before the executive order last year. Right now, we are seeing extremely low volume. That means to me, we're only at 25.2 million volume today. That means to me, nothing has happened yet. This is just, we're just hanging out. We're having a good time. They have not started doing anything beyond the normal algorithmic trading and shorting that usually is occurring, for the most part. But this is right along the line. Go ahead, Cash.
It's not quiet before the bird.
Exactly. Exactly, dude. Taking a look at it here, when we had 89 million, 60 million, and 53 million volume, what happened to the stock price? It stayed the same, went down 40 cents. Then we had 113 million volume, and the price went up $1. We had 213 million volume on May 25th, and the price went up about $2, $3. We had 379 million volume on May 26th, and we went up $2 more. Then we had 705 million volume on May 27th, and we went from 1861 to 2976 and closed at 2652. And then this is why the after hours and the pre-market are so important, because we gapped up. And after hours on May 27th, the day of the executive order, we gapped up. And we opened the next day at 3181. So you know what? I'm going to be watching this thing until fucking market, until after hours closes. That's me personally. You don't have to watch the line. You don't have to do anything you don't want to. But me, that's what I think is going to be important. The after hours.
We're really a little bit early.
We are early, of course.
Right on time.
Well, exactly. But here's the thing about the markets. You're either early or you're late. There's no right on time.
Yeah.
If you try to be right on time, you're going to get fucked.
You're right, and nobody gets paid for being late.
Yeah. So I'm going to remain confident in everything that we've discussed over the last 9 months on this channel. And I'm looking forward to see how things progress throughout the rest of the day. In the meantime, we're just going to fucking hang out. Have a good time. And enjoy ourselves. And watch the market bleed a little bit.
We're gonna be so goddamn rich.
Man, you ain't fucking lying. Let's chill that out. Where's my man Wolfie?
We own it 5 times over.
Where the fucking whale?
Boss, I gotta say, I got a really good laugh when Wolfie said pulp.
When Wolfie said what?
When Wolfie called me pulp.
Oh.
Yo, I was in the hospital. I was dying laughing. That shit had me rolling.
That's funny, dude. That's great, Pop. We're the fucking whale. plain and simple.
Well, that's the thing when people talk about VW, they keep saying, oh, it's different, it's different. It is. Of course it is. But in some ways, I think it's stronger because you're dealing with people, say the majority, haven't had it. But I don't know any billionaires that have been buying shares.
Well, you know what's wild? Wolfie, the Porsche settled with the government in 2008 and said, all right, that's enough.
Yep.
That was one whale. We are the mother of all whales.
Yeah, there's no settling with us. There's no settling with us.
Yeah, with us.
We're the board, man. You cannot reason with us. You know what I'm saying?
Exactly.
We're going to assimilate you.
No matter how much they offer, there's going to be people saying, fuck that, I want double, triple, 5 times that amount. No matter what they offer.
100.
They could offer 100 grand a share, and I guarantee you 40% of the people would be like, fuck you, I want 500 grand a share, you know? That's what people are like, it's GameStop. I want 2 million a share.
I want Wall Street to get turned upside down, and I want to see a bunch of motherfuckers who are literally evil end up on the fucking street. You know?
Hey, boss.
I can't wait for fucking Biden to get on TV and stutter away and say, all right, there's enough of this. Gary Gensler and then the Fed. It's going to be phenomenal. This is great. I love it.
They might try to sweep it under the rug. They might just try to sweep it under the rug and be like, oh, all these hedge funds fucked us. Let's never talk about this again. You know, and that's it. So.
But that's why I love the fact that it's between 5 and 10 million people. Because the eyes are on this, you know, the noise has been made. And when it comes out, you're going to have 5-10 million
goddamn right, Wolfie.
Burries that have all got a tale to tell.
Hey, boss.
You know, there's going to be serious questions asked to the regulatory bodies that what the hell happened after 2008 and why didn't you put the rule changes in 2012? And what do you mean the only thing you did of any essence was an SSR rule and then made market makers exempt? You know, they're going to be serious questions, but then they got on the other side, they got a massive transfer of wealth to people that are going to have the time.
4 by 4 instead of popping out. It was like,
Sorry about that.
For me, is change. 5-10 million people suddenly come into a serious amount of money, if that's how it ends up, because no financial advice. But if it works the way, you know, those who have, for the reasons they have, expect, you know, I'm hoping that's going to really change. And when I look at the SEC rule changes, etc., that's what actually gives me even more. I know, you know, a lot of people are down because it took so long and this, that and the other, not really seeing it, but that's background. That DOJ announcement for me was massive. I think that's why people get nervous when people start saying, oh, it's going to. And we've had, you know, I flagged it up, not that it got picked up on, but, you know, we've got real smart people that have been looking at this, real smart apes and DD done, etc. What if they was all meant to be correct? What if they were all correct, but because of everything going on in the background with the manipulation and the tricks and the market exempts and with all that going on, which is now known. I never knew none of this a year ago, 18 months ago. I never knew about market exempts. I didn't know they could do a naked share without a locate. And all this is coming out, and they're going to be serious questions saying, that's not liquidity. That, you know, there's court cases, there's a paper trail going back 20 years on this stuff. None of this is new. And when it comes out, it's blown wide open. It's not, you know, UK was told
$30
yeah,
has arrived.
You ain't missed it.
Go ahead, brother. You're making a great point. Keep going, brother.
Go ahead.
Yeah, sorry, I just got cut off and then everyone pulled in, so I sort of lost trail. But it's that paper trail, which it's the aftermath of us hitting a home run, where we would have done money. And yet we've been here, you know, 2008 woke a lot of people up, but a lot of people still don't know the truth behind that. They've all watched The Big Short, etc., but they still don't know the truth. They just see it as it's what happens in the market. This time round, we've been told by all MSMs, you know, the Gasparinos and, you know, I don't even like mentioning their names and give them airtime, but hold them responsible afterwards, because you're going to have all these experts that are on the telly getting paid hundreds of thousands of nice suits, talking down to us like we're all idiots, and insinuating everyone's like 16, 18, living at home with their mum, you know, never had to live in the real world. Bar. Come on now. This is people. These are the same people that the rules and the 1%ers and the stock market has ripped from your 401ks and lied to us. You know, this is blatant lies. This is theft. This isn't just the market and how it works. You know, dumb money loses money. Well, if you listen to the experts, everyone who bought AMC and only AMC has made a shit ton more than any of them experts have. And yet we're still held out as the ones that are the idiots. And when they want to talk and they want to go on and do their interviews, start talking about the real stuff. Because if you don't, afterwards, you're going to have no credibility because everyone's going to say, we told you, we told you, we told you. And you kept telling everyone not to put us off because we was already in it, proved we weren't leaving, proved we weren't going nowhere. You came on MSN to tell everybody else whose money you had, every other investor, everybody who had a 401 and never invested in the market or a share or Apple, who lost their pension now, not because of us, we're the cure, not the cause. You told them that we were wrong and you were right. You told them we were dumb money and you told them to go and buy Apple because it's going to hit a $3 trillion market and it tanked. And they're the same people you did it to in 2008. My mum and dad, working 18 hours a day to pay a 17% mortgage because of some greedy bank that we had to bail out afterwards, that we had to have austerity afterwards, we had to suffer afterwards so that they carried on getting richer and nothing changed. Damn! You answer that. You tell the people that. You come back and explain that.
Fuck yeah, that's exactly right.
Goddamn right, brother. Nothing fucking changed. We lost our fucking pensions, 401ks, life savings, our homes, our cars, everything, our jobs. And then we had to give them billions of dollars in fucking bailouts. Fuck these banks. It's our fucking time. $30 fucking dollars. Let's keep it fucking going.
That's right.
Wolfie,
that's
people
right.
are loving it, dude. Everyone feels that shit, dude. 100%, brother. Everyone is giving you so much props, man. You are fucking on point, and everybody knows it, man. No matter what the mainstream media wants to tell others, what they want to preach, I don't give a fuck if CNBC is owned by Citadel. I don't give a fuck that Pfizer owns CNN. We know what's really going on here. So thank you very much for that, brother. By all means.
Appreciate you, brother.
No worries, man. We've got to speak up for the millions that ain't here now. Don't forget, there's people gone from that. That 2008 hurt a lot of innocent people. And you'll be walking around. I do it every day. I've done it every day since January when I bought in. This was my chance to pay them back. But I walk around and it's like you see the scenes in some of the films when they're driving around in a car. I can't think what the margin called the film. When he's driving around in that car and he's got the young lad next to him and the young lad's attitude is, I don't give a shit, you know, until you realise he's even going to be paid. But they're looking out the window and they're looking at all the people that just do not know. So if you're going to do things in your community, A1, top of my list, family, A2, top of my list, make sure you get that word out amongst the people you've got, because they call you stupid at day. Look at Burry, he's been wrong more times than he's right, but everyone holds him up as an expert. He sees something that we all see. You know, DFE started this ball rolling in GME, that's going to do its thing as well. You know, all this infighting and stuff, that has to stop, because it's me, you against them, it's not me against you. I mean, how does that work? They want it, we got all the bots arguing with bots and we all jump in on it. No. Start talking about the people that were hurt, the people that have been forgotten. Go and have a look at the Wall Street Conspiracy, the film that they pulled 5 minutes before it's due to air in America. Go and have a look at Darren Saunders walking around with the placards on. That man died fighting what we're fighting today. You know, there's good people that ain't here today. We need to remember them and we need to be loud after this. It's not because we're rich, not because we're arrogant bastards that turned into the people that we're fighting against, but because we care and we want change. We want these fuckers held accountable. Running around in their planes when we can't even go out, can't even visit our mums. Come on now. Change. We need change.
Fuck, man, I will vote for you. Just fucking run.
Wolfie, president.
Bro, for real.
Prime Minister, everything. Wolfie, thanks so much for sharing with us. May 6th, I quoted, I posted about Americans' $4.07 trillion in savings turning into $1.15 trillion by Q1 of this year with personal savings. I sent Dr. Michael Burry an email and basically he tweeted the exact same chart the same day. He said U.S. personal savings fell to 2013 levels, the savings rate to 2008 levels, while revolving credit card debt grew at a record-setting pace back to pre-COVID peak despite all those trillions of cash dropped in their laps. Looming a consumer recession and more earnings trouble. I'll take that as a reply. Thank you, Dr. Murray.
Hey, boss, is it mimosa time?
Come again?
I said, is it mimosa time?
Mimosa time? Maybe, not a bad idea. But yeah, I have not, I'm not in the mood for a drink right now, personally. We'll have one a little bit later. I'll have a smoke with you, though, that's for sure. Let's jump all the way down. I'm going to stop sharing my screen here on Discord. Reverse repurchase program operations for today are over $2.03 trillion. $2 trillion in reverse repurchase program operations for today at the fixed rate of 0.8%, which is up from the original rate of 0.05%. The banks need an ever-increasing amounts of fixed rate interest, and there was 101 counterparties. 101 counterparties. Oh, Spot Rusher, you can't handle being down a little bit? That's too bad, man. Maybe you should just sell off your positions and get out of here. That's cute, man. I love trolls. Trolls are the best. Glencore entered guilty pleas to foreign bribery and market manipulation schemes on Tuesday, May 24th. The Swiss firm agreed to pay over $1.1 billion. There was a decade-long scheme to manipulate fuel oil prices at two of the busiest commercial shipping ports in the United States. Glencore agreed to pay over $341 million over the next few years, forfeitures of $144 million, and they're even going to get a credit for one half of the fine. So literally half of the fine is being credited to them against penalties pays to the CFTC in a related parallel civil proceeding. So because of other proceedings that they're having, they're getting a half-off deal on this thing. The scope of this criminal bribery is staggering, according to U.S. Attorney Damian Williams for the Southern District of New York. He said Glencore paid bribes to secure oil contracts, avoid government audits, bribe judges to make lawsuits disappear. At bottom, Glencore paid bribes to make money, and it did so with the approval and even encouragement of its top executives. The criminal charges filed against Glencore in the Southern District of New York are another step in making clear that not one, not even multinational corporations are above the law. It's just disgusting. It's sickening the amount of fraud that's happening on our markets every single day. It's really quite bad. But that's why we continue doing what we do, I would suppose. At least the majority of people. Cool. AMC hanging strong at 1272. Apple is down 3.87% still. This is a fucking fantastic buying opportunity for meme stocks, in my opinion. Fucking phenomenal. As a matter of fact, I may just have to do that. I just have to take a moment and buy a few. costs. The lowly meme stock hanging out, up for no fucking reason, 8%. Okay. That's cool. This is from the Agriculture and Wildlife Fund from Panda. Basically, they're delving into Dr. Burry's investment philosophy. And basically, when it comes to analyzing companies, their philosophy is 50% value and 50% global macro in the grand scheme of things. And that's pretty much the investment approach that I've taken with AMC and GameStop for the most part, because when I originally jumped in, I realized that AMC and GameStop were undervalued, in my opinion. And the global macro structure is pointing us in a direction that shows us what has happened in the past and what is likely to happen again. When it comes to analyzing companies, we focus on critical value points, paying special attention to cash flow generation. As portfolio managers, however, we also look at the global environment and macroeconomic trends. In fact, one of the reasons that for starting Panda was having identified agriculture as one of the strongest macroeconomic trends in decades. And as you guys have seen, the prices of wheat and food and agriculture has skyrocketed. Said DWAG took a turn into the green. Did I just see that correctly? Yeah, it just went up higher. Yep, awfully stagnant right now on the markets. AMC with 26.5 million volume. No real movement there yet. Cost is up 8% with 101,000 volume. A much smaller float. And the SQQQ has already had 100 million volume, 106 million, with a 7.2% increase, as the NASDAQ composite is now down 2%, 2 full percentage points. There you have it. Beautiful gap down in the morning, multiple retests of resistance, and just kind of hanging out at this little channel here between 12,000 and just under 12,075 for quite a while now. It's right back where we were several hours ago, and we were using that previously as a support, now using it as a resistance. Thanks, Donna. Appreciate you. Limo, is this how you're listening right now? That's fantastic, man. I like your car. You're set up. All right. Off exchange volume for 6/3 so far as of about 15 minutes ago. 56% of AMC's trades have happened in dark pools. 56.75%. It just off the exchange. You got to remember that EDGX, NYSE, and ARCA, as well as NASDAQ, SIBO, BZX, and MEMX, all use dark pools for the most part to process trades or route to orders and market makers like Citadel Securities, who then use their dark pool. But yeah, thanks again, you guys, for the RRP at $2.0 trillion. It's a huge indicator on what's happening here. Wolfie for president. Fuck yeah, Empire. And would you look at that? Now the United States is talking rolling blackouts. Queen Bee in the think tank coming through clutch. Unreal. Federal energy officials are warning that the power grid in the central United States could be forced to impose rotating blackouts on some of the hottest days of the summer due to rising demand and plant retirements. Well, would you look at that? The Midwest is going to start seeing blackouts. Great. That's great for me and here in Chicago and a lot of other people, I bet.
Oh, yeah.
I don't think many people understand just how serious this shit's about to get. Rolling fucking
Lego by
blackouts.
lamplight.
What's that, dude? Lego by lamplight.
Lego by lamplight.
Yeah. You're going to be using an old torch. An oil lamp.
Kerosene lantern.
Yeah. People still keep those things around for a reason, I suppose. Times like these. A-Rod money, when's so fucking rich? I don't know, man. When this fucking shit goes down, dude. I can't tell you when Marge is going to call. I could be like FX Hedge and say 2 p.m. Eastern time, margin calls. Well, what the fuck would be the point of that?
I like BBIG's on or about. That's a good one.
On or about May 27th being, and now it's being moved over to June.
On or about end of Q2.
Which is, yeah, June.
No, margin calls. On or about soon.
Yeah. Like BBIG's Cryptide dividend. Cheers, motherfuckers. We're gonna be fucking rich. So fucking rich. And I'll be more than happy if the naysayers go ahead and don't follow me to my riches. That's for damn sure. It's gonna be funny to watch him FOMO in when AMC hits triple digits, though. Yeah, this is why we're fighting. This is why we're fighting.
Well, that's one thing, boss. Do you think they're gonna take away that FOMO, man? I've been hearing a lot about that, the FOMO aspect of it.
Well, you can't take away people's emotions.
And you can't take away people's rights to buy stocks that they like at any given price that they want.
This is correct.
Yeah, that's the way I've been thinking about it too. But a lot of the other people have been describing it like, when it's time to cover that FOMO aspect, that they're gonna get rid of it, in order so it doesn't, the buying pressure doesn't become higher. In a sense where more shorts are made and this whole thing just doesn't end. So that's really what I've been hearing about.
You can't shut down the FOMO unless you take away the buy button again, and that'd be really dangerous of them.
Yeah, I bet you.
I
bet you millions of investors would not stand for that. There's a lot more investors now than there were back in January 2021, and I have a feeling the pitchforks would probably come out from some very angry people.
Yes, the pitchforks.
Are they clanking? Can you hear it?
The pitchforks are a clanking. You know, I don't live that far from Citadel, so if that were to happen, I wouldn't be opposed to taking a little drive out to Citadel and protesting. Why the fuck not? I don't care what people say or what other people think about it. But I'd be more than happy to go down the street on Dearborn and grab CNBC and ABC News and, hey, come on down here. I got something to tell you about Citadel. We can hang out in front of the Citadel building. And tell people some of the realities as to what's really going on mainstream media.
And that's the big thing, boss. You know, I really think that we're really suppressed in our voice. A lot of the media is not covering, and really with the whole thing with social media, man, we're getting shadow banned the hell out of our truth. So it's kind of fucked up how this whole thing works. You know, we can't even speak without us getting suppressed. So. Yeah, let's hope Reverend Elon helps us with this Twitter shit.
It's a beautiful day out. Christopher, thank you for your support, my friend. Aaron, I wouldn't be, I would laugh, my friend, if you did that. Let's just put it that way. That'd be pretty funny. Take a look at this order pinning down AMC. 15,000 shares at $12.95 a share for sale right here. 15.2 thousand shares, 4.9 thousand shares, 5.3 thousand and 5.2 thousand. Clear indications of market makers you could call either layering or you could call it spoofing. There's multiple layers, things that could be happening here right now. But this 5,200 share order at 1310 and 1303, 5,300 shares, those are both those are both signals for the algorithm as spoofing and layering. Some of these orders may be processed, but the majority of these here are probably going to be canceled before they get to the top of the order book because they are layered in order to cause the algorithm to trade in a certain fashion. This was taken moments ago here. Thank you, Pup Dino and the Think Tank, for posting that up for us, brother. You're the man. Thank you. Thanks, Silverback. Appreciate you, brother. Let's take a look at a little AMCTA while we're at it. And it does look like a breakout is forming. I'll put it on one screen for you guys so we see it better. Yeah, it does appear to be an interesting formation. Following along here and here, it looks like we've broken out from the trend pattern. I'm looking at Elliott wave with a 1, 2, 3, 4, 5 movement. Let's see if it moves. I'm going to give it time. It's still early in the day, and we still got many days ahead of us in the month of June. Yep, Elon Musk asked Tesla executives to pause all hiring and is cutting 10% of staff, around 10,000 people, I believe. Thanks, Donna. Good looking out. Thanks for posting that up for people to see it. How's, oh, what would you look at that? Well, everything appears to be red on the markets except for meme stocks like iBio up 9.4%, COS up 8.74%, Onconova Therapeutics 5.5, 5.25, Mullen a little bit 3%, Viking Therapeutics 3%, BioLays the same. Yeah, iBio, COS, and OnTX look awfully similar on their charts, including Viking. And for people that want to get a better indication of what happens to the stock market when the Fed starts to sell off their balance sheet, well, this is what happens. The green is the Fed, the European Central Bank, and the Bank of Japan balance sheet. And the black is the global Dow Jones. And you can see that it looks like this because they are propping it up. Here in 2008, during the financial collapse, the global Dow crushed from 15,000 to around 2,000. And the quantitative easing that occurred in the green chart, the printing of money from the European Central Bank, Bank of Japan, and the United States, is what caused our asset sheets, our balance sheets, to increase, which is what's causing hyperinflation, and is also propping up the stock markets, the Dow, the S&P, global GDP, etc. That's why we're seeing hyperinflation around the world, and we are nowhere near the peak. If you think we're near the peak, we're not. I don't want to be rude, but we're not. Thanks, Jambams. That was fire. Suburban Drone on Twitter. Check out Suburban Drone. MacTon. He's always posting great shit. And again, as we've seen, oh, would you look at that? As we've continued to state, just because you don't see changes in price action does not mean things are happening. Things are not happening. The price, the cost to borrow has increased from yesterday, 8.4%, to today, 8.2%. Sorry, it was 8.4% yesterday, 8.2% this morning, and is now increased to 9.8% as of this morning, and as of this afternoon is at 10.4%. This is probably a sign that the SFT program is being used, the pawn shop is being used, and the cost to borrow is already increased, and there is only 2,000 shares available to borrow. Good luck, hedgies. We haven't even gotten to Power Hour yet. God damn, this is going to be fun. These coming weeks are going to be amazing. I'm so fucking pumped. I'm not even going to read that out loud. I don't want to say that out loud. CVS Frog, thank you very much for your support, for being a supporter of the think tank. Christopher Chestnut, you as well. We appreciate you. Thor Bladed, thanks for everything and your support with the think tank. He says, buy and hodl apes. I know we're all feeling the inflation. Good things come to those who wait. Patience ain't apes. My man. Eric Everhart, thank you as well. And Daniel, Counselor Murray, appreciate your support, guys. You guys are the best. You guys help keep the think tank running, so thank you for that. My man. He wants that? All right. I like it.
Hey, boss.
What's up, man?
What exactly is Power Hour? Because I've heard of it, but I don't really understand it.
Oh, no worries. It's just the last hour of the day, from 3 p.m. to 4 p.m. Eastern Time. It's called Power Hour because usually you'll see a lot of crazy shit happen when things happen. They often happen in first minutes of the market open or in Power Hour, related to many things, including earnings and artificial injections of money by plunge protection team and ETF rebalancing and so on. So there's a lot of things that happen in Power Hour. That's why we call it that.
Okay, thank you.
Yeah, no problem. Anybody else got any questions? I mean, you're more than welcome to ask. I'm just hanging out,
Yeah,
having a good time,
boss.
just like any other day.
Invisible shared something down in Ape Chat just a couple of minutes ago, with an Vortex screenshot.
Is it going to make my titties get chafed from my diamond,
Yes.
my diamond tits? All right, let's go
Yes.
check it out. Where the hell did that just go? Oh, there we go. Thanks, Mancheska. We appreciate you as well. Wolfie, I'm glad you could make it, my friend. Even higher now. Well, let's take a look and see what's happened in the last few moments. Oh, well, would you look at that?
Have a look at the cost to borrow.
The cost to borrow minimum has increased to 5.1%. The cost to borrow average is still 14.2, and the cost to borrow max is 19.21%. With
are your tits getting jacked?
Oh yeah, that's fucking bullish, baby. I love it. Apish, call it what you want. Estimated short interest 23.42%. What a fucking joke, Ken Griffin. I can't wait to watch you lose all that money, Kenny. Oh, it's going to be hilarious. Gabe Forskin from Melvin Capital. They're unwinding by June 11th. Remember, people? Gabe Plotskin from Melvin is unwinding Melvin Capital by June 11th. Today's the 3rd. Shit's got to go down at some point. I love that Fortune magazine says the meme stock revolution is over. Most U.S. retail investors have sold. Meanwhile, Adam Aaron has confirmed that verifiably 90% of the 513 million AMC shares are held by retail investors. No other stock can say that but AMC. No other stock. There's 4,000 plus people hanging out right now in this Discord. And there's several thousand on YouTube right now. And we're also streaming. We're going to be streaming on Spotify and putting it on. And it's on Rumble. So, are you going to tell me that right now all the people sharing this information on Reddit and Twitter, we're not going to be eventually seeing some price action here, even if it takes a little while? I'd be hard-pressed to believe that. Thanks, Pantheon, for sharing that. Make sure you guys check out Pantheon AMC on YouTube. This guy's always sharing fantastic information. Fantastic.
Oh, and the voice.
And the voice.
Soothing voice on that man.
Soothing, smooth sounds of Pantheon AMC Radio. Go check him out. He's not streaming right now, but he does stream fairly often, and it's always quality macro and diligence. Never trust me, bro, bullshit. Oh, I can't read that one from Barron's, but whatever.
the Securities and Exchange Commission, and some shocking findings concerning senior staff and online pornography. CBS News correspondent Nancy Cortez is in Washington with the details. Good morning, Nancy.
Good morning, Betty. That's right. An internal investigation finds that officials at the federal agency responsible for policing our financial system were, in some cases, spending the majority of their days looking at and downloading porn.
Oh, no kidding.
The internal investigation probed into 33 cases of senior SEC officials surfing the web for explicit images. 31 of the cases were in the last 2.5 years alone, during the Bernie Madoff scandal and a near collapse of our financial markets. The report had some astonishing findings. 17 of the employees were at a senior level, earning salaries of up to $222,000 a year. One senior attorney. 17 of the employees were at a senior level, earning salaries of up to $222,000 a year. One senior attorney spent up to 8 hours a day looking at and
8 hours a day, getting paid $222,000 a year. So making around, around $18,000, $19,000 a month. No, a little bit more, probably around 20 grand a month. Pretty cool, man. Pretty cool. 20 grand a month to watch and download fucking porn. How many of them? 17 of them.
What they don't tell you is the porn they're watching is retail investors selling their shares.
Yeah, it ain't happening. They're just circle jerking over there.
He ran out of space on his hard drive and burned files.
Did you guys just hear that?
Files to DVDs, which he kept in boxes in his office. An accountant who was blocked more than 16,000 times in 1 month from visiting websites with explicit material found a way to bypass the SEC's filter and amass a collection of, quote, very graphic material. And another accountant admitted he accessed pornography on his SEC-issued laptop computer while on official government travel. The SEC report says the behavior violated government-wide ethics rules. At least one employee resigned. Another received a 14-day suspension. The ranking Republican on the Oversight Committee, Congressman Darrell Issa, is blasting the SEC.
Gary Gensler.
He says these high-ranking officials were...
Gary Gensler, where's my fucking whistleblower money? You're paying these assholes $222,000 a year to watch porn for 8 hours a fucking day, and I'm right fucking here doing it for you for free. You fucking... Please, Gary Gensler, I think you owe me some whistleblower money, man. Get the fuck out of here. Jesus.
Quote, spending more time looking at porn than taking action to help stave off the events that put our nation's economy on the brink of collapse. Betty?
We're the ones who aren't doing research.
I mean, that's actually $125 an hour just to watch porn. I could do that. I do it for 100.
Oh my god. Holy fuck, you ran out of space, so he burned it to flash drives and DVDs. Holy fuck. What a fucking degenerate. Holy shit. 17 SEC employees, up to 8 hours a day, 222 grand a year. For this shit?
Yeah, that's
for this shit,
$125 an hour to do that.
For naked shorts and synthetic shares, married puts and divorced puts, rehypothecations. The SSR uptick rule that means absolutely nothing because market makers can short the stock in the name of liquidity at any fucking moment they want with no reason. Marking shorts as long because everything's self-reported. And the SEC is watching porn. What a fucking joke. I can't wait. Can't wait to make money and be on my way. This could be a tough one. Oh, man.
Hey, they were told to watch the candles go up and down.
They were watching the candles going up and down, all right. Labor markets are tighter today than they were 6 months ago, but wage growth is lower This is the change in average hourly earnings across all private industries. A 1 month change in blue and a 3 month change in orange. So our last 3 months wages are down, and 1 month change is a monthly change here you can see is decreasing as well. Great. He said there are three possibilities here, according to Jason Furman. Some of the wage increases in 2021 were one-time adjustments as the economy was reopening or compensating differentials for increased risk. They're going away. Wages won't provide support for underlying inflation well over 3%. The employment report data is noisy, and the totality of data does not show a slowdown. You don't see a slowdown of ECI, especially subtracting incentive pay or per hour productivity. The wage tracker is not decelerated, so maybe wage growth is steadier around 5.5%. Or, yes, underlying wage growth has been slower, but it won't keep slowing. It will start to pick up as, for example, staggered wage setting catches up to the price increases we've seen. So expect more likely a 5.5% plus increase in wage growth, which, if it did happen, will make getting the Fed inflation target rate under 3% very difficult. One way or another, no matter how you look at it, the Fed's got to crash the market in order to fix inflation, because everything is overvalued. And this is Professor Jason Furman of practice at Harvard, teaches EC10, and some tweets are educational. He says he was the chairman of President Obama's CEA. And pretty cool. He's a very educated individual. Take a look at what he's got posted as his background. The prime age male labor force participation rate has decreased from nearly 98% down to 88%. And the prime age female labor force participation rate was increasing from the 1948 through 1990 or through the 1990s, but decreased in the early 1990s through 2007 and 2007 trend, because women and men are now leaving the workforce. Previously, women were coming to the workforce because we had a strong economy. Now both women and men are leaving the workforce. Simple. But yet Janet Yellen tells us that they didn't fully understand the causes of inflation. Unfucking believable. This is great, man. You guys have been coming out with some fire information today. You guys are always on it, but it's been particularly hot, so good stuff. Nice beach guy picking up some coins, it looks like. It's good to have. Lego Pickle Snake. He's building a Lego set throughout this entire stream. He's trying to get a Volkswagen bus built, it looks like, but man, that's going to be a while. So yeah, I don't think you're going to get that done in one day, brother. That's a big undertaking.
We shall see.
We shall see. He's over there popping Adderall. Get ready.
Snorting
Snorting Adderall like a real degenerate. Getting calls.
I filled out a job application to the SEC.
I bet you did, you fucking degenerate.
I mean, this looking at porn for 8 hours a day, that's child's play for cash. He's looking at his VIX all day long. I mean,
he's
that's
stroking his
porn
VIX
right
all
there.
day long anyway, so what the fuck's the difference?
Maybe not in that order, but yeah.
It's fucking great. No worries, Ryman. No worries on the hot mic, man. Shit happens. Can't authenticate. What nonsense is that? Oh yeah, that does look fairly similar. Like Unusual Whales gave us percentage change charts from 2008 financial crisis compared to 2021 through 2022, and I'd say it looks about the same. I'd say it looks very fucking similar. Oh, that's eerily similar. Props to Unusual Whales, always coming out with quality data for us. From Fidelity's newsfeed, Meta files for potential secondary offering. Yeah, Facebook's not. Is it nothing burger for Facebook going on, except they're changing their name, I think, to Meta pretty soon, and their ticker. Detonator. What do you got for me on the SPY, brother? What are we looking at here? Oh, yeah. Yeah, we're going out to test the lower 4-ton level again. Yeah, I fucking knew it. Sorry, sometimes I forget I'm even fucking streaming.
That's when you know you're comfortable.
I suppose. Holy shit, that's a lot of jobless claims. Hold on. There you go. That's the 7-day moving average for jobless claims, everybody. If you can't see this, let's just say it's jumped exponentially beginning around mid 2021. And that's through CPI data of June 10th, 2022. How can that be? Oh, okay. It's kind of looking forward. This is from the RRP of 6.3. Yep, and the treasury. So this was today. Thank you very much for this chart. And it's in the amounts of thousands of billions. So that's 2,000 billion. Would that be 2 trillion? $2 trillion, yeah, sure is.
Yep.
Okay. Very interesting. Well, and that's our RRP actually with a moving 7-day average. That's really interesting. I like to look at it. I don't really ever look at it in that way. So thanks for showing it to me like that, man. It's different perspectives from different people. It's kind of cool. Oh, wow. Guys, what have we just been saying for so long now? All of you, all of us together here on YouTube and the think tank. Russia's Putin says the U.S. decision to print money led to increase in global food prices. Well, he's not lying. Take the emotion out for a moment, says Gold Telegraph. Putin says the U.S. decision to print money led the increase in gold. Russia's making $800 million a day from oil and gas and is hoarding gold alongside countries within BRICS. You know, China, Brazil, etc. When will people see what is happening? It's infuriating. China sentences a former Communist Party city chief and securities regulator to death with a 2-year reprieve for bribery and insider trading, according to this CCTV reports. Tequila Bulls, here's your chart of the week. Third lower weekly high on the SPY. Third lower weekly high on the SPY. The SPX weekly. That's nuts. That's nasty. God, that's so bad. That looks so fucking bad. Johnny Bleed, thanks very much. Eric, appreciate you, brother. Thank you very much. Your support means a lot to me in the think tank. Look at Google Trends down below for the stagflation, because people start to feel the inflation. When people like you and I feel it, what do? You go Google it. And by then it's too late. And look at where we were back then and the movements we had afterwards. Right? Look at people are already catching on now, and we haven't even had the real movement, in my opinion. This is basically this tiny little corner up in here of what we're currently seeing as far as I'm concerned. I think there's a lot more downside to go. Shopify. Wow. For those of you that don't know, that's the accumulate the awareness, the market crash, basically, chart that people have been sharing forever. Don't worry about that, but that was cool. This is the number of stories using the word hiring freeze. Up to 1,273. Interesting. Okay. Yeah, Mike Barr. You know what's interesting about those?
Hey, Mike Barr.
Go ahead, bro.
Speaking of Shopify, what's that snazzy hat you're wearing?
Snazzy hat is from Boss Blunt's think tank Shopify, if you guys want it. I think it's in the description if anybody cares. I think we got a coupon code going. End of Fed, 10%
That's
off.
cool.
This is exactly what's to be expected on a day like today. Money's got to come from somewhere, and it's coming out of United States equities, crypto, and it's going to come from offshore equities as well. Bitcoin is under 29.4. Is at 29,458. I checked it. Cash and I and Martin checked it last night at, I don't know. Oh, shit, we checked it 12 hours ago, and it was above 30,000, holding strong all weekend long. Everything started coming down this morning. If you don't think this is related to the executive order, I think you're wrong. I think this is exactly related to the executive order, and liquidity has been pulled out of cryptocurrency and equities around the world, in the United States stock markets as well, the New York Stock Exchange, in order to pay the SFT pawn shop liquidity fees in order to kick the can a little bit longer, to kind of hold on a little bit longer. So, again, it's only 1 o'clock, 2 o'clock Eastern time right now. So, who knows where the fuck crypto is going to end up at the end of the day. But ETH is down to 1746. And XRP is at 0.38, 38 cents. To the dollar, by the way.
Kevin, because I'm sure you get stopped all the time. I do as well, by worried investors saying, I've just lost millions. How do we know if the bottom is near? Have we bottomed now?
No, generally a bottom, and I've seen this movie so many times before, is you need a big institution to go bankrupt. That always helps. I mean, you have to sacrifice an institution to get this to work, because then you get a dramatic flushing of equity positions as panic sets in. Margin calls are called in, shorts, are bought. They basically bought themselves in already, and then you get this big leg down. Usually it's 5 to 10%, and that is the bottoming process we need. Now, this time I was thinking it might be in the crypto space, but that's already been decimated, and so it may be something else, a financial services company, or there was some rumors about Coinbase that turned out not to be true, but you need somebody's offside somewhere on a leveraged hedge position. You just don't know who it is yet, and they're big. And we're going to wake up in the next 10 days, 20 days, and you're going to find out they're a zero. That's a good thing. And I'm waiting for that to happen because we're getting close to a bottom here.
Okay, so when that happens, any feeling as to what company it could be, Kevin? What sector?
No, it's hard to say. It's generally, it usually happens in financial services where somebody was trying some strategy, a leverage strategy. It's always leverage that does this. Or a hedge fund. Hedge funds, a good hedge fund that loses 10 or 20 billion, that's also good for flushing. And that's happened many times before. These are guys that, have never seen this kind of a market. So they set up a position that went awry, couldn't unwind their leverage, and they just get wiped out. And again, I feel sorry for them, but I think it's very healthy when that happens. And the trouble with this correction is it's a slow grind down 1 to 3% a day. And you don't really bottom till you get that flush.
So you get that flush. See, you don't really bottom till you get that crash, is what he's saying. Very, very good point. But it's from this asshole. Oh, it's not from Sean Williams. It's from Juan Shilliams. So it's a knockoff of the guy from Motley Fool, I think. So I will retweet that.
And what does come next, Kevin?
Kevin O'Leary is a pretty smart guy. Very rich man, for a reason. He's made some good choices, let's put it that way. Unreal suppression today on AMC. We should get a close around 13, says Nick Leeson 11 on Twitter, as level 2 bids been higher than ask all day. Close to put ratio is almost 3-1 on the chain. 65,000 volume on 13s expiring on 6-3. I don't buy this tape action for a second. Strong upside into close, and I kind of have to agree with him. I really think the close and after hours is where we're going to see the real volume today. I really do. Oh, give me 1 second. I'll be right back. Water, shitload of coffee today. Love it. Drink way too much coffee, but that's good. That's how I roll.
You can never have too much coffee.
I don't know about never, but I kind of agree with you.
I'm Swedish. We can never have too much coffee.
Thanks. That's funny. Yep, looks like the Fed's going to raise rates 50 basis points at the next 2 meetings. Fucking Powell can't raise any rates any faster than that. He's too damn scared. He's scared shitless of raising rates any faster and crashing the markets. That's all. Their whole agenda at this point is making shitloads of money. That's why he's not reporting tons of trades. And the central banks, of course. And there's no more shares available. All the shares to borrow are gone. And the price over here for the fee says 0 because there's no shares being borrowed. So if there's no shares being borrowed, the price is 0. Well, the Vortex indicator, I should open up my IBKR desktop app probably, because I bet you the Vortex is going to start going positive soon.
Hey boss, we have an update on the consolidated audit trail CAT system if you want to go over that at some point here today.
Yeah, brother, let's talk about it.
Okay, I put a I put a post here with a link in the Ape chat, but I'll just talk through it. The Consolidated Audit Trail, or CAT system, it tracks orders through their life cycle and identifies the broker-dealers handling them, thus allowing the SEC, the regulators, to efficiently track activity in eligible securities throughout the U.S. markets. That had a date set to be active for full customer and account reporting for large and small broker-dealers to be July 11th of 2022. Now, what's important to know is that this information and this system has been available for all of the participants to start testing. The CAIS testing environment has been available since January 31st, 2022. They've known about this whole process starting since June of 2020. Okay, this is not new information.
Right.
Every month they have a update call with the CAT system and the participants, and I've been listening in on these. And the one I'm going to refer to right now took place on May 4th, 2022. And in that call, it's an 18-minute call where the technical people from all the banks and institutions get on the phone with the technical guys from the CAT system, and they explain what they've discovered over the last few weeks in testing this out. And they're trying to figure out where the bugs are and get it all fixed before we hit July 11th. In that call on May 4th, the last 4 minutes of the call, they do a Q&A. And that's where they get out of the technical jargon, and they actually ask the question. One guy asked the question, why aren't the major participants in this market even participating in these tech calls? The major banks and institutions, including Citadel, were not even participating as of May 4th, 2022. The technical guy on the side from CAT said, well, we're trying to get everyone involved. And then his boss jumped into the call and stated, and this is recorded for anyone to listen to, he jumped in and said, we've expected more participation to this point, and we have not been receiving it. So we expect these guys to come to the plate, and we're going to start doing weekly calls starting June 1st. What came out yesterday, June 2nd, is this has now been extended. The CAT system, Rule SEC 613, which requires U.S. security exchanges and FINRA, the self-regulatory organization, for broker-dealers to build and maintain an electronic audit trail that collects and accurately identifies every order, cancellation, modification, and trade execution for all exchange-listed equities and options across U.S. markets, has now been delayed from the July 11th full compliance deadline to a projected date to be determined in Q4 2022. And the reason for it is they have not had the participation of the major players at the plate to get this whole thing sorted out. So they're afraid that there's a rule that's been put in by the SEC that they have to have so few errors, as it lets it out a 3% error rate for a certain amount of time before they're allowed to have the participants roll out of the OAT system into the CAT system. And what these guys have done is by not participating, they have enabled themselves to push this deadline back. So that's new information.
Damn, Pantheon. So where is it? May 4th? And do you happen to have that recording by chance? Because I'm seeing a couple on here from like May 17th and May 24th.
Yeah, I'll put it in the Ape chat. I'll link it in right now.
Oh, you rock, brother. That's great.
It's
so they're
posted
pretty much
right.
Sounds like they're freaking out about this CAT system, trying to get it to work right.
Well, we know the major banks and institutions, we know that their tech people have been working on this. JP Morgan, as an example, has already come out and said we've had people working on this on their side. What they're not doing is they're not joining these calls with the CAT system to report the errors. They're not joining them to talk through the technical glitches that they're coming up with.
Wow.
And as a result, that's had the CAT system say, we have an obligation to the SEC to get the error rate down to a certain point, but we haven't had full participation. So if these guys jump in now and give us a bunch of errors, we won't hit the deadline target. And they don't seem to have the muscle to say, get your ass to the table and bring us your issues so we can work this out. So instead, we've now had the CAT system delay from July 11th for full compliance to now be Q4 2022 at a date TBD. They're going to do a call to explain all this,
Q4
but the
now.
date hasn't. Q4, yeah, of this year.
Okay. So everybody, the CAT system, the Consolidated Audit Trail, it basically takes over the old OAT system, and it is stricter reporting requirements for those of you that are unaware, and makes things a lot harder because, for example, previously, as of right now, because of the old OAT system, the shares aren't really, they're not really tracked. And with the CAT system, you can have like a proverbial, or you can say a theoretical barcode for each share. Therefore, it will seriously reduce the potential and the ability for synthetic shares to be created. Therefore, or especially even, rehypothecated as well and other things illegally. So it does help a lot, and these are some serious changes that are being implemented to prevent a squeeze from this from ever happening again by limiting the number of synthetics that can be created in the future. That does not change the synthetics and naked shorts that already are in existence and are literally being created at this very moment. And like Pantheon just told us, he just went in and read all this monstrous fucking paperwork and documents and listened to these recordings, take the hours, dozens and dozens of hours of his life every week to do this kind of stuff to provide you guys with this information. So make sure you guys check out Pantheon AMC on YouTube as well. That being said, thanks for pulling that up, brother, because it's really important to get the CAT system in place as quickly as possible, and having it pushed to Q4 is, not great in my opinion, but as long as it gets implemented soon, I'll be happy with that,
So are they dragging their feet on purpose to get it pushed back, probably?
I'll let Pantheon, if he'd like to explain, because I can't specify. I think he'd be better suited to answer that question for you if he's able.
That would be speculating at this part. But boss, what I did was I posted in the Ape chat, let's see, probably about 3 minutes ago, a link to the May 4th call. And if you then skip ahead to the 16-minute mark, we can listen to these guys ourselves, and then I can kind of talk through the answer to the question.
Sure will.
Okay. It's only a 18-minute clip, but we can start at minute 16 and only about 2 minutes worth of clip to listen to. And you can hear these guys talk through it themselves. And then we'll talk about it after.
Cool. So let's hear this shit. Sounds like a fucking hot mess. All right, we got a short, like 1.5, 2-minute clip here we're going to listen to and see what the hot mess is with the Consolidated Audit Trail implementation here. There's industry testing checkpoint from Wednesday, May 4th.
Right at hand, but we can look to get that information and make that available. I know we
saw like a 356 something I saw on one of the page that they're distinct from.
Hang on one second. We'll start it right here.
This time I'm showing no questions, so John, I will turn it back to you. Oh, actually I'm showing one. The first question comes from Satish. Go ahead.
Yeah, hi. Would you be able to share the data point on how many firms have sent any test files out of the universe of how many actually are supposed to register for a case?
I don't have that right at hand, but we can look to get that information and make that available. I know we
saw like a 356 something I saw on one of the page that the distinct firms have submitted, but I'm just trying to understand the universe of firms because we are seeing a lot of firms still not acting as fast as should be, and just wondering is it just some set of the customers, or it's like you're seeing it across the board?
This is Paul. I can jump in there. I think that we're expecting to see a larger universe of firms that will ultimately certify, but the certification process is a little bit different, particularly for firms that are using CAT reporting agents. So many firms that once their CAT reporting agents get in and get certified, those individual firms will also become certified.
Okay.
No participation.
But to your point, we are looking to see increased testing activity in the near future, and I think firms are well aware of that 6/21 certification deadline, and we're looking forward to receiving and processing their data.
Okay, thanks.
Yeah.
So we had to have a participant from another firm ask the question. I'm looking through the data and I'm not seeing everybody actually participate in this. When are these guys going to get involved? The tech guy couldn't really answer the question, didn't have access to that data, but his boss jumped in. And, there's other things in that clip, but that's just one good clip to show you guys that they're not getting the participation that they expected. Now, what we've had come out of this is that they've not been able to guarantee the failure rate less than 3% to meet SEC compliance. So they've now turned around and they have to delay the rollout of this CAT system to an undetermined date in Q4 2022. So to answer the question, I think to paraphrase the question earlier was, are they trying to delay it by not participating? I don't know why else they wouldn't. That's speculation at this point, right?
Yeah, I would say that would make perfect sense. By not giving them information that they need and not participating, they are prohibiting the implementation of the CAT system indirectly. So they can't say that they're doing anything illegal by not participating in the testing. Kind of sketchy. That's really sketchy. I'm not surprised. This is absolute fire. This is
That's not what happened with.
This is from Wolfie and AMC Ape on Twitter. Make sure you guys. This is Charles Gradante. He is a big time hedge fund manager, and I think these assholes right here work for Citadel or the SEC. Who remembers?
I think it was Citadel actually.
Yeah, both these pricks. This asshole works for Citadel, and this asshole works for Citadel. Listen to this.
And that's the typical short selling. But that's not what happened with GameStop. It did in the beginning, but when the shorting got out of hand on the hedge fund side of the fence, the market makers created synthetic shorts. The synthetic shorting and naked shorting, which is illegal. A market maker can execute naked shorts insofar as they're facilitating a trade. They're not to facilitate someone shorting a position for an extended period of time. So the regulators are looking at that now as to whether or not there was this naked shorting by the market makers on behalf of the hedge funds in order to facilitate the shorts. And I think they're going to uncover that there were some issues there, which gets me to a final point. I'll give it back to you. The penalty for naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for doing this, as long as it's not intentional and never is intentional, they get fined. And I think one of the things we need to do is discuss increasing the fines for this lapse of memory and inefficiency in the system to the point where people wake up and pay attention. Naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for...
Yeah, you can see him sweating.
He's fidgeting. He's playing with the buttons on his fucking sleeve for no reason.
Doing this, as long as it's not intentional and never is intentional, they get fined. And I think one of the things we need to do is discuss increasing the fines for...
He's like, please stop. Oh my God, they're filming all this. How are you saying this? Stop.
For this lapse of memory and inefficiency in the system.
Look at him smirking. What the fuck?
To the point where people wake up and pay attention.
Damn,
right now, the fines are insignificant.
He thinks he's gonna get fired.
And look at the eyes just flutter back and forth.
Oh, that is so fucking good. Charles Gradante. This man is a fucking hedge fund manager. He knows everything that's fucking
And that's the tip.
Let's play it one more time for the people in the back. If you weren't paying attention, I'll shut the fuck up.
Typical short selling, but that's not what happened with GameStop. It did in the beginning, but when the shorting got out of hand on the hedge fund side of the fence, the market makers created synthetic shorts. The synthetic shorting and naked shorting, which is illegal, a market maker can execute naked shorts insofar as they're facilitating a trade. They're not to facilitate someone shorting a position for an extended period of time. So the regulators are looking at that now as to whether or not there was this naked shorting by the market makers on behalf of the hedge funds in order to facilitate the shorts. And I think they're going to uncover that there were some issues there, which gets me to a final point. I'll give it back to you. The penalty for naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for doing this. As long as it's not intentional and never is intentional, they get fined. And I think one of the things we need to do is discuss increasing the fines for this lapse of memory and inefficiency in the system to the point where people wake up and pay attention. Right now, the fines are insignificant.
The fines are insignificant. It's the cost of doing business.
And that's the typical short selling, but that's not
the typical short selling. Okay, come on. Have we not done our due diligence, SEC? You gonna tell me we have not done our due diligence and proven synthetics? And that the shorts are extremely over leveraged? Hey, I'll be here as long as it takes. The stream has been going on for 4 hours and 55 minutes and 11 seconds right now. I'm feeling fresh. That's fucking great, Wolfie. Thanks for sharing, bro. That's just scroll up, Gorilla Grad. You'll find it up there, brother. We just posted it in the think tank. It's from Charles Gradante talking about Citadel and hedge funds. Mic check. Oh yeah, I had to get it a little bit closer to it. I may have been a little bit farther. All right, there you go, guys. Just turn it up. Mic check. There we go. All right. Hey, one of you guys, you know what? I see there is a problem. Hang on one second. I'll fix it up right now. Yo, you guys hear me all right in the Discord now?
Yes, sir.
How's the YouTube sound?
Let me check.
All right. That bitch. Oh, Yeller's cheating on me? The fuck's she doing in the Death Star with Darth Vader? Hey, money bags. I like it, man. It's a good looking mug. We're going to be so fucking rich. And you know how that started? That actually started because people kept asking me how to make a TLDR on Reddit because my posts were too long. And a TLDR on Twitter and a TLDR on YouTube. And I'm like, I can't condense this shit more than I already have. If you really want me to condense it, the only thing I can say is we're going to be so fucking rich because that's what everything, in my opinion, is pointing to. All the macro, all the global and geopolitical issues, the over-leveraged funds, the financials, everything points to we're going to be so fucking rich. And that's how I ended up saying that. It wasn't even supposed to be anything other than the TLDR / in conclusion. That's it. There's nothing else to it, in my opinion. And it just people liked it. I didn't think it was going to be catchy. That's truly my TLDR. Cheers, motherfuckers. We're going to be so goddamn fucking rich. Holy shit.
Cheers.
Cheers, brother.
Cheers.
Smoke them if you got them. Drink them if you got them.
That money sounding fair, man.
It goes something like this.
Sounds cold for something that's going to be running so hot.
The money printer has cottonmouth right now, so it's not working.
Hold on, cash.
It's the cash cartel for a reason. Hey, is that One Punch Man? Sure as fuck is. Cheers, Idaho Bob. All you guys. Cheers, Mr. E. We're going to be so fucking rich. Let's go back to markets. I'm having a good time. I'm debating whether I should get TradingView, Interactive Broker, or my Schwab. Because Fidelity sucks and the others are garbage too, so I think I'm gonna bust out Interactive Broker. Who posted this? Who made this? D. Oh, god damn it. Why did they look like they're about to make out, man? What kind of... God damn. Fucking guys. Holy shit. Cheers, Idaho Bob. That's all right, Brian Carpenter. I can wait. And, oh, by the way, maybe you may not already know this, but I'm already rich, dude. I'm talking about filthy, stinking fucking rich. Like, I want hundreds of millions and billions. So, remember, billions with an S. So, don't worry about it, brother. I can wait.
You had a little lapse in memory there.
Mm-hmm, apparently. Hit on my 2FA, two-factor authentication, of course. Don't fuck around with our brokerages. We like to screenshot our positions at least every day in case there's some sort of a Russian cyber attack, if you will. Whether it be fake or real, I want to make sure I've got
a lapse in cyber memory.
A lapse in cyber memory. There's a good way to put it. The U.S. housing market is so stressful, it's bringing buyers to tears. According to Bloomberg Wealth, Americans say the process of purchasing a house is just as bad as getting fired. %50 of home buyers said they cried at least once during the process of purchasing a house, with the stress on par with planning a wedding or being fired, according to a Zillow study. It's particularly bad for younger Americans, many of whom are trying to crack into the real estate market for the first time. More than 65% of Gen Z buyers said they were brought to tears by their home buying journey. In April of 2022, nearly half the homes sold in the United States went for more than the asking price, up from 37% a year earlier.
That's why they're crying.
No shit, yeah. There are roughly also 23% fewer homes on the market than there were in 2021.
They're like, how the fuck are we going to afford this shit?
Yeah. Yeah, I'm glad you can make it, Zen. You're damn right, brother. They're freaking out. You know, a lot of people are freaking out in that sense. So, I mean, it's too fucking bad, but that's what happens when BlackRock and Vanguard and Zillow and all these guys are buying up all the homes for cash above asking price to price out Americans. The Great Reset is at work. Strong at work. That's great. It's fucking phenomenal. Let's see, AMC is hanging out at 1258 all day. All day hanging strong right there. Let's see if I can slide this into the corner. Yeah, looking at IWM. IWM is down 1.04%. Shopify is now down 11%. It is getting smashed. Absolutely fucking walloped right now. Damn, Shopify is getting murdered. The S&P 500 still sits firmly in second place on Friday. Negative 1.44%, it says. Intuit is down 3.98. Carnival, 3.91. NOC is up 3% because they were awarded a $250 million Missile Defense Agency contract. Wow. And for those of you that are unaware, Turkey's CPI came in today, and Turkey's year-over-year inflation is 76.55%. Damn. That's bad. I feel sorry for those people. Norway housing prices have increased 6.4%, a little bit higher than expected. Let's take a look. Reuters Live. As the market crumbles, individual investors build cash. Major U.S. indexes declined, but off of lows for now. NASDAQ is down over 2%. Energy is the sole gainer. Energy prices and energy stocks are the only thing going up right now at the current moment. Dollar, crude oil gain, and gold and Bitcoin fall. And the U.S. 10-year Treasury yield is up to 2.96%, which is bearish for those of you that don't know. That's rough. Let me get rid of this. I've got my SPX, the VIX pulled up as well. I can check Bloomberg too. Just debating on which one I'm going to use first. I got this one already up here. Looks like new data on automated driving crashes is going to be released this month. You know they're going to come out with some crazy shit about that. The United States is lobbying with the United Kingdom, trying to get them to reconsider a Chinese chip factory deal. Bermuda doubles down on crypto despite recent market turmoil. All right, cool. I just wanted to double check all the news as I go through the day. I'm always checking the mainstream media sources and the non-mainstream media, not because I believe everything they say, but because I love to hear the narrative. And a lot of times they do say certain things that are important, but often it's very filled with propaganda. But you still need to know, in my opinion, what they're saying in depth. You know what? I'm gonna take this chat box off of my screen here. I hope nobody's too offended by it, or if you miss it, let me know and I'll bring it back. But I'm gonna take that off there for now. So anybody that chooses can see the stock tickers above my head here, because that's where I'm watching them anyway. For example, right now, Bank of America has lost even more since we've been started talking about it this morning. They're now down 1.34%. BlackBerry's down 5%. BBBY 4%. BBIG 4%. Beyond 7.7%. All of the meme stocks and the IWM and the RUT are taking a massive beating. A massive fucking beating right now. JRRR, you should watch the beginning. Scroll back in the screen, man. The executive order is in full effect. You're not going to see everything happen in one moment. That's not the way the markets work. The executive order is in full effect as of 12:01 a.m. Eastern Time. Executive Order 13959 from the United States Office of Foreign Asset Control. And it looks like, to me, everything is right on schedule. And guys, it looks like COS might be the very first meme stock to run. COS is up 9.4% right now. For no reason, of course. Got 9.4% increase on costs. Shopify is down 11% right now. Taking an absolute fucking tumble. It looks terrible. But Shopify, in my opinion, is not what I would classify as a meme stock. I believe they're an overvalued tech stock. So each his own on that one. SLV, iShares Silver Trust, is hanging out down 1.7%. Slight reduction in the price of silver. And the SPY is now down 1.5%. An entire 1.5%. That's fucking high. I dig it. I dig that movement. We're still hanging out at the 410. Let's zoom in here on the 1 minute candles and see the actual movements. Let's see if we can draw some.
Don't you have a Shopify store?
Yes, I do.
I want to get one of those badass hats you got.
Yeah.
What's
I'll
it called?
Send you one. Bossblunts.shopify.com, I believe. It's on my description,
Cool. Thanks,
too.
man.
Yeah, no problem, brother. Appreciate the support, homie. Here we got a nice level of support here on the SPY, also at 409. Right now, we're nowhere near that thing. We're over here testing these resistance right now, right around here. When in doubt, zoom out, look left. And that helps, because now I can see the levels a lot better. Yeah, that's on fucking point right there for a support, a resistance level. And it seems to be trading right in between the channel, 411 and change and 410.58 or so. Even tighter right now. It's actually consolidated quite well here. Kind of using, yeah, here, right here. I got to add another trend line. Yeah, because over here it used it multiple times in the past as a breakdown. Support here, resistance, support, resistance, breakout. Then it bounced off it again, drop beneath, ripped up. And literally right now we're at 411.32, kind of trading in that same exact channel. This thing's going to have to make a decision. The SPY is going to have to make a decision on which way it's going to go. Oops, didn't mean to draw that line. Take a look at the triple Qs, negative 2.5%. Google's still down 2.75. It had a slight recovery, not much. Facebook's down 3.94. Another red day for Facebook after their CEO, second in command, is leaving. I don't think she wants anything to do with Zuckerberg. BBIG down 7.8. No, sorry, it's Beyond. Costs hanging out up high. Nothing's being priced in right now. Everything's very relaxed. Otherwise, the volatility's up and down, but it's straight in these channels at the moment. Considering Tesla's down 8.9%, I'm surprised the SPY is only down 1.5%. You got power hour starts in 10 minutes. JRR, I already answered your question multiple times. Probably about 100 times in this stream so far. Just rewind. And I didn't say when because Biden doesn't have to sign the order. It's already fucking signed. It's been signed since last year. Everything's in effect already. Firm is down 5.22%. ARK is down 5.3% right now. That's rough. That's rough for ARK. Still hanging out at 43 though. Been here quite a while. Let's take a look at it on a bigger time frame. It was down at 38.60. Not too long ago. Let's say around mid-May. Cool. Moving on. Checking out AMC's chart. The 15-minute candles move in. Zoom into the 1-minute candles. The vortex indicator on the bottom. Still seeing low volume on it. This green VI plus for the vortex hanging out underneath the VI negative is still in bearish territory, meaning that it's being sold off pretty hard. I suspect we need quite a few more green candles to get this to overtake, which it has actually. The VI negative is increasing as the VI plus is increasing on the vortex indicator, probably because of short selling pressure. And that's what's keeping the stock price down now. It's suppression. So I am feeling extremely comfortable right now. Trace Trades has 300 more viewers than Boss Blunts, and he's also got about 350,000 subscribers compared to the 18,000 beautiful souls that are hanging out here with us and subscribe to the think tank. It's all right, buddy. I prefer it that way. I know the majority of you guys, it feels like. It's great. It's a beautiful community. The RSI, I'm looking at the stochastic RSI right now. It's looking, look at that fucking gigantic red candle right there. That's all shorting pressure. Did you see that just pop up out of nowhere? The stochastic RSI went from being over really high just now to being almost to 0.1. I'm sorry, should I say to 1.0, and it just totally dumped in this 1-minute candle to extremely oversold territory. And right now it's extremely oversold. As you can see, the stochastic right here, the blue line that's in the middle of my screen, that is showing just how oversold it is at the moment. It's currently sitting at 0. The stochastic RSI is at 0. It's at absolute fucking 0. This is all manipulation. As far as I'm concerned, Judgment Day has arrived. I'll look at that negative buying pressure, or that should I say that's all that selling pressure right there, and it just makes me feel good. It just shows me, in my opinion, that I'm correct. There we go. Look, it's just starting to lift up out from that oversold territory with a little bit of a green candle. And you see how hard that brought us down from 1260 to 1253, 1252. Pull up the volume as well. I turned off the volume because I was checking out the VI plus and the vortex indicator and the MACDs. But actually, I got the volume in the top left corner also. The volume here was 37,464 in this 1-minute candle, whereas the previous one was 12,500, and the one before that was 12,900. The one before that was 9,000. So do you think 37,500 volume of selling pressure just came from retail all of a sudden at $12.60 a share? Absolutely not. Not in my opinion. Another 16,000 in negative red pressure, and then 4,800 in buying pressure. This is algorithmic trading, in my opinion, at its best. As you zoom out on the stochastic RSI, I'm sorry, I meant to say the vortex indicator. When this green, we're now on the 15-minute candle, and you can see they're getting closer and closer. When this green overtakes and crosses over the red candle, over the red line here, and the red line crosses underneath the green line, that is a bullish indicator. And as you can see, as of right now, for days on the 15-minute candle, we've been in the bearish territory on AMC. You can see here the green crossed over the red line upwards, and the stock price moved from $12.30 to $13.50. And then it was heavily moved downwards with a lot of volume and negative pressure, and it is finally starting to reconverge for the second time here on the 15-minute candles. You can zoom in on the 1-minute candles to get in a little bit closer. And you can start seeing the volatility there. And this is when it's underneath, it's all negative pressure. The stochastic RSI remains oversold at around 0.3 at the moment, 0.33, 33. $12.26.9 EMA. 1348. Also, it's a good looking stock though. I'm not going to sit here and watch the line all day, but I do like to check in on it periodically and see how it's doing. GameStop has gone negative, but it did have a convergence of a green line on the vortex indicator upwards, crossing over the vortex negative indicator. Seems to be coming back together to go back into bearish territory. Same with the RSI. It's extremely overbought at the moment, according to the RSI, hanging out at 1. DWAC is up 0.6% now. Yeah. Etsy's down 6.24%. Even Harley Davidson is down 3.5% almost. Goldman Sachs 1.65% down, and looking very, very bearish with the indicators here. The stochastic RSI just went from oversold to extremely overbought out of nowhere. But the vortex indicator is still extremely bearish. This should be a major red candle, I would suppose, on Goldman Sachs here, but it's actually not filling in, so it might be a massive green candle. It's hard to tell because the way the stochastic RSI and the MACD just jumped to the top all of a sudden. I'm actually interested to see what Goldman Sachs is about to do. Really curious to see what happens. Also, it's just 319.13 on 500 volume. Look at that. There's no fucking volume. This was 300 volume. This was 500 volume. What a joke. Goldman Sachs. Fantastic. ARC still down 5.25% for the day. Now, let's bust out the Bloomberg. See what the fuck they're talking about at least. Really work with me here. Chill the hell out.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session, in your trading week. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic, as we together once again embrace our TV, radio and YouTube audiences with the news that volumes are low and the stock market is falling.
I feel embraced. Thank you very much, Caroline, for that.
Friday warm embrace.
Feeling the love, feeling the love. Not so much love, though, in the equity markets, unless, of course, you're shorting this trade. Bouncing around, but we're off our lows and highs, but definitely down across the board, as Caroline just mentioned, except if you happen to be a biotech stock, because that is certainly some outperformance today. The group overall, if you look at the Spider Biotech ETF, it's up about 3.2%. Thank you, Bristol Myers, for making a bid and paying more than double per share, if you will, for Turning Point Therapeutics. That's a $4.1 billion bid, $76 a share. So that's double the closing price of what we saw for Turning Point as of the close yesterday. So investors moving into biotechs today.
Well, we're also seeing chip stocks under pressure. This after Piper Sandler downgraded Micron Technology. All 30 members of the Philadelphia Semiconductor Index are lower today. Overall, it's down 2.6%. The stock's underperforming the NASDAQ, being led lower by Micron, which is down more than 7%.
Let's have a little look at how that winds up being the NASDAQ that underperforms. We're off by 2.3% on the day for the NASDAQ. That's 283 points lower. We're also seeing, though, the S&P 500 off by 1.4%, both seeing volumes really muted by about a quarter overall. In fact, they're down by about a third for the Dow Jones Industrial Average. We're off by 0.8%, and the volumes have compared to usual 20-day average. Russell 2000 off by 0.8%, and that means on the shortened week, we are to the downside across the board.
Indeed, we were looking at some back-to-back gains at one point, Caroline, and unfortunately sort of unable to get there. Unfortunately, I'm a broken record. The theme of the day is the theme of the year. I just continue to repeat myself here. Energy, the best performer of the day, best performer of the year. You're still up about 1.6% or so on the energy sector. Everything else, though, all the way down in the red. And Romain, technology is one of the worst performers. You're off about 2.2%. B of A coming out and saying that this growth we saw lately was just a phenomenon, that value typically has been the big outperformer. Tech is a huge laggard in some of these stagflationary environments. So again, sort of the negative sentiment around technology continues today.
Yeah, and we talk about some of the movers. I mean, we were talking a lot earlier today, of course, about the commentary out of Elon Musk here, and the idea here that, you know, he sees, in his words, of course, some super bad issues going on out there, and could potentially cut staff, at least salaried staff, by about 10%. But we've been hearing similar commentary out a lot of other companies. We heard from Coinbase last night that the hiring freeze that they had put in place being expanded just a little bit to now actually include rescinding job offers already made. We heard some interesting commentary out of the CEO of RH, Gary Friedman, last night, who talked a lot about macroeconomic conditions. In fact, I was going through the conference call transcript, and you would have thought you were on a Fed call or something. He spent more time talking about interest rates and the Fed than he did about furniture and wealthy people. But it gets to the idea, I think, of what is on the minds of a lot of these CEOs and CFOs, for that matter, right now. And then at the bottom of your screen, you take a look at Amazon. $2,454 a share. Starting Monday, that share price is going to be down around $115 or so after they do a 24-1 split that takes effect after the close today.
So much more affordable, right?
Yeah, absolutely.
Meanwhile, let's have a look at the S&P 500 because, well, we were thinking we could have got another weekly gain out of this, but no, today put paid to that. The sentiment, as you say, coming out of Elon Musk and some of the corporate leaders really tending to the downside, and we decide on low volumes to tick lower, and we've got a red week, having after 7 straight weeks of declines in the S&P 500. Last week, some reprieve, and well, already heard the likes of Mike Wilson over at Morgan Stanley and many saying, well, that was a bear market rally. Watch out.
Well, and that kind of mirrors, if I look at the trade here, the concern among equity investors kind of mirrors some of the negative commentary we got from a lot of big folks and big names in the financial sector, right? We had Larry Fink of BlackRock telling David Weston that we could get a recession if the Fed overshoots. We had Jamie Dimon of JP Morgan talking about now going from storm clouds to a possible hurricane in terms of the U.S. economy. And Jane Fraser of Citibank, the CEO of Citibank, also talking about a recession and saying basically it's going to be hard for the U.S. to skip out on that. Here's what she had to say.
Europe definitely felt more likely to be heading into a recession than you see in the US. The US story is, as we all know, is much more about rates. With this, is there a recession? It's certainly not our base case that there will be, but it's not easy to avoid either.
And that's the Strategic Decisions Conference. And of course, that's Jane Fraser, CEO, Citibank. Romaine, though, I do wonder, we were talking with Mike McKee, Tim and I earlier, in terms of the jobs report, it is going to be hard for the Fed to get this one right. Although we did see some easing, slight easing of wage pressures in this monthly jobs report.
Okay, well, then a week from today, we get the next CPI report, which at least is expected to ease a little bit, but it's going to ease from, what, 8.5% or 8.3% to like 8.1% based on
But it's the trend line, right? If we start to continue to see these easing, hopefully it will start to build up and show much better numbers, no?
No, not at 8%. You're right longer term, but I think in the short term, when you talk about the idea, if we're going from 8.1 down to 7 or even 6 here, we're still in a mess here, and the Fed has to do something. 50 basis points at that June 14-15 meeting, does that get us there? Another 50, does that get us there? That's the question.
And not just the Fed.
Yeah.
Look, this is a global inflationary problem, and next week we look to what the ECB might do. Already the market before had never anticipated, we just started to bake in some rate hikes. December, they thought. Now, October, they're anticipating a 50 basis point rate hike from the ECB. So this is your European focus coming into play as well this week to look out for.
And still not sort of helping the supply chain issues. I thought it was notable. We were speaking with Duckhorn, and we made a joke. We sounded like radio. We were like on TV talking about wine, which is typically...
We only do that after 4 o'clock, Taylor, on Fridays.
But they said, thankfully they weren't having a huge supply chain issue, but then you got comments from Walmart saying that they're starting to see some signs of easing up. But I have to say, I feel like we've heard this before, and every time we think that there's a little bit of an easing up, we don't yet quite see that in some of the data or the pricing.
I got to tell you, we had a really interesting conversation with the CEO of Johnson Controls yesterday, who did say that he was starting to see some easing when it came to commodity prices around the world, and he was pretty optimistic with his view.
Well, and just real quickly, there was some commentary just within the last hour or so out of the Walmart CEO, kind of saying similar things. That they're seeing similar things. I don't know who you're talking to, Taylor, if you're just hearing voices in your head. She's had like 4 Negronis already.
Taylor, we heard you.
I'm going over to radio.
We heard you.
Thank you.
You are always welcome.
Shut off.
I've got an extra mic for you.
All right, we're going to run. We're going to be back.
AM something hanging out at 12:47.
Yeah, exactly.
Getting beat down.
All right, we're going to be back in less than an hour's time. We're going to wrap up this trading day. We're going to wrap up this trading week on radio, on TV, on YouTube. Beyond the Belts coming your way on this Friday.
All right, and we continue to count you down to the closing bells here on Bloomberg Television. Carissa McDonough joining us right now, fixed income strategist at Community Bank Trust Services. And Carissa, I want to pick up on the conversation we were having with our radio colleagues about all of the commentary that we've been hearing from corporate executives. A lot of concerns out there about the state of economic affairs here. As you sort of strategize and as you sort of plan out and map out whatever's going to be next for you and your investors here, do you think some of that commentary that we've been getting is maybe a little bit too pessimistic?
Apple's down almost 4%
so
now in Power Hour, 3.88.
Actually, I think this is helping the Fed to a degree. I know it sounds completely counterintuitive. The Fed acts right through its
Nice, Road Dogg. Road Dogg picked up more. You're an animal. You're an animal, man. That's great. Look at the heat map. That's bad. That's fucking nasty. The only thing that's up is energy and minerals, really. The occasional one here and there for industrial services, and that's about it. Damn, that's nasty. Grandpa Barney says, hey boss, all the banks are changing their tunes because they're getting ready to put their hands out for another bailout. You're damn fucking right they are, man. We're on our way to a fucking market crash as far as I'm concerned. Still chugging along nicely. Thank you as well, 5150 Eddie, for your support. Johnny Bleed, thank you guys for your support of the think tank. We appreciate you. Whirlpool down 2.2%. PayPal 1.8%. Wow. If my VIX calls pay off and our SPY puts pay off, guys, that's going to let us buy a lot of fucking AMC and GameStop. You know that? And all the other meme stocks that we want to fucking buy. I'm talking specifically to my friends here in the tank.
You are correct.
Etsy's down 6.4%. Amazon over 2%. Costco almost 2%. CarMax 3%. Dollar General, of course, is up 1.4%. Because everybody's going broke and got to shop at the fucking dollar store. I do love the dollar store, I got to say myself. Nothing wrong with it. That's crazy. I got my IBKR up here again. There it is. Thanks, my man. I appreciate you. Fucking funny. You're too funny, bro. That's great. It's weird looking at myself on my fucking screen. Why the fuck am I on my screen? So goofy. But thanks. Appreciate you guys. No, do not go to my messages. S&P is now down 1.7%. AMC's down 6.5%. At 1245 still. Same place. AMC's not really moving. It's at 31.6 million volume. So we know that nothing's really going down on the back end. Could we be that lucky, guys? Like, really? Could we really be so lucky as to get a fucking market crash and then have the ability to buy more AMC with all that money? Like, that would be the biggest blessing we could possibly fucking ask for.
Yes, please. Thank you.
Yes, please. Thank you. Welcome.
Please, sir, can I have another?
More! More!
More.
Kylo Ren that shit.
Yup.
Officials,
you didn't hear this
or what
earlier,
exactly are they concerned about here specifically?
Morning, David. Yes, they're basically concerned about a lack of bank lending to property developers. We've seen the PBOC give window guidance for months now for banks to help property developers, but that's not really showing through. We're seeing cash flows from bank loans falling around 30% in recent months, and that's really a big concern. Of course, given the mounting cash crisis, then developers aren't getting cash from home sales because they're plunging. They fell about 59% in May, and of course the offshore bond market has become prohibitively expensive as well. So that's really left it up to the banks to support this ailing sector.
There doesn't seem to be, as you allude to there, at least a massive appetite to take on more debt, which I think takes us into the confidence element really of this recovery, that it's not there. Why are banks not keen to lend to developers? I mean, you look at the credit profile, isn't that the prudent thing to do anyway, to avoid it for now?
Absolutely. I mean, banks are seeing property developers understandably as a big risk right now. We've seen more than a dozen developers default on their debts. And so really, you know, banks are looking at from a risk management perspective that developers are not a healthy prospect to lend to. And I think this reflects a broader liquidity trap in China right now. So, you know, banks are willing to lend to others, such as home buyers, such as corporates and other sectors, but they're actually not willing to take on the extra debt because they're not confident in the outlook. And on the other hand, you're having these property developers who are desperate for this extra cash, and the banks are just saying, look, no, this is too risky. We have to be very prudent.
The banks are literally not lending to Chinese real estate developers anymore. This is the absolute best thing that we could possibly ask for in times like this. Fitch Ratings has removed Fitch Ratings has removed Evergrande from the ratings agency's list. So they're no longer being rated because they're in default. And they don't want to be known as officially derated so that their bonds are still acceptable as collateral. That's fucked. Michael Burry just posted this 13 minutes ago regarding the Supreme Court's mail ballot mulligan in Pennsylvania. It says, come down hard on email ballot irregularities in a Republican primary and set a precedent that can help avoid a repeat of the 2020 fiasco. Next, ensure governors don't run roughshod over the election jurisdiction of state legislatures. I'm really glad Dr. Burry stopped deleting all his tweets and is at least leaving some up at this point. That's pretty cool. Yeah, don't care about Kardashians. Don't care about the Kardashians, no offense.
You don't?
Not at all.
I'm shocked.
You better be. Amazon's down almost 3% now. Apple's down over 4.11%. Come on, SPY. Just do us all a favor. Do what you're supposed to do. This Fed soft landing bullshit's not going to work. So, we shall wait as long as it takes. For those that aren't aware, though, China has basically stopped reporting bond trades by foreigners after a massive sell-off. As of May 11th, the Chinese foreign exchange trade system is, their data showed sizable net foreign outflows for the most days seen since April. And so as of May 11th, their figures are being withheld after a record net sale of sovereign debt. So we're not even seeing any of the outflows from China because they've stopped reporting it, according to Bloomberg's law as well. Looks like the SEC is increasing its scrutiny of potential insider trading. And they're requiring executives looking to sell company stock to enter information about their trading plans into the agency's public corporate filings database instead of mailing it to the agency. This is a start. At least there's some changes being made there. And this new rule was adopted Friday, June 3rd, today, as the SEC is heightening its scrutiny of potential insider trading. So, there's going to be increased reporting requirements in order to try to reduce insider trading. As of today, according to the Securities and Exchange Commission, Edgar filings, they are effective 30 days after date of publication in the Federal Register. So this is great news. This is a good way to try to cut back on insider trading, which is rampant, across not only the Fed, companies, but also the Fed, private equity companies and the Federal Reserve, as we've known by Jerome Powell's incorrect trade reporting, purposefully incorrect trade reporting. Etsy's down 7.15%, hanging out at $81. Damn, that stock's overvalued. Lucid Group is now down 6.7%. It continues to bleed. Continues to bleed out, little by little. Wow. Today's just gonna be fucking disgusting. It's only 323. There's no volume and the market's melting away. Shopify is now down 11.6%. SQQ, the Ultra Pro Short Triple Q, is increased now to 8.7%. Tesla's now down almost 10 fucking percent. Holy shit. What is happening to Tesla? Well, they did have some pretty bad news today. They're getting walloped. And yes, volume is controlled by dark pool trades. That's definitely got a lot to do with the low volume that we're seeing. A lot of trade suppression, trades being held back in many cases, I should say. Yeah, AMC's trading volume of 32.2 million leads me to believe that we're going to see this action later. We're going to see this either after hours or pre-market or next week. There's no way that 32 million trading volume on AMC is accounting for any sort of buying pressure here. As a matter of fact, with T+2 data, like the realistic chance that we might see some price movements on Tuesday would probably make a lot more sense, because a lot of the T2 data reporting. So smoke them if you got them. The market's falling apart. And I'm tired of pretending like it's not.
Yeah, just let the bubble pop.
Yep.
I want to lick my ice cream now.
According to Charles Payne, says Prometheus over here, he says Charles Payne said there are 7.2 million new retail investor accounts and growing. A lot more than Wall Street has previously claimed. Bank of America is trying to crawl out of a hole. Come on, Bank of America, you can do it. Dow Jones Industrial is down 1.08. NASDAQ Composites down 2.59%. Russell 1000 is down 1.6, and the S&P 1.65. Silverback in the YouTube asked, "What can you explain what causes a candle to drop drastically on the 1 minute? When it went from 14.19 to 12.96, yeah, that would be a large amount of shorts, puts being sold on lit exchanges, on lit markets by the market maker. Yes. Retail does not have the power to move a stock price like that in a 1 minute candle. That's market maker movements. Yeah, Doge, they're absolutely monitoring. If anybody thinks that hedge funds and market makers are not watching us right now and haven't been watching us all day, I think you're naive, and I think, frankly, you're kind of ignorant. I don't mean that to be insulting. I didn't say you're stupid. I said ignorant to that fact. They are absolutely watching to see how all of the community reacts, and in my opinion, probably withholding a lot of price action right now, or waiting until the last fucking moment. They're not going to start covering before margin defaults happen. And they're also going to use their liquidity programs like the SFT and the RRP as much as possible to prevent margin calls. Quite simple. So I remain very bullish on the fact that the stock market and the meme stocks are going to keep going down until they diverge due to margin calls. And then AMC and GameStop, COS, Express, and all these other heavily shorted meme stocks that we've talked about many times will go where they're supposed to go. And we'll see their true prices. Because I remember this during the Occupy Wall Street when people were losing their savings and getting fucked by Wall Street after 08. I mean, just getting mocked for it. And I remember 2008 and how much people struggled and toiled afterwards. I haven't forgotten. I won't forget. COS is about to start getting heavily shorted right now. Yeah, it was just up 9%. Now it's up about 6%. Or to come down with the ETF as the ETFs get rebalanced. Now, the market continues to bleed. Shopify is down 12.2%. Spotify is down 4%. The SPY is down 1.64%. And there's still 30 minutes left in the day. Tesla's down 9.2%. And the VIX is only up 2%. Are you fucking joking me? God, I'm so glad I got calls and puts on the VIX and the SPY. This is going to be epic.
I wish Janet Yellen would stop touching me in the VIX.
Yeah, Janet Yellen's fucked up like that, I guess. I don't know. I have no idea.
Not my type. Leave my VIX alone.
She does keep touching your VIX, man. She's selling those naked shorts.
Dirty old broad.
Can't get to the VIX if the shorts are on.
The naked shorts.
That is actually true.
Don't forget, people, GameStop shares on January 28th, 9:34 a.m. sold for $5,124.50 a share. Don't forget, January 28th, 9:34 a.m. GameStop shares sold for $5,124.50 a share. I haven't forgot why I'm here. I'm not going anywhere.
Yeah, I'm kind of comfortable where I'm at the moment.
Mm-hmm. BlackRock has 44 million shares, over 44 million shares of AMC. I'm sorry, I meant to say 32 million shares of AMC. This is a little outdated. Vanguard has over 44 million shares of AMC and has recently acquired a lot more. State Street, over 8 million shares, and then so on. They also hold vast short positions. I'm sorry, this is Evergrande, but the numbers are very similar, so I got that mixed up. BlackRock does own about 40 million shares of AMC, 42 million shares to be a little bit closer. And they also own a ton of these Chinese junk bonds like Evergrande, millions and millions of shares worth. So now that Fitch has removed Evergrande from the ratings agencies, if Dr. Marco Metzler, former Fitch ratings agencies, petition against Evergrande goes through the courts, they will officially be pushed into bankruptcy by the Cayman Islands Bankruptcy Court, in which Evergrande has originated. That will lead to BlackRock needing to get tens of millions of shares back from Citadel and other companies like State Street, etc., that have been shorting AMC and GameStop. This is one of the things that Citadel does in order to spoof the system. They've been fined in the past many times, fractions of a penny for what actually happens. And they said, I quote, "The firm sent multiple periodic bursts of order messages at 10,000 orders per second to the exchanges. This excessive messaging activity, which involved hundreds of thousands of orders for more than 19 million shares, occurred 2 to 3 times per day." Citadel Securities, the owner of Apogee, was fined only $800,000 for this misconduct. How much profit do you think they made on 19 million shares, trading hundreds of thousands of orders at a time?
Couple of billion.
Probably. The New York Stock Exchange on January 2014 charged Citadel Securities with engaging in wash sale 502,243 times using its computer algorithms. A wash sale is where the buyer and the seller are the same entity, and no change in beneficial ownership occurs. That means I sold something to myself to bring the stock price down. Wash sales are illegal because they can manipulate stock prices up or down. They played a major role in the rigged stock market that crashed in 1929. Citadel paid a $115,000 fine for committing those 502,000 violations and walked away. Ain't that grand? So if you wonder why I'm not worried when I see that AMC stock price is still, whatever, $12.47, it's because I know the stock price ain't real. And at some point, when they have to delta hedge due to margin calls, then we'll start to see the real stock price come out. In the meantime, Apple's down 3.8%, Amazon 2.36%, BlackBerry's down 5.5% almost, BBBY 4.5%, BBIG 4.5%, Beyond 8.3%. It's just a hot mess. DoorDash is down 7%, Etsy's down 7%, Google's down 2.8%, GameStop's down 1.5%. Harley 3.5%. You know, it's just a fucking mess. Peloton is down 5.5%. Redbox 5%. Shopify now almost 12% down. Stock market crash, here we come. And the VIX is only at $25.15. It's actually gone down. What a fucking joke. Holy shit. That's fucking comical. Highcroft is down 7.
Yeah, right.
It's hilarious.
Bullshit.
Exactly. OcuGen is down 6%. I definitely own some of that. I showed you guys earlier. Let's see. Oh, I don't know if I showed you the right accounts. Who cares? Fuck matters. And the SPY is hanging out at 411, hanging on for dear fucking life. Let's scoot this bitch over. Hey, don't forget, GameStop sold for a $5,124.50 a share at 9:34 in the morning on January 28th, the date of the executive order 13959. Don't forget. Just because it has happened today doesn't mean it can't happen another day soon. Never know. Man. What if they're waiting till after hours so that people that have June 3rd calls won't be able to sell them for huge profits? I was thinking about that all night last night. Or Monday, you know, till after options expiry. I'm not sure. Nah, AMC, it's not that we should be ripping any minute now. It's just that you never know what's going to happen. And yeah, Sway, I will be live on Monday, it seems like. Because I know what's happening, man. And it doesn't matter if the price hasn't moved yet. I'm going to be here. I'm going to be here on Monday. I'm going to be here during after hours, too. We'll be here to fucking 8 p.m. till fucking after hours. I don't give a shit. Sub has the boss. I'll never tell you what's a good time.
Maybe then I do have a chance to get it done.
Appreciate you, Bliss. Appreciate you, everybody. If you guys got questions, you can throw them at me. I'm just chilling. Same for everybody in the chat. I'm just kind of reading the chat now. Hanging out. I think I've given you guys, like, an entire fucking day's worth of due diligence at this point.
Hey, Marcel, I was just thinking right now, is there a way that when they made the change to Executive Order 13959, that they could put some language in there that would allow them to, say, maintain and not unwind their position? Do you think perhaps that way they're still using as collateral?
Yo, they don't have to sell it.
So theoretically, they could maintain it in their portfolio then, huh?
Yes, but the ETF and the index in which it remains would not be valid collateral.
I gotcha.
That was in the FAQ that the United States Treasury gave to us on June 1st of just 2 days ago, June 1st. It was in that FAQ.
I gotcha.
Mm-hmm. No worries. I know it's a long way back and you don't have to, but if you want to see it, you just go all the way to the beginning of the video and watch like the first 10, 15 minutes and you'll see that I go over that whole thing. Just if you feel like it, you know, if you want to see it for yourself.
Oh, hell yeah, man. I'm trying to pick up as much as I can here, so most definitely.
Good, dude. I understand that. That's the whole point. Scoot this over. I want to check my messages here.
Another thought I had is, could there be a T+2 settlement time on top of this as well that extends them out?
100%. That's why I keep saying that we might be seeing this shit Monday or Tuesday. See, people don't understand that just because I was excited for today's executive order to be implemented doesn't mean I expected the stock to go to $1 million today. That's not the fucking point of this. Of course, I want to see what happens. Whether it's up or down, I'm here to see what the fuck happens today and what happens on Monday and on Tuesday and on Wednesday, because I have a feeling things are going to get crazy. And you've been watching me, what, since not you, but I mean, I just started this channel in July of last year. Aside from January when the stock market was crashing all month, have you ever seen me bother watching the fucking stock like this?
No.
Yeah, Trevor, there's a way to tell if they kicked the executive order down the road. I'll get an email from the goddamn United States Treasury telling me that they kicked the executive order down the road. And guess what? I haven't gotten it.
The market looks terrible.
It's a fucking mess.
Yeah, terrible.
Lower lows, lower highs. Just keep on going.
I'm sure they've seen all the noise we've been making about all this, so I'm sure they're trying to pull every last little trick they can to try and deceive us.
Of course, my man. And, you know, T+2 settlement for ISDA contracts and swaps. We won't see any of that if they're doing it now until Tuesday. But again, you're going to see a lot of ignorant people on Twitter and YouTube and things that don't understand that. And that's okay, because I could give a fuck all what anybody thinks. But I just don't want you to think that these people that don't understand those facts about T+2, T+35, and other settlement dates leading you to believe certain things. You know, there may nothing be happening. You know, there may not be any margin calls going out. But with the current liquidity crunch, I would find that really hard to believe. Lee Smith, why do you say that about October 2022? What's special about October 2022? Because of CAT system? I mean, I don't think the implementation of the CAT system is going to cause the mother of all short squeezes, no matter what anybody else thinks. I just truly believe that it will be caused by macroeconomic and global shocks that cause massive amounts of margin calls, whether it be Evergrande, whether it be this executive order, whether it be your fucking mom. No offense intended. Anything that causes the macro shock that is required to force margin calls is what's going to cause AMC and GameStop to go absolutely parabolic. Whether that be China invading Taiwan, Russia using a nuclear bomb, America sending troops to Ukraine, I don't fucking know. There's a lot of things that could happen and a lot of things that we haven't even thought about that could potentially happen that could cause this entire thing to kick off and just go absolutely nuts in a fraction of a second. And at the time I've been talking, the SPY just lost 1/4 percentage point. It's down to negative 1.73% to $410.20 right now.
We're waiting, Janet. We're waiting.
Well, there goes the SPY. Got about 15 minutes left.
Me and Cass got ice creams and 9-layer burritos.
See them pump it up right here.
Too.
Pump it hard. Mike Robertson, do you anticipate the GME split to reveal inaccurate share counts? Well, if there's new shares issued, it will reveal the number of synthetics. Oh, it will at least reveal. It'll reveal a lot of things. Let's put it that way, man. GameStop could come out with a dividend or their stock issuance at any moment, and just it would destroy short sellers for GameStop and then everything else that they're also invested in, like BBIG, AMC, cause many meme stocks like I showed you on the list earlier. And the same exact thing could happen if like BBIG comes out with their dividend. BBIG could cause their dividend to, you know, squeeze out shorts and absolutely make GameStop and AMC and all the other stocks go to moon. It's like there's not just one way. There's 100 different paths, if not, probably millions of different paths. And we don't know which one of these stocks might go first. We don't know which one of these stocks is going to go first, but I truly believe it's going to be one of those big 3 or 4 that we keep mentioning.
All those paths lead to one destination.
Yes, sir. Yes, sir. These things didn't happen by accident. You understand? The thousands of percent movements do not happen by accident. They happen because over-leveraged hedge funds, market makers, and banks get fucked when they get margin called. Plain and simple. And it happened after the implementation of the executive order, not on the date of, after. So we got to be patient as far as I'm concerned. Here comes, let's see, a big injection of money by the plunge protection team here. Or volume traders, potentially, market makers. We'll find out. Market moves after the 1 year extension, which is already over, per my understanding. There's no more divesting from a U.S. entity. L. Krieg, nobody can give you that kind of advice. I'm sorry, my friend. I'm not here to tell you what to buy, what to sell, what to do. I'm simply here to provide information that I believe to be accurate. And I'm not a financial advisor of any kind. I'm going to watch this in the after hours. Shopify is down 12.5% now. This liquidity is coming out of this market for a reason. They might be slowly draining the market in order to have liquidity with which to cover later. At other time, and theoretically, it could still be in after hours. There's a very good possibility of that, I think. Don't be upset if it doesn't happen. I'm just speaking as if I was speaking to a friend, because I'm in my Discord with friends here. Ortex data. Do we have some update? Oh, on the MMAT path. Let's switch it up. Somebody heard about baby crying in the background, said even the baby is sad. Baby's good, man. The little fucker's probably crying for a bottle. Don't worry, Mama's over there taking good care of her. Bless you, Penny.
No, she wants her ice cream too.
We all want our ice cream.
And her burrito.
Mm-hmm.
China will be closed on Monday for Dragon Boat Day. China will be closed on Monday for Dragon Boat Day. That's interesting. Yeah, we did get a can kick, like Pantheon was telling us. Looks like he shared the information with Tony Denaro to tweet it, which is pretty cool. Or vice versa. Either way, props to both of them. TD Ameritrade Network. I love it. Oh, you guys got to see this. This is going to be fun.
AMC and GameStop taking part in today's rally alongside other high beta names. Let's bring in David Traynor, CEO at New Constructs, who's going to warn you meme traders about getting too involved here. David, welcome back to the show. So let's start with AMC. I mean, is that the more reasonable of the two here? At least do they actually have a service that people are paying to go see movies? Top Gun crushed it.
Yeah, you know, I tweeted over the weekend that if Top Gun can't save AMC, nothing can. I thought that was an awesome movie. Wow. But look, you know, AMC has a lot of debt. This is one of the stocks on our short list of ones that could go to zero. Look, yeah. I mean, look, the company, the management team has been cashing in on the frenzy.
I'm so fucking scared. Excuse me while I go buy more. Where's my IBKR account?
You know, and it's
that one's
becoming
fucking
really
broke.
kind
I
of a
gotta
Ponzi
get my
scheme. Wasting capital
Schwab
on a gold mine.
Fidelities.
I mean,
My
These are
Weeble
nuts
still got a few
times,
bucks in it, I
Oliver.
know.
I mean, I don't. There sort of are no words for this. It's unfortunate to see people prey on the gullibility of investors so viciously and
Wow, are you guys gullible?
voraciously. And so, yeah, you look at.
Are you guys gullible? You hear that, E-Trade? The SEC? Everybody wants you to sell. Since when have they told you to sell your positions before?
Yeah, well, fuck him.
Fuck this piece of
interest
shit.
coverage ratio for these guys, and we're talking about credit ratings now, not just stock ratings. Like, it's negative 1.65, right? Like, they don't have the cash flow to cover their interest.
So that's on a quarterly? How does that math work? Explain us that.
Trailing 12 months. Trailing 12 months as of the.
Trailing 12 months. He's reaching all the way back into the middle of last year and forgetting about all of the positive price action and the fact that 2022 is already far exceeding 2021 revenues.
The first quarter 10Q.
Okay.
Right. And so, look, it just doesn't have the cash flow to maintain.
Never talk about the short squeeze. It's like they're allergic to the truth.
Goddamn right.
The debt, which
so
means
the debt is 60% greater than their cash flow over the last 12 months, 1.6, is that right?
The interest payment.
Okay.
The
interest payment.
Right?
Wow. Yeah.
Yeah. And so that's a bad thing. You can get away with that in a world where interest rates are super low and you're continually able to tap the capital markets or the debt market.
You guys notice he failed to mention that AMC has over $2 billion in cash on hand? Did he fail to mention that AMC is launching and spending a lot of that money on brand new theater acquisitions? Many new theater acquisitions. Did he forget to mention that AMC is spending a lot of that money on getting some of their very own popcorn farms that they already own to make popcorn specifically for retail store shelves, reaching into a multi-billion-dollar per year retail popcorn industry?
Markets, or equity markets for that matter. That's changing, just like your last guest was pointing out, right? Things in the margin got
gold mine.
Oh yeah. Did he forget to mention that AMC bought a motherfucking gold mine? Literally? No wonder their cash outflows exceed their inflows, because they're investing in their future, like any good company would.
A lot tighter. The well is not so deep to just continue to go get capital. That means the end of the line is coming really fast for these guys. Yeah, so I think this is one of these situations where the stock could go to zero because the amount of debt that's got to get paid before equity holders see a dime is huge.
Well, are they going to close them up or sell them to someone? How do I go see movies?
Bankruptcy, man. I mean, I
Man.
don't know. There's not that many. Look,
no.
even when I went to go see Top Gun, I thought it was going to be packed. And we got tickets, my whole family, just a couple hours before the show. Anyway, it's the bottom line is it's really hard to.
Oh, he didn't mention how full it was. He just said they got hours before they show they got tickets. Did anybody else in the Discord or YouTube go see Top Gun? Let me hear you right now. Did any of you motherfuckers see Top Gun? Everyone's over there fucking sleeping. We're at work, can't talk on their fucking phone.
Absolutely.
How was the theater when you went to go see it?
Well, I'm in Canada, so I can't comment on an AMC theater, but the theater was fucking packed, I'll tell you that.
No shit. So even in Canada, an American movie, Top Gun, was packed.
Oh,
Ronnie,
they're full here in Sweden as well, so.
Top Gun 2 was packed. Martin, Sweden, Top Gun 2 was packed.
I mean, it was Tom Cruise's biggest movie of his career. I mean, come on.
Top Gun 2 cost $170 to make. And they made worldwide for Top Gun 2, as of 3 days ago, was $248 million. It is Jerry Bruckheimer's second best weekend ever. Analysts expected the film to make closer to $80 million over the weekend, but it made $248 million over the weekend. Interesting.
Those few people were paying a lot for ticket prices.
Oh, international box office. I'm sorry. It boosted its global total past 300 Oh, that's the other one, but never mind. Still, that's crazy amounts of money. Oh, I got to show you visual capitalist as well. So as of June 2nd, the military thrift savings plan, according to the FRTIB, is going to be invested possibly into 5,000 unvetted mutual funds. Good luck to all if they decide to put their money in there. And the meeting minutes that we showed you are absolutely disgusting. They had no problem admitting publicly that things were just on a collision course. All right, well, let's see. Yeah, literally, Ms. Weaver from the FRTIB communicated its position that amendments discriminate against TSP participants because neither prohibition would apply to 401k plans or IRAs. She also noted that the TSP current I fund index includes Hong Kong, which is part of China, and that there's no widely recognized index for developed markets that excludes Hong Kong. As such, to both divest from Hong Kong equities and create a new specially designed index without Chinese investments would increase the cost to all TSP participants. It would also preclude the implementation of the TSP mutual fund window, as monitoring approximately 5,000 mutual funds would prove too costly. I said this earlier, I'll say it again. I'm sorry, my military friends and my federal employees, but you're just not worth BlackRock and State Street vetting their TSP for these 5,000 mutual funds that may contain the 90 plus sanctioned companies by the Biden administration, the United States Treasury. This is directly from the minutes of the meeting of the board members from May 26, 2021, Thrift Savings Plan. And you've already seen, I showed you previously in this video, why that's going to be an absolute fucking mess. Market's about to fucking close. Let's take a look. The SPY is down 1.62%. The NASDAQ composite is down 2.6. AMC is hanging out at 1245. I'm going to watch this whole thing after hours all day. Cost is down 8%, or up 8% for costs. Surprise, surprise, a meme stock's the only thing that's green. Biora Therapeutics, another meme stock, formerly known as Progenity, PROG. Got it. Got a company name change. Splash Beverage Group, another heavily shorted stock, up 3%. As Triple Q, you know what that is. TNX, 10-year note interest rates up 1.5. The XRT is down 1.7%. Affirm 5% almost. Hycroft 8.39%. Inspirato up 3. Mullen up 4%. Another meme stock, of course. Nvidia down 4.5. Target flat at 0.1 increase. Metamaterials down 4.7 and Bank of America down 1.42. Fuck you, Bank of America. I hope you burn in hell. Market is officially closed. Ding, ding. I'll be keeping a good eye out on these.
AMC is turning green.
Shut the fuck up, you liar.
Well, it's going up at least.
I don't even believe
it's still 6.3.
Right on the money.
Let's take a look here for the after hours. We'll take a peek. It's still the same. It ain't going nowhere for a minute, man. That's for sure. The spread right here. Yeah, my New York time. Prefer to keep it that way.
I gotta say that day flew by.
It's been a fun one, man. It's been a blast so far today. It's been an absolute fucking blast. I don't mind these long streams. I never wanted to do them before, but now that we're actually kind of hanging out, like in last January or earlier in January when the market was just tanking, and right now I'm like, shit, this is it's kind of fun. I might hang out with you guys, do this a little more often. I play catch up on my emails, but fuck it, whatever. I don't care.
Yeah, I was just gonna say, don't do it often because you got a job to do as well.
Nah, fuck that. Companies run themselves. It's nice. Hanging tight. Tired of hearing about Kardashian, fucking Depp, and Amber Heard. Get that shit off my fucking screen already. I don't want to see any of that. Oil, crude is now at $120 a barrel. Ain't that grand? Casino is closed. I love Mac 10. Suburban Drone on Twitter always putting these exceptional charts up. Takes time to actually point everything out for you. Says, I'm trying to think from the bullish perspective, what could be a better buying opportunity than global central banks max tightening in a recessionary hyper asset bubble? I could only think of impending meteor strike. Imagine how oversold the market would get. What do we have? We saw back in the 70s an oil shock in the 70s, inflation shock and rate shock in the late 70s and early 80s, the oil shock of the 90s, the Y2K tech bubble, the 08 financial and housing bubble. And as you can see, the federal rate, the effective federal funds rate, is now really, really low. There's no more capability to reduce this. We've barely started to increase the federal funds rate. We're just around 750 basis points. We haven't even gotten to 1% yet. And the entire bubble is practically falling apart. What do you
Oh my God, all in one.
Yeah. It's an all-in-one. It's the everything bubble for a reason. That deserves a share, for sure. That's a good one. The fragmentation monster. Look at the Italy 10-year risk spread over Germany creeping back up. Creeping back up pretty strongly, actually. Just like it did during the 2018 issues we were seeing. It looks to be around the corner again because quantitative easing is nearing its end. Italy's 10-year risk spread over Germany has jumped 213 basis points. The highest since 2010. I'm sure the ECB is working on a monster killer mechanism, says Holger Shapitz over on Twitter. This guy's pretty bright individual. Kazakhstan has renamed its export oil to Kazakhstan Export Blend Crude Oil to avoid Russian sanctions risks. Wow. Talk about desperation all around, huh? It's everywhere. Jose Navarro, thank you, brother. I appreciate you and your support. And of the think tank as well. Tammy F, appreciate you as well. You are awesome. It's nice to be here with you guys and be able to share information, discuss things, and hear your questions and get your viewpoints on things as well. That's what I think makes it a lot more fun. AMC just spiked to $13.89. I don't know. Let's see about that. Might have to go into my app. Yes, I will have to. Which is not a problem.
I put it on the chat.
Oh, you're the man, brother. Where's that, Ape Chat? All right, here we go, people. There's Redbox jump. That's Redbox. I think this might be ETF reallocation. Let me take a look at AMC. Here's AMC. Jumped up to 1339. Yep. Yeah, that's fucking awesome, Javi. That was a good find, man. That's a really sketchy fucking candle. Live Fire tells me there was $9 million purchase at 2 milliseconds after this market closed. There was a $9 million buy. Somebody bought 733,504 shares of AMC. What do you suspect happened immediately after? Massive amount of naked shorts or covered puts, we should say, which is unlikely. Probably just naked shorts in order to bring that price right back down. A $9 million buy on AMC brought the price from $12.45 to $13.39, and it was brought right back down. That is fucking cool. We had a volume today of 38.88 million. That's absolutely nothing. Nothing. There was another buy-in at 410 just now, thanks to Live Fire. 366,000 more shares were just purchased a moment ago. 366,000 more shares of AMC were just purchased seconds ago. Thank you, AM7, and thank you, Live Fire, for going out of your way to grab the screenshot for us, brother. You're the man. You're the man. Stockman, low volume is not necessarily good, but the fact that there's low volume, it shows you that there's no actual, nothing actually visibly happening to an extent yet. Because when delta hedging begins, you'll start to see the price tick upwards. The thing that people don't realize is that things like returning of FTDs, failure to delivers, or even reporting of the failure to delivers is T plus 35 data, which takes 35 days to see. In addition, price action on many swaps and contracts and ISDA contracts taken out on AMC will not be seen until Monday or Tuesday because it's T plus 2 data. That means that if anything was purchased yesterday for these swaps, for example, or futures contracts on AMC, that would not be seen until Monday. And if anybody got margin called today and used swaps to cover their positions, we won't see that until Tuesday. Therefore, people need to temper their expectations and be realistic. I would have loved to see a massive green day today, but we didn't. I'll take what I can get. And I'm more than happy with that because I still remain positive. Then in the very short-term future, we're going to be looking at some extremely high volume. And you know what that means. It's fucking bullish. Redbox too, though, they had a big volume there. They might be reallocated. Well, actually, they had no volume on Redbox in the after hours there. And the AMC one was pretty small too, but it was just those buys right there with no volume. Very interesting. That might be ETF rebalancing even still at the moment. And at this moment, they could be doing this because it's after hours, so people cannot do anything about it. You cannot sell your call contracts for the most part now, as they're expired as of close of day. Great. That's great news. Thanks for sharing, man. Yes, Steven Zemke, you're seeing multiple stocks do that because of the ETF reallocations. The ETF rebalancing is happening this month. That's another issue that we're going to be seeing, that we're going to be dealing with. What was that, brother? I didn't mean to cut you off. I just wanted to answer somebody's question. Or statement, whatever. Whatever you want to call it. XOM is closed at an 8-year high. That's great. Uh, 4:12 a.m. we hit 1339 in pre-market, and we just saw 1339 again after hours. You know, that reminds me of something. That's deja vu for me. Where's that picture that I have in the Discord? I'm going to find it. Here it is. There it is. May 20th, 2021, several days before the May 27th run, we did see a day that was very similar to today, where we saw 12:59 open and 12:55 close, which was, I thought, was really interesting a few days prior. And we also were seeing at that time, the reason I brought that date up is because when that happened, 12:59 open and 12:55 close, we only had 61,000. Hang on a second here. 58.8 million, 61 million volume. Okay. In the morning, we had a 1339 candle. Now we have a 1339 candle. And the stock market, I mean, the stock ended the day at 12.44, which is right around in line with what we were seeing on this date, in which we had even more volume than we have today. The day we saw positive price action, we were seeing 100 million, 200 million, 379 million, 700 million, 660 million, 500 million, 766 million volume. And then on June 3rd, when the Biden executive order extended it for 365 days, the volume began to decrease, and it went from 766 to 598 million, and then 337 million the day after. Those two were the days that, this was the day of the implementation of the order, and this was the day afterwards, which we only saw a lot of downward pressure from then. Fun times. Checking in with Lugo Pico Snake. How's this build coming along, dude?
I put a pic in Ape Chat recently.
I'm checking it out right now, man. That thing's pretty cool. That's the inside of the camper, the Volkswagen camper van?
Yeah, it's got a sink, a fridge, a freaking couch, a little plant.
That's
The interior is
awesome.
pretty sweet. I
Yeah,
love the
it
check.
is
I've never seen one in person, so the checkerboard floor is pretty cool too.
You even had to put the engine together. That's cool, man.
Look what I did yesterday when I was putting on
I
my
like
pants.
that.
I took it to my knee.
Job well done, my
Crazy,
friend.
eh? Look at my own fucking knee.
Live Fire showing us another $4.6 million buy. 366,000 shares purchased at 4:10 p.m. Eastern, 12.45 a share.
Just put hot water in it. You sure?
Need somebody to mute up, please. Thank you. That's a big purchase. 366,000 shares. Nice. Silverback with the new wine chiller. I like that, dude.
Yeah, it's starting to speed up now because there's less pieces. It's easier to find what I'm looking for.
Yeah, no kidding. MSM financial shows are fucking tools for Wall Street to make retail bag holders. I used to listen to Jim Cramer many years ago when I was learning how to invest, over 10 years ago. And yeah, I would always lose fucking money on anything I would listen to him on. Here's a little fucking payback right here for Jim Cramer coming in the form of meme stocks. Reverse creamer indicator. The Fed has hiked its benchmark rate a quarter point on Wednesday. What the fuck is this? Never mind, it's the wrong article. What were you saying, brother? Oh, that's the 2017 bullshit. Go ahead, brother.
No, I was gonna say, hey boss, you seen the movie The Bronx Tale? Jimmy Cramer's Eddie Mush, the guy that bets on the game and they end up losing. They bet on the racetrack, they end up losing. That's Jim Cramer. You're guaranteed to lose if Jim Cramer says anything go up. It's always the opposite.
Damn.
And that's how most of these media guys are. Everything they say is the complete opposite. I just want to give heed to everybody out there.
Thanks, Busman. I appreciate you for posting this up here also. DTCC's NSC. I'm going to share my screen with you guys in the Discord if you want. I'm doing it now. The NSCC has received SEC approval to provide central clearing of SFTs. Correct. That's as of yesterday. The Depository Trust has approved the security financing transaction clearing service proposal of the NSCC, the equity clearing subsidiary of the DTC, to operate a central clearing and settlement infrastructure for overnight borrows and loans of equity securities. This will support the central clearing of clients' SFTs intermediated by sponsoring members or agent clearing members, as well as the central clearing. It will allow lenders and borrowers to submit pre-established bilaterally settled SFTs for clearing. It's basically a liquidity pool. They're designed to maximize capital efficiency and mitigate systemic risk by providing participants with additional membership and cleared transaction opportunities. Through novation to NSCC, members may benefit from lower capital charges on their SFTs than they would otherwise be required if they engage in the same activity outside of a central counterparty. By helping to lower balance sheet and capital constraints, NSCC members and their clients may experience increased lending and borrowing capacity. Margin. So if they get an increased margin, they're not going to get margin called right away, right? That's all right. I'll remain patient. Agency lending disclosure reporting would no longer be applicable. There you go, people. Now, you know what? Instead of this gigantic long thing, I'll just tell you the short version right here. Agency lending disclosure provides an industry standard for agent lenders and broker-dealers to exchange underlying principal level detail information related to transactions executed under securities lending agreements. So they want to basically try to use this clearing service to continue to leverage FIS for their books and records process and for the submission of DTC orders. And what they're worried about is not, what they're doing is not something that's going to change the world for them. They already processed $2.4 quadrillion worth of securities in 2021. A few billion more is not going to make much of a fucking difference. That's why the RRP continues to be over $2 trillion with 101 counterparties as of today. They provide custody and asset services for countries and territories valued at $87 trillion. So, thanks for sending this to me. But yeah, this is what AMC Biggums and I were looking at. AMC Biggums believes this to be a big negative thing. I don't think it's a great thing, but I'm also not super worried about it. So we'll see how things progress over the coming weeks. Yeah, I'm going to continue to keep an eye on this. But I think I'm going to get off because I'm getting fucking hungry and I need to get some food. So I'm probably going to hop off this stream. Thank you, everybody, for your support. Appreciate you all. I'll be here. If anything pops up, I'll jump onto a live stream real quick with the think tank. And we'll be right back here to report it to you. But otherwise, catch me on Twitter. I'll give you up-to-the-minute info if anything happens in the after hours. Otherwise, I'll see you guys on Monday. Have a great afternoon, everybody. I wish you peace and wealth.
Thank you, boss.
Appreciate you, Panthy. Everybody else, everybody in the think tank for being here. Thank you, guys. Appreciate you guys. Be so goddamn rich.
I think it's time to blow this thing.
Fuck yeah. Let's go.
Okay, 3, 2.
We're gonna be so goddamn rich.
Get the fucking money printer out, J. Powell.
I want my fucking money. I want my fucking money.
Peace out, everybody.
Yo, motherfucker. So fucking rich.
Have a great day, everybody.
Great. Damn it, we're gonna be so fucking rich. I want my fucking money.
You're an original,
hey,
aren't you?
Yellen, cowboy, me the fucking money. Get the goddamn money printer out.
Comedy. Better.
We're gonna be so fucking rich. Get the goddamn money printer out.